एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखें क्रूड ऑयल और नेचुरल गैस को। तो नेचुरल गैस में ये नेक्स्ट मंथ का ही फ्यूचर का चार्ट है। कल रेजिस्टेंस एरिया था, वहाँ से एक सेलिंग आ गई थी ठीक ठाक। क्रूड ऑयल में वो एक एसएलटी हो गया था, फिर ऊपर से वापस सेल ऑफ थोड़ा बहुत आया था, एग्जैक्ट लेवल पे आया ही नहीं है एग्जैक्टली। 12:30 अभी लंदन सेशन ओपन होने वाला है, एंड देन शाम को 5:30 पे न्यूयॉर्क सेशन। उसके बाद 6 पीएम पे यूएस का जीडीपी का डेटा है, बहुत इंपॉर्टेंट डेटा, अनएम्प्लॉयमेंट क्लेम्स और कोर ड्यूरेबल गुड्स और ड्यूरेबल गुड्स के साथ साथ। तो इम्पैक्ट करेगा गोल्ड, सिल्वर, क्रूड ऑयल सभी को, तो इसका थोड़ा ध्यान रखना, इंपॉर्टेंट डेटा है। फिर 7 पीएम पे यूएस मार्केट ओपन, 7:30 पे एग्जिस्टिंग होम सेल्स का डेटा, और 8 बजे नेचुरल गैस की इन्वेंट्री है। तो काफ़ी ज़्यादा डेटा है, इम्पैक्ट डालेंगे प्राइस पे। अभी देखते हैं 12:30 के बाद थोड़ा सा वॉल्यूम जनरेट होता है प्राइस में। निफ्टी बैंक निफ्टी को देखोगे तो वहाँ पर भी आज कुछ खास हुआ नहीं है फ्यूचर में। मार्केट मॉर्निंग पे निफ्टी में एक हल्का सा गैप डाउन था, बट वो फर्स्ट 15 मिनट की कैंडल वॉलेटाइल हुई, उसके बाद थोड़ा बहुत सेल ऑफ जरूर आया। काफ़ी देर के बाद 15 मिनट की कैंडल का ब्रेकआउट हुआ है, तो देखते हैं ब्रेकआउट सस्टेन करता है या फिर इसी रेंज में घूमता रह जाता है। बैंक निफ्टी तो उससे ही बेकार था, हल्का सा गैप डाउन हुआ। वॉलेटाइल फर्स्ट कैंडल, फिर पूरा साइडवेज 15 मिनट की कैंडल के अंदर, तो कंप्लीट साइडवेज ही है आज बैंक निफ्टी। ट्रेड बनता है, देखते हैं। याद रखना ये नेचुरल गैस का चार्ट नेक्स्ट मंथ का फ्यूचर का चार्ट है, करंट मंथ का फ्यूचर का चार्ट नहीं है। कोई क्वेश्चन रहेगा तो कमेंट बॉक्स में ठीक है, कोई भी क्वेश्चन रहेगा, डाउट रहेगा, कमेंट बॉक्स में पूछ लेना। ठीक है, लेवल अभी देखते हैं, बताते हैं। निफ्टी फ्यूचर क्या और नीचे जाएगा, एक बार देख लेते हैं निफ्टी का चार्ट भी। हाई के ऊपर आना तो बहुत मुश्किल है। हाई स्ट्रॉन्ग रेजिस्टेंस नाउ निफ्टी फ्यूचर में। वापस अगर डे हाई के अराउंड आता है आज या कल, तो एक सेलिंग अच्छी बन सकती है वापस से। यहाँ पर एक जो गैप अप हुआ था उसका एक रीटेस्ट पेंडिंग है निफ्टी फ्यूचर में, 15 मिनट टाइम फ्रेम। तो नीचे 25,000 पे एक निफ्टी फ्यूचर में रीटेस्ट पेंडिंग है। सीधा गैप अप करके दिया था ऊपर, या सो इट इज ऑन सपोर्ट कह सकते हो, पहुंचने वाला है एग्जैक्ट ऑन रीटेस्ट। 25,000 इज अ रीटेस्ट जोन इन 15 मिनट।
All right.
क्रूड ऑयल में थोड़ा सा अगर अपसाइड पे आता है, क्योंकि कल ये रेजिस्टेंस पे चला गया था फॉरेक्स में। एमसीएक्स का तो नहीं पता, फॉरेक्स में चला गया था रेजिस्टेंस पे, वहां से सेलिंग आ गई थी। फिर वापस सेलिंग आने के बाद इस वजह से इंडियन मार्केट आज थोड़ा सा क्रूड ऑयल में गैप डाउन ओपन हुआ था। लेट्स सी फिर से आता है ऊपर एक बार। ओवरऑल तो बुलिश ही है क्रूड ऑयल, 2 दिन से कंटिन्यूअसली बाइंग में, कल भी 2.5% अप था, परसों भी। तो बुलिशनेस स्टिल कंटिन्यू, कहीं से भी रिबाउंड नहीं हो रहा, इवन पुल बैक भी प्रॉपर नहीं आ रहा है। यहाँ पर वापस बाइंग किया जाए। मॉर्निंग पे ऑलरेडी वो पहली कैंडल ही सपोर्ट लेके चली गई है, तो अब वो नीचे आएगी, चांसेस कम ही है, देखते हैं फिर भी क्या पता आ जाए। दिस एरिया इज अ सपोर्ट एरिया, मॉर्निंग पे वो कैंडल देखोगे पहली विक बना के सीधा चले गई थी ऊपर ही। सो इट इज स्टिल अ सपोर्ट। थोड़ा नीचे आता है तो ट्राई करेंगे। ऑलरेडी डीप लेवल पे बाइंग करके गया है प्राइस। थोड़ा सा अगर नीचे आता है तो एक बाइंग ये बनेगी, अगर ऊपर ही चला जाए तो बेटर है वैसे तो। ऊपर जाके सेलिंग आए तो फिर नीचे सपोर्ट होल्ड करना मुश्किल है, rather देन डायरेक्टली नीचे आ जाए। क्योंकि अगर ऊपर जाके नीचे आता है तो फिर ये नीचे ब्रेक हो जाएगा इजीली, चांसेस आर वेरी हाई। इसके ऊपर एक और रेजिस्टेंस है क्रूड ऑयल में, बट वो टेस्ट हो गया है 2 बार शायद। आई डोंट नो अब होल्ड करेगा नहीं करेगा। बट स्ट्रांग है वो भी, काफी स्ट्रांग है। 12:30 होने वाला है 15 मिनट इस कैंडल के बाद। वैसे तो कम ही है ओवरऑल 3 दिन से। बाकी नेचुरल गैस में भी देखते हैं क्या होता है, थोड़ा सा कल तो सेलिंग अच्छी आ गई थी हाई लेवल से। इसका फॉरेक्स का चार्ट नहीं है क्या? ये तो कल सेलिंग दे दिया ऑलरेडी मॉर्निंग पे एक बार। फॉरेक्स में कुछ हुआ है क्या? ये अभी भी पेंडिंग है। अच्छा रेजिस्टेंस है। करते रहो गाइस। ठीक है, यहाँ पर भी एक रेजिस्टेंस था, मॉर्निंग पे थोड़ा बहुत सेलिंग आ गई थी ये नेचुरल गैस में। पर ये रेजिस्टेंस को लगा नहीं रहा हूँ नेचुरल गैस से, हो सकता है आ जाए सेलिंग, बट ऑलरेडी टेस्ट कर दिया मॉर्निंग पे, अर्ली मॉर्निंग। प्रॉब्ली अर्ली मॉर्निंग किया, इसका मतलब फॉरेक्स में कल कर चुका है। सपोर्ट भी नहीं बना इसमें तो, नियर बाय नो पर्सनल वाला टेस्ट हो ही गया ऑलरेडी। वरना यहीं पर एक रईस ने शायद ये ब्रेक करेगा नहीं, मुश्किल लग रहा है। नेचुरल गैस में एक सेलिंग का ट्रेड यहाँ से प्लान करते हैं। रेजिस्टेंस लग रहा है होल्ड कर जाएगा। मॉर्निंग पे वैसे टेस्ट तो कर गया था बट फिर भी लग रहा है होल्ड कर जाएगा। एक सेकंड। इसमें अब वैसे कुछ है तो नहीं, वो एक रेजिस्टेंस रुका हुआ है अभी भी। स्टिल होल्डिंग कह सकते हो। मिडिल ऑफ द लेवल का एक ट्रेड है ये। इसको हम पॉइंट ऑफ इंटरेस्ट से ही कंसिडर करेंगे, दिस इज अ पॉइंट ऑफ इंटरेस्ट। ठीक है, बोथ पॉइंट्स आर पॉइंट ऑफ इंटरेस्ट ओनली। तो ज़्यादा क्वांटिटी मत रखना, छोटा ही एसएल है। 1.5 का इनफ रहेगा। 12:30 की कैंडल का ध्यान रखना, थोड़ा सा ओपन इक्वल टू लो ना बने बस। इन नेचुरल गैस। फिर इसमें एसएल बड़ा हो जाएगा क्यों? ठीक है, यहाँ पर ये रिस्क रिवॉर्ड कुछ खास नहीं लग रहा है मुझे इसमें। ये नेचुरल गैस के ट्रेड में इसमें एसएल थोड़ा सा बड़ा ही है। 284 तक का रखना पड़ेगा एटलीस्ट। 1:2 भी नहीं दिख रहा था। 1:4, 1:3, 1:2, 1:3। ठीक है, एसएल या तो छोटा करते हैं, इसमें और कुछ कर नहीं सकते क्योंकि यहाँ से लेंगे एसएल बहुत बड़ा है ये। 2.5 पॉइंट का एसएल है, रिस्क रिवॉर्ड 1:2 बनेगा सिर्फ, तो एसएल को छोटा कर देते हैं और क्या कर सकते हैं इसमें, नथिंग एल्स। 1.5। ठीक है, लगभग इतना एसएल तो रिस्क रिवॉर्ड ठीक है, 1:4 बन जाएगा, तो ये एक ट्रेड कह सकते हैं। ये है पूरा ही रेजिस्टेंस जो नहीं, बट उसमें एसएल बड़ा है तो इतना लेना भी सही नहीं है इसको। टेस्ट कर दिया सर इसने, नहीं किया क्या, कर दिया ना। 12:30 की कैंडल ओपन होने वाली है, 1 मिनट रह गया, 1 मिनट भी नहीं है, 30 सेकेंड्स है। फॉरेक्स में देखो नीचे आ चुका है ऑलरेडी। अच्छा पूरा में डाल दिया ना, ठीक है। 12:30 कैंडल ओपन, 12:30 की कैंडल ओपन हो गई है। को भी डॉक्यूमेंट में लगा देते ना, बढ़िया रहेगा। टेस्ट तो कर ही दिया इसने अभी दो बार। पूरा रजिस्टेंस जोन ही है ये, एज पर द पॉइंट ऑफ इंटरेस्ट। बाइंग ट्रेड इन क्रूड ऑयल इट इज एक्टिव और शुड बी वेट फॉर, नहीं अभी आया नहीं है, वो मॉर्निंग पे आया था, अभी आया नहीं है। मॉर्निंग पे एक्चुअली वो पहली कैंडल में ही निकल गया था, उसके बाद तो अभी नहीं बना है लॉजिकली तो। है वो पूरा ही सपोर्ट जोन, बट एटलीस्ट उसको उस लेवल तक आना चाहिए। तो मॉर्निंग पर ही बनी है, जितनी बाइंग है वहां पर वो बनी हुई दिखाई दे रही है। बेस्ट तो ये है वो ऊपर ही चला जाए पहले, यहाँ से और फिर सेलिंग आए तो ये ब्रेक होने के ज़्यादा चांसेस हैं। ऊपर नहीं जाता है, पहले नीचे आता है तो हो सकता है बाइंग पहले आ जाए, क्योंकि मॉर्निंग पे सपोर्ट ले चुका है। फॉरेक्स में ऑलरेडी कल रेजिस्टेंस पे जाके सेलिंग आई थी और फिर नीचे आया था, इसलिए गैप डाउन हुआ है हमारे इंडियन मार्केट में। सो दैट इज़ द रीज़न। एक्चुअली इसका ध्यान रखना, ये पॉइंट ऑफ इंटरेस्ट लगा रखे हैं मैंने सारे यहाँ, सपोर्ट रेजिस्टेंस काफ़ी दूर है इसलिए। तो यहाँ पर थोड़ा क्वांटिटी कम ही ट्राई करना। मेजर सपोर्ट रेजिस्टेंस बहुत दूर है। चाहो तो मैं उसको भी लगाया था, मैंने लगाए थे अभी थोड़ा सा रिमूव किया है। वही लगाया था, वेट कर लो। नेचुरल गैस में अपडेट कर दे रहा हूँ, ओरिजिनल लेवल, एक सेकेंड। So these are the original level I think. अभी थोड़ा सा दूर है लेवल, तो इसलिए मैंने वहाँ पर एक पॉइंट ऑफ इंटरेस्ट लगा रखा है। अगर उसको ट्राई करना चाह रहे हो कम क्वांटिटी से ट्राई कर सकते हो, बट यहाँ पर थोड़ा सा एसएल बड़ा है तो उसका ध्यान रखना। बीच में और कोई सपोर्ट बन नहीं रहा है इसलिए। दैट इज ओनली पॉइंट ऑफ इंटरेस्ट राइट नाउ प्रेजेंट इन नेचुरल गैस। नेक्स्ट मंथ फ्यूचर का चार्ट है ये। थोड़ा सा ऊपर अगर आ जाता है तो सेलिंग ही आ जाती है इसमें भी। सपोर्ट भी नहीं है। जब तो सपोर्ट क्रिएट करता है, ये नहीं हो रहा है इसमें।
It even told workers not to travel, to refrain from leaving the country if they had any plans to do so, out of fear that maybe this would complicate their ability to either renew or their permits to stay here and work here, or somehow complicate reapplication. The U.S. later followed up to say, no, this only applies to new visas, but it gives you an indication of what they're up against. And U.S. tech companies, including Microsoft, Meta, Amazon, Google, and Apple, all lean heavily on the H-1B program to bring talent in from abroad. And a lot of it, of course, comes from India. And separately, we are having the U.S. with a very intense trade negotiation lately with India over not only its tariffs, but the heavy tariffs that the U.S. is imposing on products from India, and this is over India's purchases of Russian oil. So there's a lot wrapped up in it, and the tech companies are trying to digest how
Mike, look at this chart.
What is going to happen next.
I mean, I don't think many Americans knew that the vast majority of these visas were going to people out of India, right? 72%. And the other thing that we haven't really been talking about much is that a massive amount of these H-1B visas are gotten through what the federal government calls fraud. You could call it cheating. Bloomberg's Eric Fan and Zach Miter wrote a great story on it last summer. And that half of these visas are going to outsourcing firms. So, yeah, maybe they're getting to Amazon, maybe they're getting to Meta, but they're going through IT staffing firms or outsourcing firms. And presidents and the Congress have been trying to deal with this cheating issue and figure out how to deal with this visa issue since the 90s. Is this maybe President Trump's way of dealing with it?
Well, they are certainly casting abuse as part of the justification for making these changes. And we've reported on these abuses last year, Matt, or this year in March, 470,000 applications for 85,000 slots. And that's a lot. But a number of the applications were submitted multiple times, our reporting has found. You cited the great work by our colleagues, Eric and Zach. And it really does point to how this program has been really fraught with issues. And there is the question of, are they going to all the right people? Are they going to people who maybe can help in other sectors? There's a lot of demand for this. Are they getting the people that they need, for instance, for the next generation of investment in the U.S.? And one thing, and this is something that Kathy Wood just alluded to, the idea that maybe they need to bring in workers for different high-tech jobs. And that would include expanding in the semiconductor manufacturing sector, for instance. Where would they stand in line, Matt, when it comes to trying to get access to those visas? Is India the right source for that? Would they rather get more people and maybe a different distribution geographically, say more from Taiwan and other locations? So this is something that the administration is going to be looking at, and they be looking at other means outside the H-1B visa program to keep that talent pipeline full, Matt.
Right. I mean, or if it costs $100,000 more to bring these people in, maybe you train up Americans to do that job is probably the idea, at least, that the Trump administration is pushing right now. Mike Shepard in Washington, we're going to hear a lot more from you about this throughout the day, and surely the story will last longer than that. Switching gears to Big Pharma, though, there's another huge story today. Pfizer is finally getting into the obesity drug game. It's going to pay $5 billion for a startup that makes an obesity pill, catching up a little bit to Eli Lilly and Novo Nordisk. It's massively underperformed those two stocks over the past 5 years. We are joined now by Bloomberg health reporter Madison Mueller. And Madison, you've been covering this amazingly for the last year or so as it's been picking up. Did you expect Pfizer to be getting in like this?
Kind of. So Albert Bourla had signaled a couple of months ago that they were eyeing, and Albert Bourla is the CEO of Pfizer, for those that don't know. Pfizer has been eyeing some of the smaller obesity startups in this space to potentially get in and do some type of deal. He had said that they were looking at potentially up to $15 billion, maybe doing a couple of different deals. So this sort of fits into the strategy that they had laid out a couple of months ago. Metsera is one of the newcomers in this obesity race. They have what's called a long-acting amylin drug, which is thought to potentially be a gentler option than drugs like Wegovy and Zepbound, which are known to have high rates of side effects, nausea, stomach discomfort. And so amylin's thought to maybe be a little bit of a better option for some people. However, However, Metsera is in early stages of development still. So in terms of catching up to Eli Lilly and Novo Nordisk, Pfizer is still probably a couple of years away from actually having a drug on the market.
And maybe we're all taking obesity pills by that point and not even shots. So those shares are higher this morning, but Kenvue, elsewhere in pharma, really getting hit hard. There was that Washington Post report that the Trump administration is planning to link the active ingredient in Tylenol to autism. What exactly would that report look like? What would the impact be on Kenvue?
Yeah, I mean, we're still trying to figure out the details of that. This is something that HHS and the Trump administration has been talking about for a couple months, saying that they are going to know the cause of autism by September. They had since walked back a little bit and maybe extended the timeline, but we are seeing now it's coming. This report's coming in September, and so they've talked about this a lot. We are still not super clear on what the details will be, whether it will also contain information about vaccines, which is something that HHS has been, and the Health Secretary Robert F. Kennedy Jr. has sort of been talking about the link between the debunked link between vaccines and autism for quite some time. So we're not exactly sure if there will be some more information about potential other causes or if it's just going to be focused on Tylenol. But that announcement is expected to come later today around 4 p.m.
All right, we'll see what that brings. Madison, thank you so much. That is Bloomberg's Madison Moeller. Now, elsewhere, Oracle is taking over the algorithm for TikTok's U.S. business. Also, roughly about an hour ago, the firm announced a CEO change. Bloomberg Tech co-host Caroline Hyde has been all over the Oracle saga. Caroline, it's such an insane time for Oracle, be it for TikTok, be it for the AI infrastructure build-out. Why now announce a CEO change?
Well, Safra Katz has been there since, 26 years, working hand in hand with Larry Ellison. She's still going to as a vice chair of the overall business. It's interesting that in our Bloomberg reporting, we once showed that Safra Katz herself had actually been a little bit, questioning, cautious on the AI focus of Oracle more broadly and the infrastructure, the cloud focus. But these two CEOs, co-CEOs coming to the fore are people who know that and have driven that particularly. Like since 2014, we've seen Clay Magoric at the business. He came in from Amazon and he really has been pushing the AI infrastructure side of the equation. He's someone who therefore knows cloud deeply. And this is where the monumental market capitalization increase has gone to Oracle because of their play on serving for cloud, for AI infrastructure, for data center, the compute that is needed for Meta, for Microsoft, for OpenAI and the more. We're also seeing, though, that the co-CEO that's coming on as well, Mike Cecilia, he's someone who knows AI applications deeply. So this is what they're going to be signaling. We are all in.
ट्रेड में क्रूड ऑयल के ट्रेड में थोड़ा क्वांटिटी कम रखना, ठीक है। नीचे एक और सपोर्ट है, कहीं वहां तक ना गिर जाए प्राइस। हाँ, उसको शिफ्ट कर लो। ठीक है, एसएल बड़ा हो जाएगा, इसलिए यहाँ पर कम ही रखना। थोड़ा नीचे वाले लेवल पे भी टिप मार सकता है। उसका एक ही रीजन है, मॉर्निंग पे जो पहली कैंडल बनी थी दैट इज ओपन इक्वल टू हाई, और वहीं पर मार्केट ने फिर भी सपोर्ट ले लिया था। तो ऐसा ना हो कि फिर और नीचे गिर जाए। नीचे भी एक सपोर्ट है, तो इस लेवल पे थोड़ी क्वांटिटी कम ही रखियो। अगर एसएल जाता है तो निकल जाना, नीचे वाले से दोबारा बाई कर लेंगे, वहाँ नॉर्मल क्वांटिटी में ले सकते हैं। नहीं, उसमें होल्ड हो जाएगा, कोई सा नहीं। इतना वेट की जरूरत नहीं है, 22 काफ़ी है। वैसे तो रीटेस्ट करता नहीं है, इतना आएगा। लेवल पे एक साथ लिक्विडिटी गिर जाती है ना, वो बड़ा प्रॉब्लमेटिक है। ऊपर का जाएगा नहीं जब तक ब्रेकआउट नहीं होता फिर। नीचे वाले से लिक्विडिटी एक साथ ही उठा ले फिर और चला जाए। तो मैंने देखा ये मोस्टली क्या कर रहा है, 50% लेवल पे जा रहा है, लिक्विडिटी खत्म, 50% पे ला रहा है, लिक्विडिटी खत्म। तो देखोगे तो वही गोल्डन रेशियो 0.5 to 0.6। वैसे भी ज़्यादा नहीं है ना यहाँ पर, अभी भी नीचे वाले पे ये पेंडिंग पड़ गई है। ये अभी इसमें भी अभी भी पेंडिंग है लिक्विडिटी ना थोड़ी बहुत, इसमें तो हो गई ऑलरेडी शायद। इसमें हो गई ऊपर वाली में लिक्विडिटी टेस्ट, चांसेस कम है अब। थोड़ा ऊपर जाता है तो फिर नेक्स्ट कहाँ तक जा सकते, दोनों की एक साथ लिक्विडिटी ले सकते हैं, दैट द बेस्ट केस सिनेरियो। क्वांटिटी कम ही रखना क्रूड ऑयल के स्ट्रेट में, नीचे एक और सपोर्ट है, हो सकता है वहां तक भी गिर जाए थोड़ा बहुत, और फिर वहां से सपोर्ट लेके जाए, उस केस में अननेसेसरी एसएल चला जाएगा और फिर ऊपर जाएगा वो, तो प्रॉब्लम क्रिएट हो जाएगा। यहाँ से चला जाता है तो बेटर ही है, ऊपर जाने के लिए ब्रेकआउट भी चाहिए, बिकॉज जितना मोमेंटम आ जाए उतना बेटर, ट्रेल करते रहना। इसको रिमूव भी करने तो जरूरत नहीं है, तो टेस्ट हो गया ना, चांसेस ही कम रहेंगे। हाँ चाहो तो वो भी कर सकते हो, नीचे थोड़ा सा एसएल बढ़ा सकते हो, बट वो एसएल बढ़ाओगे तो देख लो एसएल कितना बड़ा होगा, फिर वो छोटा तो नहीं कहूँगा उसको मैं। तो इसलिए थोड़ा सा अपर लेवल पे क्वांटिटी कम रख लो, चला जाता है तो बढ़िया, ये टारगेट बड़ा रख सकते हो, ऊपर का लेवल टेस्ट हो गया है तो शायद ब्रेकआउट कर दे अब, रुके ना, और थोड़ा नीचे आ जाता है तो बढ़िया ही है, क्योंकि ऊपर का लेवल है ना मेरे अकॉर्डिंग अभी टेस्ट कर गया है, क्योंकि लोअर एंड से ही सेलिंग आ गई इसमें, लास्ट जो पुल बैक दिख रहा है, सो इट मींस ऊपर रुकेगा नहीं वापस, अगर ब्रेकआउट के लिए जाता है 5780 790 के अराउंड 15 मिनट टाइम फ्रेम पर। बाय नहीं कर दो। हाँ उसमें वॉल्यूम तो है, अच्छा वॉल्यूम है। यूएस मार्केट ओपन हुआ था, ऐसा लग रहा था ब्रेकआउट करेगा बट किया नहीं। लेट्स सी इस बार हो जाएगा ब्रेकआउट। जो ऐसे तो छोड़ा रखा है, नथिंग एल्स। फेक ब्रेकआउट किया ना, उसके बाद नीचे आया था। और ये भी आपकी कैंडल थी यूएस मार्केट ओपनिंग की। तो नहीं आया अभी तक, देखना इसकी लिक्विडिटी भी पेंडिंग है। लुक एट दिस। का ध्यान रखना, यहाँ पर एक बाइंग का ट्रेड है, सपोर्ट थोड़ा सा बड़ा है, या तो एसएल बड़ा लो या फिर क्वांटिटी हाई लेवल पे कम रखना। नहीं रखना है इतना बड़ा एसएल, थोड़ा सा लोअर एंड से भी बाई कर सकते हो। यहाँ पर ले रहे हो थोड़ा क्वांटिटी कम रखना, ऊपर एक रेजिस्टेंस है वहाँ पर ऑलरेडी सेलिंग आ गई है। अब अगर उसका ब्रेकआउट हो ऊपर जाए तो बेटर है, अपर लेवल से फिर वापस सेलिंग देखने के लिए मिले इन केस। ठीक है, जिन लोगों ने नहीं लिया है, अगर ये जिन लोगों ने लिया है यहाँ पर, चाहो तो अपना एसएल ट्रेल करते जा सकते हो। प्राइस ऊपर जाता आ रहा है, हर कैंडल के नीचे अपना एसएल ट्रेल करते जाओ। कॉस्ट टू कॉस्ट निकलता है तो वेल एंड गुड, सो दैट अगर नीचे आया तो फिर थोड़ा सा एसएल छोटा हो जाएगा। ये एसएल बड़ा है, टारगेट बड़ा है, आई नो दैट, बट एसएल भी बहुत बड़ा है। ठीक है, तो हो सकता है वो एसएल जाएगा तो बड़ी प्रॉब्लम हो जाएगी। तो थोड़ा सा इस चीज़ का ध्यान रखना। चाहो तो हाई लेवल से बाई कर रहे हो तो क्वांटिटी कम विद ट्रेलिंग एसएल, नहीं तो थोड़ा सा नीचे एरिया के आसपास कहीं बाई का प्लान करोगे तो वहां से थोड़ा ज़्यादा बेटर रहेगा मेरे अकॉर्डिंग तो। समझ रहे हो ना, ये है पूरा ही सपोर्ट जोन। चाहो तो इसको मैं एक ही कर देते हैं, बट आप कहीं से भी लोगे एसएल बड़ा ही मिलेगा यहाँ पर। पहला सपोर्ट है, दो सपोर्ट एक साथ बने इसलिए बोल रहा हूँ। और ये मॉर्निंग पे ऑलरेडी ओपन इक्वल टू हाई बना के वहाँ पर थोड़ा बहुत सपोर्ट ले चुका है। 5730 है पहला, एंड देन 5685। सो ज़्यादा डिस्टेंस भी नहीं है। तो ट्रेल करते रहो, ट्रेलिंग एसएल जाए निकल जाओ, सो दैट फिर नीचे से एंट्री करने के लिए मिल जाए, एसएल छोटा हो जाए इस बेसिस पे। ओवरऑल एसएल बड़ा ही है इस लेवल पे, एज पर द टारगेट। इतना तो रखना ही पड़ेगा एटलीस्ट। बाकी बाइंग हो चुकी है स्टार्ट वैसे तो। 5715 पहला और दूसरा 5770। हाँ, तो लगभग इतना बनेगा ऐसा। ये पहला है और इसके बाद ये दूसरा टारगेट। दिस इज सेकंड टारगेट। 60 पॉइंट दिखा रहा है वो तो मुझे। तो इनफ, इससे बड़ा ऐसा नहीं ले सकते। इनफ इनफ इनफ। फॉरेक्स में देख लेते हैं एक बार। फॉरेक्स चार्ट में बोल रहे ऐसे तो आया था, सेलिंग आ गई थी, कल भी आया था, तो अभी भी पेंडिंग है, तो एक ऊपर को मार सकता है ऊपर की साइड। साइड में चला जाए पूरा। 3 पॉइंट की रेंज है, नीचे का सपोर्ट मिलता है तो श्योर। थोड़ा सा नीचे आएगा तो फिर वहाँ वो बाइंग ही बनाएगी। यस, वो भी डिपेंड करता है उसी पे। यहीं से गया तो फिर ऊपर से सेलिंग आ जाएगी, इसलिए मैं बोल रहा हूँ। है तो वो भी सपोर्ट, बट लिक्विडिटी का रिस्क ले सकते हैं। अगर एक ऊपर से लिक्विडिटी लेके आता है मार्केट, तो पहले टारगेट तो यहाँ जाएगा, दूसरा तक यहाँ, फिर तीसरा तक यहाँ। दिस इज हाउ दे कैन। बेस्ट बाय कहाँ बन सकता है क्रूड ऑयल लेवल पे? वो पूरा ही सपोर्ट जोन है, ट्रेल कर लो अगर हाई लेवल पे ले रहे हो, नहीं तो फिर 5000, 5715 और 5670, these are the two good levels। ये दो लेवल हैं फिर बेटर, जितना नीचे लोगे उतना बेटर। एसएल छोटा हो जाएगा और कुछ नहीं, सिर्फ उतना ही डिफरेंस है। ये भी एक सपोर्ट है। इतना मत लगाओ, एक ही लगाओ। ऊपर आ गया तो उसको हम कंसिडर नहीं कर सकते, फायदेमंद नहीं है। वो तो यहाँ मिल जाए बेस्ट है, पॉइंट का असर डाल दो। पहला यहाँ है, दूसरा का है, दूसरा का 5715, दूसरा इधर का है 575। वो कंसिडर कैसे करते हैं? लाइक एक तो ये सीधा हो गया, दूसरा कैंडल ऊपर जाके नीचे आ जाए, इसमें ऐसा तो कुछ भी नहीं हुआ। तो क्या यहाँ पर सेल नहीं हुआ? क्लोज कर दिया तो सेल कर दो। तो यहीं से बन जाए, डिपेंड ऑन द कैंडल साइज। निकल गया ना ऊपर से, वही तो प्रॉब्लम है। ये बाइंग कैसे आ गई? डायरेक्टली वहाँ पे कोई कॉलरेशन नहीं है। लुक एट दिस। गोल्डन रेशियो तो जाए फिर। दैट वाज द लास्ट वन। से गोल्डन रेशियो तक नहीं आया। दैट इज आल्सो पेंडिंग फॉर गोल्डन रेशियो। ये पेंडिंग गोल्डन रेशियो तो ये भी अच्छा है, ये ऑलरेडी आ गया है। आ गया तो फिर वहाँ छोड़ दो, उस पर मत करो ट्रेड, खत्म। थोड़ा तो रिस्क लेना पड़ेगा, और कुछ नहीं कर सकते, ना रिस्क तो बनता है। अपर लेवल पे यहाँ आगे गोल्डन रेशियो पे सेलिंग आनी है, यहाँ जाएगा। तो जैसे यहाँ पर ये गोल्डन रेशियो से आया, गोल्डन से जाके गोल्डन से आने के बाद ये कल फॉरेक्स में गिर गया होगा। यहाँ पर अभी सपोर्ट है, तो यहाँ से सपोर्ट से आएंगे। और क्योंकि कल सेलिंग आई है तो कल वाली है वो है ना, कि यहाँ पर सपोर्ट है, यहाँ सपोर्ट लेके मार्केट ओपन है, सपोर्ट लेके टारगेट दे दिया, सेलिंग आ गई। अब दोनों तो नहीं हो सकता। नाउ अंडरस्टैंड। तो ये टेस्ट हो गया लेवल, ये भी इतना स्ट्रॉन्ग नहीं है, इसका मतलब इसमें कितना है, ये भी गोल्डन इसी पे है, तो ठीक है, चलेगा। ऐसे देखो जैसे यहाँ से गया, एक बार हाई बना, दूसरे बार लोअर हाई बना है, तीसरी बार फिर से लोअर हाई, तो वीक है। एक बार हाई बना, दिस इज सेकंड टाइम प्राइस इज हिटिंग दिस लेवल। यहाँ देखोगे तो एक बार लो बना है, दूसरी बार अगर ये हाई लो बन जाता है तो फिर ब्रेकआउट हो जाएगा उसके बाद ओवर हियर। वॉच कर लेना 5714, दैट विल बी वेरी इंटरेस्टिंग। हाँ देखो ना, यहाँ पर है, एक बार सेलिंग आई लो बना है, दूसरी बार हाई लो ही बनेगा, तो तीसरी बार ब्रेकआउट हो जाएगा ओवर हियर। हाई बना एक ही बार, पेंडिंग है दूसरी बार आना, दूसरी बार आना पेंडिंग है। हो सकता है एक सपोर्ट से एक ही और बाइंग आए। जो तीन सपोर्ट है वो स्ट्रॉन्ग है सर, ऊपर हो सकता है नया रेजिस्टेंस बनाए। गोल्ड मतलब इसका बीच का लेवल 50%, करेक्ट।
I'm Danny Berger. Some of the worst of the losses that we saw right at the market open starting to ease, so we are still trading around record highs this morning.
Yeah, coming up, Visa chaos. President Trump's move to curtail H-1B visa sends tech companies and their employees scrambling.
Investors awaiting new economic data and Fed speak this week. Fed Chair Jay Powell will be speaking tomorrow ahead of PCE data out on Friday.
And an old-fashioned binder is Citadel Securities' secret playbook for trading hundreds of billions of dollars. We're going to give you more on that exclusive report on Ken Griffin's 50-pound book.
His bound book, very large book.
Bound in a binder.
Bound in a binder, that is correct. Back to the markets, and Morgan Stanley's Mike Wilson sees investors shifting focus away from the labor market and towards inflation in 2026. We got the view from Principal Asset Management earlier on what this equity market is trading on.
I think Mike is right in saying that we have to keep an eye on inflation. You know, we've seen the tariffs have kind of been delayed a little bit. So in terms of the impact of when it's going to hit prices, everything has been pushed for a few months out. I have to say, we're not anticipating a very significant move up in inflation, you know, up to kind of the low 3% level, and then to be quite temporary. But, you know, realistically, nobody really knows how this is going to pan out.
Joining us now is Threadneedle Ventures founder Ann Berry. And Ann, obviously, the rate story is so important to the market and the economy. But do you really think that the Fed wants to get down to 2% inflation? I feel like they're okay with 3%, right, since they're 50% away from their target.
Do I think that this Fed wants to get down to 2% inflation under the chairmanship of Jay Powell? Yes, I do. Do I think that changes when his term is up? Yes, I do. So I think, look, I think we're not quite in a lame duck period, but almost. And I don't see inflation coming down to the 2% level until his term's over.
Does that mean when you look at who's speaking this week, we had Fed Chair Powell, and you almost discount that and you pay more attention to Waller, to Bowman, to the others who speak?
Unfortunately, I think we start to, I say unfortunately because I am a proponent of actually sticking to that 2% target and maintaining the credibility of it. But I do think we're now, as we exit this year, moving into having to listen more closely to other voices, watching that dot plot and the dispersion, which was actually significant when you take a look at it from the most recent Fed meeting. So I think we are starting to have to pay attention to other voices with more intensity. Yeah.
All right. So this is, you know, the rate story is one that affects the costs that these companies pay financing. Another story that affects the cost is the H-1B visa story. And it's grabbing the headlines. I think it's incredibly fascinating. Some of us are learning things we didn't know before, that 72% of H-1B visa applicants are coming from India, or winners are coming from India. How do you think this plays through into the big companies that need all of these workers, into the small companies that maybe won't be able to afford them now?
Well, let's start with the big companies. And I was waiting to come on. I saw this helpful chart that you flashed up, which showed, I think it was Amazon, Tata, some of the financials are the biggest participants in the H-1B program.
I believe we have that chart.
There you go. I'm calling up the chart for you. I think those companies, not only can they afford it, right, in terms of the number of H-1B visa holders they have, and if they were to sort of cycle through to replace, this fee can be absorbed by those companies. But here's one thing I would just say. The average, I believe, someone should check this, tenure of an H-1B visa holder on that program is 6 years. So I would think about that $100,000 fee as amortized over 6 years. So we're calling it just under 17 grand a year in effective annual uptick. Now, I think there's a lot of data that shows that a lot of H-1B visa holders are actually paid less than their, U.S. citizen counterpart would be. So does this actually just sort of net out to what would have been the alternative to these companies anyway? That's for the bigger players. I don't think it changes much for them. I think it's just a revenue generator for the U.S. government. For the smaller businesses, I think this does impact them. And so I think we do need to watch out in pharmaceuticals, for example. It's not just tech, right? In biotechnology, what happens there? And often those smaller companies don't have as much cash, right? Or they're burning through money on things like R&D. So I think we're going to see a very different impact depending on which part of the economy we live in.
By the way, I just checked, and you're correct. It is a 6-year tenure.
It is 6 years, okay.
Yeah, because then workers either go home or they're far along enough in their green card process that they get it.
And then there's 3-year extension increments afterwards. So again, it could even be more than a 6 years.
But it is part of just a wider trend of trying to crack down on immigration, be it what's happening at the southern border or what happened at one of the Hyundai plants with South Korean workers, with all those images of people getting put in chains. Does it ultimately curtail U.S. growth? If international companies who have been making commitments to come and grow in the U.S. all of a sudden are not sure if they can bring or get the workers that they need?
Let's focus on tech just for a minute to try and answer that, Danny, because when I think about the H-1B visa population, for some of those big companies we talked about, the visa program is being used to fulfill roles that typically requires a good amount of education, a pretty high skill set. So I have a slightly different perspective on this versus, for example, the border control. Is this a way of trying to force greater investment in education to fill those seats here in the US? Is this a way, in conjunction with what's been going on with student visas, right, to try and force Americans to have more spots available to them at schools? I don't have a personal political opinion on this, but I would delineate between the H-1B visa situation and other immigration acts that we've seen lately.
I want to ask about TikTok because you're so good at social media, analyzing the companies as well as being on it. I love your YouTube show.
I'm going to come do Reels now. Thank you for calling out the YouTube show.
What's your take on this new consortium that we're hearing about? We don't know much detail, but it seems to be one of President Trump's top priorities, getting TikTok, keeping TikTok in the U.S.
Okay, I have a newly emerging thesis on this. I'm going to write about it, but this literally came to me over the weekend, so I was excited I was coming on today. I think seeing what happened announced, I think it was Saturday, that Lachlan Murdoch is a name that's been thrown into the ring as being part of the TikTok resolution.
The president himself said Lachlan.
The president himself. And you know, the follow-up reporting on this wasn't, it wouldn't be a Lachlan Murdoch personal investment, it would actually be done through Fox Corporation, right? That is now news media and TikTok coming together. Larry Ellison, we can't really separate him, right, from Paramount CBS. That is news media now touching TikTok. So the thesis I have emerging is, what happens to Reddit? What happens to Snap? So I sort of went into the numbers. Snap's market cap's about $15 billion today. I'm making this up. Suppose Versant, you know, when that is complete, that spin out, maybe they want to have a platform where they can now start dropping news clips to a younger demographic. Is Snap, a feasible size for a merger? It's not impossible. Reddit, $50 billion-ish market cap. You know, the Ellison family could wake up tomorrow and think about pulling that into the Paramount Skydance family. So this is an emerging thesis, but I now do wonder whether social media assets start coming into play as a new news distribution channel. We've got to start looking for M&A activity.
But what happens when it's the Metas of the world that control the big U.S. social media companies? Can a Snap being acquired by, let's say, Warner Brothers Discovery, choose whatever name you want, actually compete? Does it change the profitability and the outlook of some of the smaller social media companies?
Well, I think it changes their cash flow, the cash that's behind them. I think it changes their war chest, right? If you have the Ellisons behind you, I think you suddenly have a very different war chest versus if you're Snap desperately trying to figure out your attention and profitability model. And if you look anyway at what's going on, Reddit is signing licensing deals with the AI players, right? They're doing that to generate incremental, extremely high margin cash flow. Why not just go all in and join one of these players anyway? And actually, it may not be their decision. It may end up being a shareholder vote if someone wanted to get really aggressive and lob in a bid. So, again, this hasn't sort of become concrete yet, but I'm starting to look at whether we need to start thinking about social media assets as a totally different M&A pool.
That is so interesting, and we're going to have to leave it there. You need to come back again soon. We need to talk about this more. Threadneedle Ventures founder Ann Berry, thank you so much. And Matt, speaking of TikTok, some lines just crossing. A U.S. official saying that Trump will be signing a TikTok order later this week. He will also be extending the TikTok deadline by an additional 20 days. And there'll be a brief to reporters on the deal, so maybe we'll finally actually understand what this beast will look like.
Right, but one thing that's clear is that the U.S. administration will do whatever it takes to keep TikTok in the hands of our youth, Danny.
Yeah, I mean, they are hawkish on kind of everything else, China, except TikTok. TikTok, they're happy to do whatever it will take. They also, a U.S. official also saying that a copy of the algorithm will be brought to the U.S. group. It's our understanding that Oracle will oversee that U.S. algorithm. All right, let's get a quick check on markets, Matt, because they did start deeply in the red at the start of opening. They have now paired those losses, and even for the NASDAQ, just barely into the green. If they can do so, they will hit another record, but just not a lot of movement. There's not a lot going on this week. We have PCE on Friday. Maybe it's the Fed speak that's more interesting. And Barry was just telling us that some of the other speakers beyond Jay Powell might be the more interesting, but 6,662 is where the S&P 500 trades this morning, Matt.
All right, we're not seeing a lot of move in terms of yields, still stuck at around 412, 413, which is what we saw at the end of last week. Let's get a look at some of the single stocks moving this hour. Shares of Fox are rising on optimism over the company's role in a possible TikTok deal that Ann Berry was just talking about. President Trump suggested that Lachlan Murdoch, the chairman of Fox, and his dad Rupert are involved in the latest deal that is being explained, I guess, to White House reporters right now.
Yep, it's going to have an algorithm that gets reinstated in the U.S. And again, to your point, there will be a briefing about that. We're also watching Pfizer shares this morning. The company agreed to buy an obesity startup, Metsera. That deal, $5 billion. It's part of Pfizer's efforts to catch up after stopping the development of its own weight loss pill for safety reasons. Sam Vizzelli, I really like this, calling it a game of snakes and ladders, which I think is the British version of shoots and ladders, where you go up.
Snakes and ladders?
Yeah, I think that's what he said. I'm assuming that's the British version of shoots and ladders.
Interesting.
But yeah, where you
I
go
wonder
up
if
the ladder.
Hasbro owes that too. I know the game, right?
Yes, you know the game.
Shoots and ladders.
Shoots and ladders.
I have a 5-year-old at home. Shares of Tylenol. The maker of Tylenol, I should say, Kenvue, are falling after the Washington Post reported that the Trump administration officials are planning to link acetaminophen, which is, of course, what Tylenol is, to autism. And obviously, that's no good if you're doing business as Tylenol. And as a result, the shares are down only 6%.
Yeah, I think we're expecting a press conference around 4 p.m. to understand the details of that. So a lot of agenda coming up for the White House today.
Coming up, President Trump is fueling anxiety a little bit, at least, in the global workforce because of this $100,000 fee on H-1B visas. We saw a plane, for example, full of people freaking out. Some of them got off and didn't come here. We'll look at that sudden change next. This is Bloomberg Open Interest.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
President Trump is slapping an $100,000 fee on H-1B applications. It's a move that threatens to upend the recruiting model used by outsourcing giants. Investor Kathy Wood weighed in earlier on Bloomberg TV.
So I think this is a little bit like tariffs, and it's going to capture all the headlines, and it's going to really take the oxygen out of the room because there's a lot of really good fundamental activity happening in the United States. I just think this is part of the negotiation with India, and that when all is said and done, we're probably going to loosen up the H-1 visa program.
Joining us now is Bloomberg Tech co-host Ed Ludlow out of San Francisco. So is this the way it's being seen, Ed, as a negotiation tactic with India? Because it seems to play along with all of the Trump themes, right? He wants to give Native Americans more jobs and, give them better paying jobs. And it also sort of does away with the gaming the system that we saw in a Bloomberg study of this program at more than 18%. Like 20% of the people who are getting these visas were cheating.
So the data is critical, and when it relates to India, more than 70% of all of the H-1B visas that are awarded go to an Indian citizen or individual anyway. The reaction over the weekend wasn't one where, for the companies and the employees in question at least, this was a negotiating tactic between those two nations. The immediate reaction was confusion because what the White House and the president did not discuss on Friday is the implementation of the new set of rules. Literally, does this apply to the body of people that already have an H-1B visa or not? And that prompted Press Secretary Caroline Leavitt to clarify on Saturday it's only for new applicants for the next tranche. So every year, applications open in March for the following calendar year. And there is a cap of 85,000, 60,000 general application, 25,000 specifically for people with master's degrees and above, and everything thereafter is a lottery system. And that was the confusion, and you're showing the employees there. What happens next vis-a-vis India, certainly interesting, though.
Who is impacted, though, Ed? Because you look at Amazon, one of the heaviest users, 10,000 H-1B visa applicants, but this is an extremely profitable company. If they want to hire more H-1B visa holders, can't they? And isn't it the smaller ones that lose out?
We were just talking about this in the Bloomberg Tech show call. Like, the stock's down 0.8%. Do we draw a direct causal link between what's going on with H1Bs and Amazon shares performance? It's not clear. There's been a lot of commentary over the last few days from technology company followers and some of the banks themselves. Financial institutions, particularly in America, also have an H1B visa workforce. $100,000 per applicant is potentially manageable. Here in Silicon Valley, though, where the concern is being felt most is like, what if you are a small startup of 10 to 15 people and you're baking in $100,000 per applicant on an H-1B visa? At the margin, that would represent like something a bit more significant. I don't know if you guys saw the HSBC headline, and the headline on the terminal is like, we're sanguine about it. It's manageable. HSBC only has like 54 H-1B holders. JP Morgan has thousands. So I really think it depends how many applications each company is intending to make.
Right. Well, and as we see from this graphic, 22,000 IT staffing companies got H-1B visas out of 85,000 in 23. 11,600 outsourcing companies got them out of 85,000. So a lot of these companies maybe don't have them directly, but they're using an outsourcing company to get them. I think the interesting question, Ed, and I don't know if the answer is clear, but are companies hiring somebody out of India because that person will do the job for $100,000 when an American is going to need 150? Like, what's the delta there? Or is the problem we just don't have enough Americans who can do this job at all, which is why we need so many people from India?
In specific computer science and engineering roles, also in industrial use cases like tooling, there is a deficit of skill set in this country, right? And we talked about that. Also, a lot of companies will tie visa costs contractually to comp. So they'll say, if we get this visa done and it costs $100,000, you have to stay for a minimum period of, say, 2 years, or you owe us that fee back. Is a mechanism to try and get people to stay. But actually, to your point, the opposite is being discussed, which is like, there's a very close affinity between H-1B visa applicants and the technology industry and also academic institutions for research, right? Particularly the California Bay Area universities. If you are India or you're China, you'd kind of be cheering it and saying, oh, this might actually help us keep talent that has historically been so inclined to move their intellectual capital to the United States.
All right, Ed, fascinating topic. I'm sure we're going to hear a lot about it from you next on Bloomberg Tech. That's the show he co-hosts with Carolyn Hyde. They're going to talk, obviously, a lot about TikTok as well as the Murdoch's role and Oracle and its new CEOs. Let's get now to high interest to look at what's making headlines around the world. President Trump will join world leaders for the United Nations annual gathering as the organization's loudest critic and its biggest debtor. The U.S. has all but stopped paying its bills to the UN since Trump took office in January. Washington owes more than $3 billion in dues and peacekeeping costs. The U.S. could lose its vote in the UN General Assembly if it continues to refuse to pay. U.S. Treasury Secretary Scott Bessent says Washington is ready to back Argentina as its markets tumble. He and President Trump will meet with President Javier Milei in New York tomorrow to discuss options ranging from currency swaps to dollar debt. The pledge sent Argentina's bonds surging, offering Milei a potential lifeline ahead of October's midterm elections. He's spending pretty much all of that country's reserves to prop up the peso. No dice for Manhattan. A state committee has rejected the latest remaining casino proposal for the borough, an $11.2 billion project near the UN. That leaves Queens, Yonkers, and Coney Island still in the running as New York pushes ahead with plans to award 3 downstate casino licenses later this year. So wait, if you want to go to a casino in New York City,
you just have to cross a bridge.
You have to go to Queens now instead of doing it here on the island.
Yeah, I mean, that's not too hard. I'm just happy this is over because my inbox was literally stuffed with mailers about this, being like, vote for this, it's a good thing.
So you no longer have to think about it.
I no longer have to think about it.
Until you become addicted to gambling, and then you're going to have to go to Queens all the time.
I'm always an inch away from that, Matt. That is correct. Elsewhere, Aura, the maker of the fitness tracking ring, is closing in on an $11 billion valuation. The Finnish startup is raising nearly $900 million, doubling its valuation from just a year ago. Growth growth being fueled by female shoppers, global rollouts, and purchases made with health savings account funds. Tom Hale, the CEO of Aura, will join Bloomberg Tech today at 11:30 a.m. New York time. And if you're a holder of the Amex card, you also get money to spend on Aura. So I guess that's good for them, too.
Yeah, the platinum card.
Yeah,
not just
correct.
any Amex.
Sorry, great distinction. The nearly $1,000 a year platinum card. Yes.
I can't see myself wearing a big Aura ring.
Me neither.
But I do wear this Whoop band, and I notice that even if I feel fantastic, if it tells me I've had a bad recovery,
you're like, oh, things are bad.
It ruins my day.
Yes, I am there with you.
Still ahead, more on President Trump's H-1B visa fee. We're going to talk about the anxiety that it sparks in corporate America and on maybe a plane near you. Amova Asset Management CEO Stephanie Drews weighs in. This is Bloomberg Open Interest.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Let's get a quick check on the markets using the move screen. It's the most dynamic way, I think, to look at the S&P. You can see, for example, that we've only got 150 stocks rising, 350 down, but it's trending higher. So we just turned positive on the index. NVIDIA still weighing us down a little bit. Microsoft, Amazon, and Broadcom all off, as well as Palantir. But on the plus side, Apple is gaining, Tesla is gaining, and Oracle is higher as it names two new CEOs. So you can see that there are some big gainers weighing on us, and we have very bad breath. Nonetheless, we're rising back up to what could be an all-time high. The S&P right now trading at 6,663, and I believe we need to get to 6,670.
Yeah, sounds about right.
Somewhere around there. Surely it'll happen. Coming up, Stephanie Drews, CEO of Amova Asset Management, weighs in on that question. Will we hit an all-new high?
A powerful pitch can unlock transformative growth. Having at least 1 million pre-launch equips companies with a 25% higher likelihood of success.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey. Not just my own area of physics, but things on the business side.
The right expertise can move your business forward. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
High, because obviously at some point it will.
Yeah. Matt was talking about a new high. Here we are almost just about 6,666 at the nadir of the financial crisis. This equity market was trading at 666, so we are 10 times that value this morning. The Nasdaq outperforms up 0.1%. Here to give her perspective on the markets is Stephanie Drews, CEO of Amova Asset Management. Stephanie, thank you so much for joining.
Thank you for having me.
So even though the S&P 500 is at all-time records, other things have outperformed it over the past month, notably small caps and notably EM. Does that trend continue where even though U.S. is doing well, that maybe riskier things abroad may be the outperformers?
Or riskier things, or non-riskier things abroad. In fact, if you look at the markets right now, you can see Japan up 17%, Germany, the DAX, up 25%, Hong Kong up 35%. And so you're seeing a lot of Asian countries and European countries, Euro stocks up 14%. in line with the US or maybe even above. The reason for that is the valuation is cheaper, and there are other structural reasons for that as well. So we're seeing new flows shift away from the US into other markets to create a more balanced portfolio. And we're definitely seeing a de-dollarization of portfolios where we're seeing the dollar being hedged more. So people are still holding on to US assets. They're not selling them off, but they're protecting their currency exposure, and then they're moving fresh assets elsewhere. And there are some awesome growth stories in ASEAN, in Japan, and in Europe, and even in China.
So a real shift in the mix of what
Correct.
international investors hold. In some respects, away from a U.S.-focused portfolio maybe, or a U.S.-dominated portfolio, to a more diverse portfolio. At the same time, you are moving your business or growing your business here in the U.S., making a name change and really, I guess, dedicating yourselves to the American market. So it still has obviously a lot to offer, right?
It absolutely does. And so the asset allocation shift is more to create a more balanced portfolios. People have generally been overweight the US, and there is a natural limit to how overweight you want to be, including, by the way, central banks. They've also been overweight the US dollar. So a lot of these things are happening just for rebalancing. In terms of us, yes, we did change our name to Amova Asset Management. We used to be Nikko Asset Management. We're part of the Sumitomo Mitsui Trust Group, one of the largest trust banks in the world. And we are expanding our footprint in the US. We've actually been here since 1984. But this is one of the most interesting markets from the asset management perspective. And so we definitely want to tap in. And so we have a very ambitious global growth plan that looks at expanding our footprint here in the US inorganically. So we have been looking for appropriate acquisition targets.
Well, to your point, people are still buying U.S. equities, but foreigners are hedging it with dollar exposure. Given that you have such a great view into global investor bases, how different are foreigners' views on U.S. equities versus Americans themselves? Is one segment more bullish or less bullish than the other?
I think that definitely foreign investors want to have exposure to the US. There is no doubt about that. But I think valuation is beginning to play such a huge story. And if you look at the valuations, for example, Japan, where there's huge growth potential, and Europe versus the US, the gap is just huge. Even if you kind of look at it over 20 years, the PE multiple, right now in the US, we're at 27 PE multiple over 20 years versus Europe and Japan, where you were at 16 and 17. But the growth expectations are quite significant. And then when you pair that with a depreciating currency, this diversification is quite natural.
In terms of the opportunities that you see elsewhere, and you seem pretty enthusiastic about those growth stories.
Yes.
What are the most exciting to you?
So I think maybe in Asia, and not just because we're headquartered in Japan, but Japan. Japan is a huge story, and it's one that really is strategic and long-term. So we've seen Japan really change the way that it looks at capital efficiencies. It's reviewed as corporate and stewardship codes. The Tokyo Stock Exchange modernized. And I mean, I sit in the meetings at the parent company, and I've never heard more discussion about capital efficiency ever now than before. And that is a long-term trend. So we're seeing companies really change their efficiency model. So Japan, hugely interesting. But ASEAN as well. ASEAN has captured a lot of the supply chains that have already shifted under the first Trump administration and during COVID. In fact, there's more ASEAN-US import contingent now than China. And more foreign direct investment goes into ASEAN, which are the Southeast Asian nations, than China. So there's been huge changes, and there are very structural reasons, including the biggest consumer growth story. 700 million people, 400 million will be basically middle class by 2030. So the consumer story is enormous, as well as an industrialization transformation, EV ecosystem, as well as moving up the value chain for semiconductors. And so very, very strong reason for ASEAN. And then Europe, of course. But Europe is a valuation play. And as I said, with the Central Defense Fund, there's going to be a release of European debt that will be issued. And so Europe also a very, very interesting story, and a market that is very, very highly regulated. So the impact of deregulation, as suggested by the Draghi report, will be much bigger than in a highly deregulated market where the impact will be far less.
All right, Stephanie, great to have you in here. Thanks so much for joining us. Hope we can get you back soon. Stephanie Drews there of Amova Asset Management. Let's get a look at what the stocks are doing, some of the single stock stories, because they were big ones this morning, and how the shares are moving. Oracle announced leadership changes, promoting 2 executives, Clay Magouyrk and Mike Sicilia, to the role of co-CEO. Safra Catz, who has led the company for over a decade and, as Anurag was telling us, been there for 26 years, will become the executive vice chair of the board.
Oracle has almost doubled this year. I mean, that is so insane to me. And amid all of that, they're putting in new CEOs that the market is excited about. Usually shares fall when you get a new CEO.
And it was off this morning in the pre-market, down about 1%. Now it's up 2%.
Well, we also had another CEO change, and that came from T-Mobile. They also announced changes in the C-suite. They are set to promote its chief operating officer, Srini Gopalan, as its new CEO. The move will be effective in November, and both of the executives from T-Mobile will be joining Bloomberg Tech today at 11 a.m. Those shares not as positive as Oracle are, but still up this morning.
Gold mining stocks are rising after gold hit a fresh record high following the Fed's rate cut last week. The move builds on a run of 5 consecutive weekly gains for the precious metal. You can see Newmont Mining, Barrick, and Agnico all up after gold topped $3,700 a troy ounce.
Now, coming up on the show, we're going to take a look at the health of the U.S. consumer with Michelle Meyer of the MasterCard Economics Institute. That's coming up on Bloomberg TV.
Investors are awaiting fresh economic data and Fed speak this week, with Fed Chair Jay Powell set to speak tomorrow ahead of PCE data, the inflation data that we get on Friday. That's the inflation measure that the Fed actually cares about, supposedly. Joining us now is Michael McKee, Bloomberg's international economics and policy correspondent. By the way, I say that a little bit sarcastically or cynically because they have this 2% goal that they're clearly not trying to get even close to. Like, if they were 10% away or 15%, I could get it, but they're 50% plus away from that. So why pretend that that's a goal?
I asked, you obviously set me up. I asked Jay Powell this at the news conference last week, and basically he said, by telling people that's our goal, we tell them that's our monetary policy, and they have an idea of what the path is going forward, even if we aren't able to get there yet. But they do want to get to 2%. Why they can't is a matter of debate, and it will be debated this week. I see Michelle Meyer over there doing push-ups, getting ready for all the Fed speak this week. We have something like 14 different Fed officials who are speaking this week, including Alberto Musalem of the St. Louis Fed. He's the first one on the board this week, saying that he thinks the neutral rate is higher, and that means we need to cut less, if at all. But he does worry a little bit about the labor market, which is why he supported the 25 basis point reduction last week. Doesn't mean he'll do it in the future, he said. But you look at all the people who are speaking this week, and it's almost everybody who is a voter, at least, on the Open Market Committee, and they're going to get their markers on the wall. The two that people are following is Stephen Myron, who is obviously an outlier in the Fed's outlook for what's going to happen with the economy. He's speaking today at noon to the Economic Club of New York. We'll have that for you on Bloomberg Television and radio. And, of course, we're going to have Jay Powell tomorrow, as Matt mentioned, and that's the one that's going to really get people's attention, because even though Stephen Myron's making a case for a big move, Jay Powell is not. And he is shown through the consensus he got, no dissents other than Myron's last week, that at least he is still relevant to the discussions as he remains chair for another couple of months.
To be clear, the only person who's working out in anticipation of Fed speak is Waller, and those insane powerlifting squat things he does. Have you seen that? He posts on social media all the time.
I have not seen it.
He's a power lifter.
Yeah, he can do 300 pounds.
It's frankly terrifying.
His exercise.
Yeah.
So, Mike Mayo can do that, too.
Yeah, correct. I guess
he
it's a thing.
He wins competitions.
Yeah. Wall
I
Street
wonder if
powerlifting.
Stephen Myron can lift. The two of them could,
I fear to think about the power of those two men together. Mike, thank you so much. That is Bloomberg's Michael McKee. Away from powerlifting and exercising, let's continue the conversation with Michelle Meyer, MasterCard Economics Institute Chief Economist. Michelle, great to see you this morning. Thanks so much for joining.
Of course.
There does seem to be this disconnect, and it kind of gets to what Matt was saying, this idea that the Fed's best guess of what the Fed funds rate is going to be at the end of the next year is 3.5%. The market is pricing in a 0.5 percentage point lower than that. As we get this ream of Fed speak, is there a real risk that this market needs to come to terms with something different that the Fed itself is pricing in?
I mean, I think the Fed has been very clear that as they look ahead, their forecast is just a forecast that is dependent on how the data evolves. So I think just like market participants, Fed officials are going to calibrate based off of what they see in the real economy. And that's why there's such a big divergence of views, not just between the markets and the Fed necessarily, amongst economists on the street and also within the Federal Reserve themselves, because there's a lot more uncertainty around the data today than there's been in quite a while.
How does the economy look from your perspective? I think Stephen Myron's his dot for rates was at 225 in 2027. Yeah. But in his role as the head of the Council of Economic Advisors, he has forecast 4% growth.
Right.
So how does the economy look to you?
So the question is which comes first? And that's always the complication when you're trying to match the dots and make sense of everything. Because in a way, you can say, all right, in order to get 4% growth, you need to take rates down this low. And that's what's consistent within the model versus thinking about growth all else equal would be that strong. And therefore, you don't need that level of interest rates. So I think there's a lot of complications in terms of weaving the narrative as a result of that. But one thing that I do think is very clear is if you look at a variety of different indicators, it is an economy that is continuing to expand. There's been fears for quite a while that the economy was going to turn fast potentially, and it's really not playing out. It's evolving. Tariffs are kicking in slowly, but you're starting to see some of that impact. We're transitioning from this period in the spring of just heightened uncertainty and so many unknowns, particularly for companies, to one where there's a little bit more clarity and they can start planning and thinking about targeted investment. And consumers that are facing, a supportive environment. The labor market is seeing a slowing in job creation, but they're not seeing a reduction in the workforce. You're not seeing an increase in jobless claims. And the wealth effect, the household balance sheet is still very favorable.
I would love to get your take on something Peter Scheer of Academies wrote today, that a K-shaped economy is not how we should be thinking about it. It's a lowercase I economy, where you have a separate dot of wealth that is so high up and so unattainable for the rest of the stick. And that's how we should be thinking about it, that it's even bigger than just a K.
All right, that's creative.
That's why we love Peter Scheer.
Yeah, okay. All right, let me think on that one for a little bit.
Okay. Well, in the meantime, though, Neil Dutta has been writing that consumption doesn't slump ahead of an economic downturn, that you start to get the economic downturn, and that's when you see the slump in consumption. What do you think about that one? Or can some of the consumer data, which you have a wealth of, really be a guide for where the economy goes?
Look, I think it depends on the cycle. It depends on the shock, right? When you think about the financial crisis, which was a household balance sheet recession, it was the consumer that really was the turning point after, of course, you saw the contagion and the problems in the financial system. So the fact that the household balance sheet on aggregate looks healthy in this environment, I think is important in terms of getting a stronger foundation, a little bit more of a buffer out there for the consumer, which is important. But yes, in terms of the leading indicators, historically, you would look at the good side of the economy, the more cyclical side of the economy, manufacturing, housing. Today's environment, a little bit hard to focus on those sectors because there's external factors that are influencing those dynamics. So to me, variety of indicators, look at everything, understand when there's a trend that is consistent across many different indicators. And right now, the trend is still one of further expansion in the economy.
Even if the consumer is set up well, I wonder how much more inflation the U.S. consumer can take. Because, we talk about it on a month-to-month basis, and we would say, like, if it came in at 2%, we'd be like, oh, that's great. But in all reality, like if you're at your kitchen table, that just adds to all the other, I was looking at electricity prices this morning, and we're up 40%, 45% compared to where we were 5 years ago.
Yeah.
So how is the consumer dealing with this continued increase in price?
So there's a few things that I would say in terms of inflation. One is that not all inflation is equal and even. And so when you see inflation in the goods categories, you mentioned utilities, that's important. When you see it in gasoline or in food, when grocery prices were increasing, that really made the headlines and worried consumers. Today, gas prices are low. Food prices are quite contained relative to where we were a few years ago. But certain goods categories, particularly discretionary goods, are starting to see higher prices. So something to monitor and watch. And then it's also inflation relative to purchasing power. So it's inflation of goods and services. How does that compare to wage inflation? How does it compare to asset price inflation? Not just looking at one thing singularly. And wage inflation is still, on balance, running above underlying price inflation. And that's an important metric to follow.
All right, Michelle, great having you in here. Really appreciate your insight. Michelle Meyer of the MasterCard Economics Institute. We want to give you just a little bit of breaking news from the White House on H-1B visas. The White House says that doctors may be exempt from H-1B visa fees. And this is important because we focus so much on the IT staffing aspect of it. Obviously, you know, programmers are so sort of top of mind for us when we talk about H-1B visas, but they're also critical for a lot of hospitals and healthcare service providers.
I think, though, what this does get to is that this policy isn't fully figured out, that the White House saying that they may be exempt, they themselves don't totally know what this policy is going to look like, and it speaks to the confusion that so many of these companies had over the weekend in trying to wrap their hands around
Yeah,
this.
and the uncertainty, and that's what happens when you just come forward with the concept of a plan
Correct.
all the time. Coming up, an old-fashioned binder is Citadel Securities' secret playbook for trading hundreds of billions of dollars. And we're talking about a book that weighs 50 pounds. More on that exclusive report next. This is Bloomberg Open Interest. Citadel Securities may run on high-speed trading, but its real engine is a surprisingly old-school book that weighs 50 pounds. It's called a goal book, and each year the Wall Street powerhouse compiles thousands of targets from its nearly 1,800 employees into a single binder, hand-delivered to its CEO. Let's get more details now with Bloomberg finance reporter Catherine Doherty. She wrote the story for us, and it's a story that had me thinking. It had me like up all night, kind of trying to imagine how big is this book? Is it like handwritten notes to Ken? Also, if there are this many goals, how can they possibly like sort through them and determine if they've hit them?
So the point is they're refining their goals. If you have nearly 1,800 employees, that's 3 goals per employee, but they're explicitly laid out in this binder. And I'll also note that it's not just the binder that is helping each employee be accountable for the targets that they're setting at the end and at the beginning of every year. They're doing this electronically as well. So the binder is a physical representation of what the firm is trying to achieve each year, but it's not as if every day is not tracked in such minute details, because that's also kind of the second leg to the way that they are both setting and accomplishing their targets for each year.
I was going to ask, what does this just say about the culture of Citadel itself, that you have month-long debate about what should go in this book? You spend forever trying to whittle it down. You have to have this clean product delivered on the desk of Ken Griffin. Is this emblematic of just the way Citadel does business?
Maniacal detail. This is a company that is trying to grow rapidly as the industry is growing and their competitors are growing at a rapid pace. So they're trying to not only keep up, but they're trying to grow their own business. And to do that, you have to really track each business line individually and then look at it from the big picture, too, from the company as a whole. So the CEO, Peng Zhao, he's very involved in the planning process of this. He's the one that's making up and marking the book himself. He's giving feedback. He's setting lofty goals for the company and each employee. And it's a company-wide process, but it really starts from the top down.
I'm not sure it's clear to everybody how heavy 50 pounds is. Like if you ever pick up a 45-pound plate at the gym.
Yeah, I don't think I.
It's true. I'm working with 10-pound weights here.
Who's moving this book that's 50 pounds?
Yeah, it's again, this book is not widely shown or widely shared across the company.
Is it on a dolly? I mean,
it is only for the top, the folks that really need to have the book are the ones that physically handle it, but otherwise the employees are contributing to the book. They're giving their own targets. They're responsible for stating individually, this is my goal for the year. But this is not a book that gets printed widely.
But also, just who has the time to go through this whole thing? Is Peng Zhao really going through every single page?
Oh, yes.
How?
Oh, yes.
How does the man have enough time?
Because he is paying attention, just like the founder of this firm, Ken, who pays attention to every detail of all of his businesses. Peng is the same way. He's paying attention to the individuals and the goals that are set each year. And this really started from when he became CEO. And as the company has grown, they haven't lost that attention to detail.
All right, Catherine, such an excellent story.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equityfutures.
News when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Caroline Hepker.
HSBC says it's made a breakthrough in quantum computing for trading using IBM's processor. The lender says it's the first time real trades have been used at scale to show the potential benefits of this emerging technology. Bloomberg's Chris Pitt has the details.
A Sputnik moment. That's how HSBC's executive in charge of quantum computing described their successful deployment of the technology in financial markets. The London-headquartered bank said it had used a Heron quantum processor to deliver a 34% improvement in predicting how likely a bond is to trade at a given price. HSBC's trial marks the first time a bank has used real trades at scale to demonstrate the benefits of quantum computing, which could now lead to a flurry of activity as financial companies step up efforts to harness the technology. In London, Chris Pitt, Bloomberg Radio.
Now, when it comes to UBS, shares in the lender have fallen as much as 1.5% in European trading after Switzerland's financial watchdog said the lender's emergency plans remain insufficient. In a statement, FINMA said UBS's emergency plan largely fulfills the current statutory requirements. However, it needs to be better integrated, and thus it can't currently be regarded as executable. FINMA talking about the country's sole globally significant lender. Switzerland has been especially focused on bank stability, given Credit Suisse, which ran into serious trouble 3 years ago, and was acquired by UBS in that emergency deal.
Elsewhere, strategists at Bank of America are making the case that sky-high valuations in the S&P 500 may be appropriate. In a note, the lender's head of equity and quantitative strategy said that easy fiscal spending and dovish Fed policy against a backdrop of accelerating profits could justify the pricey levels, adding, perhaps we should anchor to today's multiples as the new normal. The comments come as the US equity index has taken a breather in the past 48 hours following gains of more than 30% from April's low. Amy Wu Silverman is the head of derivative strategy for RBC.
Whenever I'm speaking at a relatively large meeting, so, maybe 30 or more investors, everyone's going around, they're talking about their bearish sentiment. And then if I say, show of hands, who thinks the market is going to be higher by year end, like 90% of folks raise their hand. So it's this reluctance in the rally for sure. But then again, there's this impulse to be very concerned about that right tail and feel like they still have to chase it because they know that they cannot be left behind.
Amy Wu Silverman speaking there as the S&P 500's 12-month forward price-to-earnings ratio hit 22.9 this week. That's a level that's been topped only twice this century, during the dot-com bubble and during the 2020 pandemic rally.
Now, European miners are surging on the back of higher copper prices, copper remaining near the highest in more than a year. This after a fatal accident at the world's second largest copper mine. Freeport-McMoRan declared force majeure on supplies from its Grasberg mine in Indonesia after 2 employees were confirmed dead following a mudslide into the mine's underground levels. The US company has cut its copper and gold sales guidance for the quarter as it continues to search for 5 missing workers after the accident, which occurred 2 weeks ago.
The US has cut tariffs on EU auto imports to 15%, retroactive to August 1st. This locks in terms of a trade deal struck almost 2 months ago. The move will help ease tensions with Brussels, with shares in European car makers rising on the announcement. New car registrations across Europe also rose 4.7% in August, according to the continent's auto lobby. On tariffs, most other new rates take effect from September, while exemptions remain for aircraft, pharmaceuticals and certain raw materials. Talks continue, though, on steel and aluminium, where EU exports still face tariffs of up to 50%. Meanwhile, the Trump administration has launched investigations into imports of robotics, industrial machinery and medical devices, setting the stage for fresh duties there.
Russia plans to run a budget deficit for a 5th year as the costs of its war with Ukraine mount. The finance ministry projects a fiscal gap equivalent to about $55 billion in 2026. War spending is climbing while oil and gas revenue is falling, pushing Moscow to raise value-added tax rates and also to borrow more. It comes as President Trump is pointing to those strains, saying that the Russian economy is weakening. He says that with EU support, Ukraine is positioned to win back all its territory lost since 2022, while Ukraine's President Volodymyr Zelensky has urged allies again to take stronger action against Russia.
If it takes weapons to do it, if it takes pressure on Russia, then it must be done. And it must be done now. Otherwise, Putin will keep driving the war forward wider and deeper.
Ukraine's Volodymyr Zelensky speaking at the UN General Assembly. Trump's shift on the country's chances of actually winning have been welcomed by officials in Kyiv and Europe, but the US president has offered no new measures to support Ukraine, and privately officials in Europe and Ukraine are more concerned that it puts responsibility on Europe to do more.
Well, those are our top stories this morning. On the markets, the stock 600's weaker 0.2%, catching up to the sentiment on Wall Street yesterday. But today, stateside S&P E-minis are flat to the upside, and the 10-year US Treasury yield is lower a basis point at 413.88.
That's news when you want it with Bloomberg News Now. I'm Caroline Hepker.
I'm Lizzie Burden, and this is Bloomberg.
Now, when the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group
technology touches on everything that we care about.
South Korean Prime Minister spoke to Bloomberg in an exclusive interview.
Realistically, without a solution, it's difficult to invest in the United States and carry out the various joint projects currently planned between South Korea and the U.S. We absolutely must find a solution. Several projects are underway between South Korea and the U.S. Without resolving the visa issue, meaningful progress remains virtually impossible.
And Denmark is investigating potential Russian involvement after a second drone attack this week. Large professional drones were spotted at 5 regional airports in Denmark, disrupting flights. The country's defense minister said the incidents did not look like a coincidence. They looked systematic. Coming up, private credit seeing a pullback in fundraising. Our next guest, though, remains optimistic. Anthony Tutrone, Neuberger Berman Global Head of Alternatives, joins us live from the EPEM conference in Paris. This is Bloomberg.
Technology touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
Possible.
Shipping a lot more to Africa. Consumers are starting to regain some level of confidence. The whole trade war between China and the US is also helping us to secure more supply for Africa.
Premieres September 26th, only on Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
In case you missed it on the opening trade.
One of the words that we use as an organization is global trade is too big to fail. It's like water, it's going to find its lowest point, and there has been a shift in trade. So as an example, China-US was a big trade lane for us, and Asia-Pacific to US was a big trade lane for us. Well, now that's shifted to China and Asia-Pacific to Europe.
Yes.
So we have seen a shift in trade.
Don't miss the opening trade, live every weekday.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. The $1.7 trillion private credit market has seen fundraising slow in recent months. Defaults also beginning to creep up, prompting concern about underappreciated risks. Despite that, Anthony Tutrone, Global Head of Alternatives at Neuberger Berman, is predicting growth in private markets over the next 5 years will dwarf what we've seen over the previous 10 years. I'm pleased to say Tony joins us now from the EPEM Private Equity Conference in Paris. Tony, a broad question first. The Fed has kicked off its rate-cutting cycle. What does that mean for the private credit universe, given that much of it is floating rate?
Yes, so on one hand, it makes absolute returns lower, so you're going to be looking at slightly lower yields. But the best part of it is it's going to make it easier for companies to cover their interests. So those low rates will make companies more creditworthy and hopefully also spur some growth in the economy, which would also be helpful.
What stresses are you seeing in the system? We are seeing defaults creep up. Now they're still low, but we're not used to seeing defaults in private credit. We're talking about 2 to 3% and creeping higher.
Yeah, so I think Some of those are some very aggressive deals that were done kind of in the 2021, 2022 period. And it was mostly on the large end of the market. We're quite fortunate at Neuberger Berman. We really focus on the middle market. We have not seen that in our portfolios at all. And we also avoid some of the industries that are probably having more problems, facing tariffs than others. So I think the credit market on the private market side is going to be really about credit selection and about picking the right managers. But if you compare private credit to other areas of credit, I still think you're getting a premium return with similar or less risk. So compared to other areas, I do expect overall private credit will perform very well, even if we have a slowdown in the economy.
Tony, NB has been using some novel securitization structures in recent months, collateralized fund obligations, for example. What are the threats that come along with these?
So whenever you have new technologies that deploy leverage, there's always risk. So again, it really has to do with the underlying quality of the assets that are in these securitizations and making sure that your coverage is good, even in scenarios where you have distress, slow economic growth, or other factors. So I think the results are going to be mixed. Depending on the underlying assets. So investors in these types of transactions, I think, are really going to have to be careful about their selection of where they play. On the other hand, these are innovative structures that allow insurance companies and others to buy the types of securities that help them meet their portfolio goals. So overall, these innovations are good, but whenever you have new innovations, you will see winners and you will see losers.
Sure, and Isabel Samama of AXA just told our Kriti Gupta earlier that, you know, it could be the case that the fact that private markets and insurance companies are very closely linked now, that there might be systemic risk, maybe less so in Europe, but she pointed to the US as a place where there could be systemic risk. What are your thoughts on that?
Yeah, so whenever you have joint ventures, mergers, partnerships, some are going to be highly successful and some are not going to be successful. And it has to even do with things like culture, what are the goals and the parameters, and what are the risks that all the parties are taking. I don't see any huge systematic risks from my point of view, but I do see probably many of these partnerships may not achieve their goals, and I think there's already signs that some of them aren't. On the other hand, some of them will be highly successful because there is real synergies and real reasons why insurance makes a good partner with private markets and how they can help each other meet their goals.
Tony, what are your general partners telling you about valuations for the fourth quarter? Should we be looking at more markdowns?
Yeah, so I don't think so. I mean, right now, you know, private equity is always on a delayed. We have the second quarter numbers in. They're good. You know, not as good as they've been in some of the runs that we had in 21 or 22. But on average, portfolios were marked up. Less than 20% of buyouts were marked down. And I think right now, the economy is still pretty strong across the developed markets. Unemployment is low. Again, we don't see a lot of issues in the portfolios, although we are seeing slower growth. We're a very growth-oriented shop, and over the last 5 years, in the direct equity and credit investments we've made, which is 600-700 companies, they've been having double-digit top-line growth. The most recent couple quarters, we're seeing high single-digit in the companies that we're investing in. So I definitely think there's signs of some slowness in the economy, and I think that's something that we're going to have to watch very closely. But overall, I'm expecting valuations to continue to rise as these companies grow and the private equity firms implement their operating and strategic strategies to accelerate earnings growth.
Tony, I'm sure you're always extraordinarily discerning about, you know, who you choose to finance and so on, but you did mention a few times now winners and losers and picking, you know, very particular parts of the market. So where are you, you know, all in, and where are you avoiding like the plague?
Yeah, so We think that the benign economic environment that private markets have had for many years that gave them a bit of a free lunch is over, and that the dispersion of returns among different firms is going to be much greater. And we've seen that in the last 5 quarters of data that we track. We track thousands of companies, hundreds of funds, and we're seeing that dispersion occur. And so within the buyout world, it really is about, we think, making money by making your companies better. And so the firms that have deep vertical expertise and lots of resources to go into those companies and provide them with coaching, with resources, with infrastructure to accelerate earnings growth, they're going to be successful. It's a way to make money away from the market. We also have a bias towards the middle market. I mean, you saw in 2024, 6 firms raised 60% of the private market's capital. That was up from 20% 5 years earlier. So you got to follow the money flows in our business. I'm not saying that you can't get good risk-adjusted rate of return on the higher end. Those firms have lots of resources. They're investing in really great companies. But the middle market has a real opportunity because they're struggling to raise money. There's less money flowing there. It's going to be less competitive. And they are going to be able to build companies that I think the big guys are going to have to buy. Not only will want to buy them, they're going to have to buy them.
We'll get you back for an update on all of those companies very soon, Tony. Thank you. That's Tony Tutron there of Neuberger Berman in Paris. This is Bloomberg.
And we're seeing that dispersion occur. And so within the return on the higher end, those firms have.
In case you missed it on the close.
What is your top priority to fix?
We're building the foundation for growth this fiscal year. And we're also planting seeds to drive growth in the future. And so we believe that over the next few years, you will see a company that has stable earnings with top-line growth that delivers profitable bottom-line growth.
How do you sort of make sure that after I come and buy flowers with you for Mother's Day or Valentine's Day, that I'm also going to come back and think of you first, think of 1-800-Flowers first?
What I tell the team is, guys, let's focus on gifting, but also self-gifting. Sometimes we buy things for us. So that creates an opportunity to build a relationship with the customer longer term. And the new strategy is, let's be where the customer is. That means physical retail. That means marketplaces. We're trying to put our amazing products wherever the customer is today.
Don't miss The Close, live every weekday.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
I've never seen cash machines as lucrative as these companies are.
Just close your eyes and buy.
Many Koreans find this really shocking and unbelievable.
This needs to be a wake-up call for Europe.
You can have only one captain of the ship, and we are the captain of the ship.
You love it or hate it, you can't ignore it.
Insight with Haslinda Amin, only on Bloomberg.
Time now for your front page news. First up on the New York Times, a gunman opened fire at a Dallas ICE office Wednesday, killing one detainee and injuring two others. The gunman died of a self-inflicted gunshot wound. The shooting was the second at a federal immigration facility in Texas in recent months. Next up, the Wall Street Journal reports that Delta Airlines is replacing power units on more than 300 Airbus jets to address cases of toxic fumes leaking into the air supply. A Delta spokesman said it's about 90% of its way through the process of upgrading the engines. And on the FT, stablecoin issuer Circle looking at ways to make reversing transactions involving its tokens possible. Circle's president said a mechanism that allows money to be refunded would help the industry's mainstream push. Do stay tuned. This is Bloomberg.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
Day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. A potential mass layoff. The White House Budget Office tells federal agencies to plan for job cuts during a possible government shutdown. A bid for a comeback. Intel extends gains as it's said to have approached Apple to secure investment. And stock futures fairly steady after 2 days of losses. Jobless claims among data on deck as Daly and Goolsbee diverge on rate cut views. Let's take a look at those futures now, because we are lower for the most part, just very fractionally though for the S&P and the Nasdaq 100. 2 days of declines, but it doesn't even add up to 1 full percentage point. And I do want to point out that we're up 2 3/4% month to date so far for the S&P 500. So just a little pullback, maybe a little softer when it comes to risk sentiment. The VIX though is above 16, even if generally volatility indexes are trading near their lows across asset classes. Let's look at yields, because the 30-year is still below 475. In fact, down another basis point below 474 now. The 2-year and 10-year up very slightly, 360 and 413. We have the perfect guest to talk about all of this in just a moment. But before we get to Torsten Slok, let's get to some individual movers. Over to London and Valerie Teitel. Valerie.
Good morning. Let's start with a check on Intel. After Bloomberg reported they have approached Apple seeking an investment, investors are reacting positively to this report. The share up 3.8%. Now, sources have told Bloomberg that these two companies have discussed working closer together in the future. And this comes under the context, Vani, that Intel's chips used to be used in Apple's products up until 2023. Now, while investors think a return to using Intel's chips is unlikely, we're still reacting positively to the possibility of a possible investment. Let's move over to the car rental space. Hertz shares doing very well so far in pre-market, up nearly 4%. This comes off the back of a $250 million senior note offering that they announced yesterday in a private placement that would help them with a near-term debt crunch. So those shares reacting positively to this news. Lastly, let's go over to Sweden. H&M out with results this morning. Absolutely flying when it comes to their share price, up 8.5%. A large beat when it came to margins and its profit, really signaling that this rebound, turnaround is really looking good for the Swedish retailer. Vani?
Valerie, thank you so much. Valerie Teitel there. Torsten Slok of Apollo has been warning about the labour market for some time, and now is concerned the inflation trend is no longer in the Fed's favour. He writes, quote, "The more general story is clear that there is upside pressure on inflation from tariffs, immigration restrictions and a lower dollar." Torsten joins us now. He's chief economist at Apollo. Torsten, Austin Goolsby writing in today's FT that he could be less willing to support further cuts at future meetings because inflation is now headed in the wrong direction again. And you pointed out this week that 72% of components in the CPI are growing faster than the Fed's 2% inflation target. Should the Fed be done for the moment?
Well, the challenge for them at the moment, Vani, is that there are these impulses coming from tariffs is putting upward pressure on inflation. We also have upward pressure on inflation coming from the lower dollar. And we also have upward pressure on inflation coming from immigration restrictions and deportations, creating more wage inflation in the sectors where unauthorized immigrants are working. So these upside pressures are beginning to, unfortunately, become more sticky. And that's why the consensus expects inflation to be around 3% for the next 12 months. And that's significantly higher than the Fed's 2% target. So it makes sense that FOMC members such as Austin Goolsby today are worrying about that maybe we have a problem that inflation is unfortunately not quite trending down to 2% the way that we would all like.
So is it less likely we'll get 2 more cuts this year, do you think?
Well, I think the challenge for the Fed is that on the one hand, high inflation says that the Fed should actually be hiking. On the other hand, the labor market is weakening, as you also mentioned earlier, and the weaker labor market that we had, especially here in the last several months, is pointing in a direction that the Fed should be cutting. So which one is it? Where will the Fed put weight? Will they put weight on inflation being high, which argues for not doing much, meaning keeping rates at these more elevated levels? Or will they begin to cut rates further simply because they're so worried about the labor market and the softening we've seen? It's clear that Jay Powell, including in the speech here yesterday, has been saying, well, they are worried about the weakness in the labor market becoming more persistent, but it's all about how long is the shock coming after Liberation Day? Is the trade war something that just will take a few months and then we're off to the races again? Or is this something that has elevated uncertainty to a new level where companies are under more significant headwinds for a more extended period?
So if we're not sure which way the Fed is going to lean at the next meeting, what is 475 on the long end and what are we, 360 now for the 2-year yield telling you that the Fed will do this year?
Yeah, so that's why exactly the yield curve shape here is very important, because on the one hand, the dot plot is telling us that the answer to your question is that the Fed will be cutting more. That is their expectation. So we in the market should expecting front-end rates to come down. In the long end, in particular, if front-end rates come down very quickly, there is a risk that inflation could remain not only sticky at 3, but potentially go up even more, especially
touches on everything that we care about.
Because of the fiscal challenges, still exerting more upward pressure on the belly and in the long end, and yields therefore staying at high levels when it comes to 5- and 10-year rates.
And of course, all the other questions in the background too, like a potential shutdown, which looks more likely now, and of course, Fed independence. How far away are we from significant job market weakness, Torsten? I know you talked about wage pressures feeding into inflation. We also had the Fed chair talking about how AI might be playing a role in what we're seeing, and migration might be playing more of a role than we had thought.
That's exactly right. And the issue of migration is very important, because it is the case absolutely that border encounters are essentially zero. So that means that we've had a fairly sharp drop in immigration this year relative to last year. That does mean that there are simply fewer new entrants into the labor market. So simply because of lower immigration, we should also expect to see lower job growth. But the question is, and this was very importantly pointed out by several FOMC members, including by Neil Kashkari from the Minneapolis Fed, it is the case that it's not only lower immigration that has lowered employment growth. It is also a decline in demand for labor. So the fear that you can have is that the headwinds coming from tariffs, the headwinds coming from also student loan payments restarting earlier this year, are all at risk of putting further downward pressure on the labor market. So that's why the conversation around what should the Fed do, there are really a lot of question marks and uncertainties around the labor market trajectory and also the inflation trajectory. But they are telling us with the dot plot that we should continue to expect more cuts to come.
Governor Myron is coming up on Bloomberg TV in just a couple of hours. I want to ask you about his Economic Club of New York speech. What in there made sense to you, and what caused friction with your outlook?
Yeah, he has really put a very important foot down here in the discussion about what is the terminal rate. He did some work where he showed in a table in his speech and some calculations that he thought that the R-star and therefore where the Fed funds rate is going to end up during this cycle is dramatically lower than what basically everyone else on the committee has been saying. So that's why there's suddenly a whole new debate emerging around, well, maybe the current forward curves pricing that the Fed funds rate will end up at around 3, that maybe there are some arguments coming from him that maybe the Fed funds rate should be significantly lower. So that's why the direction of travel is that interest rates are going modestly lower here. But it all comes, as you also mentioned, at a tailwind. At the same time, in AI, we have a tailwind, of course, significant spending on energy transition, on climate, on infrastructure. All those things have to be weighed against each other and still argue here for slightly lower rates, but in my view, still rates that are significantly higher than where we were for the long period from 2010 to 2022.
Torsten, is it possible that this slowdown could be temporary, that things improve next year once particularly trade war dynamics at least settle?
That's exactly right, Vonnie. So this becomes hugely a function of how do we think about what role does the trade war have on the economy? Is it the case that after Liberation Day, yes, it was a bit of turbulent for the economy, and therefore we have seen consumer spending slow down. We've seen business spending outside of AI has also been slow.
To their clients to buy more chips.
NVIDIA chips are basically on sale for OpenAI. New Street Research says for every $10 million NVIDIA invests in OpenAI, the startup will spend $35 billion on NVIDIA chips. So basically, we're going to give you this money. You have to buy our chips. you're going to get them at a discount.
We've got a lot to talk about. Coming up this hour, Keith Lerner of Truist on another major AI deal. We'll speak to George Pollack of Signum on a divided Federal Reserve, and Ed Hosseini of Columbia Threadneedle as the US pledges support for Milei's Argentina. We begin this hour with stocks reaching fresh all-time highs following Nvidia's $100 billion investment in OpenAI. Keith Lerner of Truist writing, the bull market continues to earn the benefit of doubt, aided by S&P 500 earnings at record highs. The S&P is in a longer than average period without a 5% pullback, thus vulnerable to bad news. Keith joins us now for more. Keith, welcome to the programme, buddy. Let's get to it. This deal, Nvidia, a $100 billion investment in OpenAI. Are we looking at a house of cards or the real deal?
Yeah, well, first, great to be with you. I mean, it does raise a little bit of red flags longer term, but, in the short term, I don't think this really is a negative. In fact, it's a positive because it's going to float into earnings. And as you just mentioned in our write-up, I mean, the key driver of this bull market has been AI and tech, and the key driver for the overall market has been those earnings from these companies. And this isn't going to change that, at least in the near term. And then as you think about Jensen Huang and his projections for 2030, he thinks infrastructure spending is going to be, 3 to 4 trillion versus about 600 billion today. So does it raise some, eyebrows a little bit? Sure. But in the near term, I think this means that earnings continue to move up, and that continues to support this tech trade and the overall market.
Well, how sustainable, Keith, are those earnings, if those earnings are just off the back of some big investment from one big company?
Well, it is, to one big company, but it is also, I mean, at this point, we're also thinking that we're going to see this, broaden out. And even though these AI stocks have done really well, the infrastructure spend that I mentioned still has a ways to go. So listen, as we look at the overall market, if we overlay the tech market relative price strength to the overall market, and we overlay that with earnings, there's a very strong relationship. That relationship has shown no signs of slowing down. And ultimately, I think this spend will broaden out as well. So again, it's something that we're sticking with. We think that this, not only does the bull market deserve the benefit of the doubt, tech deserves the benefit of the doubt as well.
What would raise a red flag for you, Keith, given the fact that so many people who we've talked to say that they can't really even come up with a risk scenario that could stymie some of the gains that we've seen in big tech and the broader markets?
Well, it's what you just brought up, Lisa. I mean, expectations are high. If you look at most things, the market has been numb to negative news. So, maybe it's something from left field, but I'm also reminded by, Peter Lynch's old quote that more money has been lost in anticipation of the correction than the correction itself. This morning you all led with the amount of new highs in the market this year, 28 new highs for the S&P. When we test that out, looking at the fourth quarter, when you've seen 25 new highs heading to that fourth quarter, the fourth quarter averages a gain of about 5%. It's up about 89% of the time. Now, that's not a guarantee, but it does tell you that momentum that we see leading up into the fourth quarter tends to continue. Does that mean we're not going to see a hiccup, something that we're not talking about to kind of, give us all a gut check? We'll probably see one along the way, but I want to stick with that primary trend, especially as the economy, we think, actually moves up a little bit. We've seen the 10-year come down off the highs as well. We have the Fed cutting rates, and we also have the stimulus bill that's actually offsetting somewhat some of the tariffs. So all in all, I think it's a decent environment for risk assets.
And people thought that we'd get that gut check in September, and everyone bought that gut check, so we never had it. There is this question about also the Fed rate cuts and how much that's a supportive element to what we're seeing right now in markets. You point out that when the Fed is cutting rates, when markets are at all-time highs, stocks are higher 6 months, 12 months after that, 93% of the times. How much is this really supportive of any kind of bullish call? And even if you have some skepticism about some of the tech investments, Fed rate cuts can save it all.
Yeah. In our view, the Fed rate cuts are one factor of many. The North Star for this bull market, in our view, is still corporate earnings. If I think about this year, we're up 13, 14% with only one Fed rate cut because of technology. And if we put that $100 billion number from NVIDIA and OpenAI into context, I don't think a quarter or 50 basis points changes. I think where that rate change matters the most is for some of these smaller mid-cap companies that have more floating rate debt. And as you saw in July and August, there was some rotation into that as the rate cut. So I think those rate cuts are more important for the small caps and mid caps, but less important for the mega cap tech stocks, which have a lot of cash and cash flow positive.
You've been changing your mind on small caps, especially after this summer. What exactly is it about the small caps you like? Is it just the rate story in the Federal Reserve?
Yeah, well, our big picture theme, as I mentioned, is still is AI, tech, and we're still overweight growth and large caps. But where we were, really underweight small caps, we went to more of a neutral position back in August. And there's a couple different factors. One, they have underperformed by the most since 2000. They are relatively cheap. That hasn't mattered. But what has changed over the last few months is the earning trends have started to move up in a meaningful way. At the same time, we have that one big beautiful bill that has actually some incentives for more leveraged companies and capital depreciation as well. So I think that's a positive. We also have seen huge outflows out of small caps. So I think position is somewhat light. And the technical trends have improved. So we put that all together with a little bit of sprinkling of some M&A. We don't want to be underweight the group. Is it leadership? No. But we also know that, if you have like a 1% move out of NVIDIA, that's about 40 billion. That's 3 times the biggest small cap company. So we want to at least participate in that area of the market, especially if we see some bouts of, rotation later this year.
You still like gold as a diversifier. They also continue to hit new record highs.
क्रूड ऑयल ना बहुत ही ऐसा लग रहा है रेंज के अंदर ही फंसा है, कोई मोमेंटम ही नहीं कर रहा है खास. सपोर्ट ले तो लिया है, ट्रेल कर लेना. अब देखो ये काफ़ी लो लेवल से आया है बाइंग करके. निकलना होगा तो एक बार में निकल जाएगा. अब ज़्यादा देर होल्ड नहीं करना चाहिए यहाँ पे. और अगर अब नीचे आता है तो अब तो बिल्कुल भी दोबारा बाई करना भी मत, बहुत हो गया. ऊपर जाना है तो एक बार में चला जाना चाहिए, क्योंकि अगर ये निकला 5700 के नीचे तो ब्रेकडाउन ही हो जाएगा इसका सीधा. मॉर्निंग पे ऑलरेडी ट्राई कर चुका है, ओपन इक्वल टू हाई बनाई थी कैंडल, यहीं से चला जाना चाहिए था, नहीं जा रहा है. लास्ट टाइम ही है यहाँ पर, स्टिल इन रेंज, बट अब मत लेना. जाना होगा चला जाएगा, नहीं तो ऐसा जितना है लगा के छोड़ दो. $5,702 थोड़ा सा लगे, फ़ायदा भी नहीं है. जाना हो तो देखते हैं. इसको भी रिमूव कर दो. नहीं, वो आएगा ही नहीं उसमें. फिर भी 35 का राउंड है वो. 530 का राउंड अगर नहीं आता है तो फिर कैसे होगा. 25 से ज़्यादा लेना तो बेवकूफ़ी है. फाइव से ज़्यादा लेना भी नहीं है, इतना एसएल काफ़ी है. मोमेंटम नहीं आया तो फिर क्या होगा, ब्रेकआउट तो करना ही है. रेंज बाउंड ज़्यादा ही हो गया ना. देखो वॉल्यूम आता है, क्योंकि यहाँ पर तो होल्ड नहीं करना, बेवकूफ़ी है. ट्रेल कर लो उसमें. क्लोजिंग नहीं आई तो फिर जाएगा ही नहीं, तो वो ब्रेकआउट के लिए चलना जाएगा फिर तो इजीली. यहाँ पर भी है ना एक लेवल. मार्केट इज ट्राइंग टू गिव द ब्रेकआउट ओवर हियर.
Chris Waller, Mickey Bowman, they stood behind a 25 basis point rate cut. There's a signal in that.
10-year bond yields this morning down 2 basis points to about 412.73. Under surveillance this morning, a divided Federal Reserve.
We should be very cautious in removing monetary policy restriction.
The appropriate Fed funds rate is in the mid 2% area, almost 2 percentage points lower than current policy.
It's important that we stay restrictive to bring inflation back down to target. If we remove that restriction from the economy, things could start overheating again.
Leaving policy restrictive by such a large degree brings significant risks for the Fed's employment mandate.
So here's the latest this morning. Division at the Federal Reserve making itself known as traders await more Fed speak, with comments from Chair Powell expected later on today. Joining us now to discuss is Bloomberg's Mike McKee. Mike, there's a big difference at either end of the spectrum on the FOMC.
Yeah, we heard from both ends of the spectrum. Beth Hammack, Raphael Bostic, and Alberto Musalem are three of the hawkish members of the Fed. And they all spoke yesterday and all said basically the same thing you just heard from the Cleveland Fed Bank president. It's Stephen Myron who stands out, calling for much lower rates much faster, because his argument is that tariffs, taxes, and immigration have all changed the neutral rate for the U.S. economy. And it is, as you heard him say, much, much lower. There's not a lot of support for that. There are some people who think that the neutral rate has come down, but nobody's really putting a number on it like he is at this point. And I would point out, you just had a graphic showing that Mickey Bowman is speaking this morning at 9 o'clock, and she's speaking on her economic outlook. And since she's the closest one to Myron in terms of the distance between the Hawks and the Doves, it will be very interesting to see if she accepts any part of his argument and suggests that anybody on the board might be even close to his view of how much interest rates should come down.
Mike, can you just build on the debate around the neutral rate? Just how wide are the range of estimates currently at the Federal Reserve for precisely where neutral might be?
Well, the long-run neutral rate in the summary of economic projections is 3%. You can't really take that too seriously because everybody just kind of puts down a number there. But then when you talk to most of them think it's in that area. Of course, you can't really see what the neutral rate is. You can only observe it in hindsight, or as Jay Powell likes to say, we know it by its works. And so I think you've got big majority on the board thinking somewhere around 3, and some people think maybe 3 1/4. Some people think maybe 2.75, but nobody is saying 2 to 2.5% at this point.
Mike McKee with the latest. Mike, thank you, sir. Appreciate it. Let's run with the idea that we've got 2 different time horizons here between now and May, and then from May onwards. So that's basically the difference between a Chairman Powell Fed and Chairman Powell no longer being there. Let's deal with the next 6, 7, 8 months or so. This Federal Reserve, the last cut was the easy one. The closer you get to neutral, the more difficult it becomes. And I wonder how persuasive the Governor Myron argument's going to be for the remainder of the year and through early 26.
I thought Mike actually had a wonderful point, the idea of Beth Hammack, but then also Mickey Bowman, and how important it is to listen to how much credence she gives this argument of a neutral rate around 2% or even 2.5%. If she is amenable to that kind of idea, this could point not only to more reductions next year, but also to the Operation Twist that we've heard so much about.
To extend the conversation, George Pollack of Signum Global joins us now for more. George, welcome back to the programme. I mentioned those two different time horizons there. We've dealt with the first one, the remainder of Chairman Powell's tenure as the chairman of the Federal Reserve. Let's talk about the post-Powell world at the Federal Reserve. Are Governor Myron's thoughts a taste of things to come?
Yeah, I think any notion that a next nominee from President Trump will be someone not like Governor Myron, I think it's optimistic thinking. The reality is the president understands, having nominated Powell on his first term, that he needs to get people who agree with his preferred monetary policy on the board, and that should be the expectation by and large.
George, do you think he's purely on loan to fill this vacancy until end of January, or is he auditioning to stay on the Fed longer?
From my perspective, it has to be an audition. There's no way in the world he does not want to be a Fed governor for the 14-year term. He is auditioning, and he understands that while he's auditioning, he has to stay in line with the president. Even if these are his true beliefs, he's going to not deviate from the president and understand that if he doesn't do well, he can either lose his position on the CEA or not be nominated for a full 14-year term.
When it comes to thinking about the next Fed chair, do you get the sense that this administration is not in a rush because the Federal Reserve is moving in the direction that the president has been asking for months?
Yeah, actually, that's been a really interesting observation to see how, 6 months ago, it was all panic about who's the next Fed chair, and the administration seemed to be moving quickly, and there was talk of, an early nominee. That seems to have slowed down, and I would imagine that's largely in part because the Fed's moving towards it. Additionally, I think the president's taking some grace in the idea that at least he has Myron on the board, being his advocate at the FOMC.
There's also a question about the reaction function on the Federal Reserve, even with any kind of new Fed chair who is more amenable to President Trump's policies, what the response is to inflation that does pick up again or remains fairly high. And I ask this not through an economic lens, but through a political lens.
And I think that's one thing where I feel that the Trump administration is kind of sounding like the Biden administration of 2024, where they were all arguing inflation is transitory. Look at the fundamental data. The economy is good. There's no way we lose this election. The Trump administration seems to be making that same exact mistake, saying, no, our policies are actually working great. There's no inflation. Immigration is good. The tariffs are good. Everything is helping. And it feels like they're sleepwalking into the midterms, just like the Biden administration and the Harris campaign sleepwalked into 2024.
This is what a number of people have argued, that people in the community are feeling inflation much more than the idea of transitory that seems to be resurrected on the Fed, but also beyond. I'm just wondering, from the polls that you see, is there real credence to this? Is there an actual feasible opposition, a collective message on the other side that actually can disrupt some of the Republican presence in the midterms? Or is this just something to watch as we head into the end of this year?
So I think that's two separate questions. We're seeing in polling that the president is underwater on the handling of the economy and that American voters really don't like the tariffs. But the separate question is whether Democrats can establish a message saying this is how tariffs are raising prices. And I think that's more difficult because the reality is tariffs are a nuanced issue. And the president has a compelling argument saying bringing back U.S. manufacturing. And I think when the voters hear U.S. manufacturing or they hear, this is more of a tax, they kind of don't know what to believe, and they kind of just accept it and move on. That doesn't mean, though, that the president's handling of the economy is not going to cause them issues and not going to cause the Republican Party issues coming into the midterms.
George, there was a subtle sign just last week in reporting from the Washington Post that maybe Congress would begin to push back and look to provide exemptions for things like coffee. George, is that a one-off or a sign of things to come? Do you think maybe in the future we'll see a little bit more of that?
Look, I think the reality is, I know that was Don Bacon who introduced the coffee legislation. That bill's not going to pass. Speaker Johnson won't put it on the floor, and even if it gets on the floor through a discharge petition, Majority Leader Thune certainly won't consider it. And let's say on the event that it passes by some miracle, the president's going to veto it, and they're not going to have the supermajority necessary to overturn the veto. So I think for that's more just messaging to the administration saying, hey, you need to work with us on this. Please tone down the temperature. But in reality, as long as Republicans are in control, I would not expect pushback. And even if Democrats are to retake the House, for example, in 2026, I would not expect a Republican Senate to take up anything restricting the president's authorities.
George, appreciate your time, your input, insight, and your opinions, sir. Thank you. George Pollack there of Signum Global. That last point there, messaging may be. I think that messaging might get a little bit more stronger in the year to come going into the midterms.
Absolutely. And you mentioned this legislation potentially going to carve out for coffee. It was not just Don Bacon. It was also Ro Khanna. It was bipartisan. What do you think constituents are saying when they see their lawmakers and they see their representative? It's probably like, why is my latte $5 more than it was years ago? You said you were going to fix it. You didn't.
George alluded to something else, which is even when the Democrats, or if the Democrats do take control, it's not likely that they're going to roll back these tariffs either, just simply because, well, he pointed to the Republican majority. My thinking is it brings in a lot of revenues. And realistically, you would see a bond market tantrum if you just cut those revenues off completely and you didn't adjust to any of the spending plans. You put that together with potentially what could happen. This actually does come down to the Fed and the Fed's response to inflation, because I don't see another way.
Well, two things. Potentially, IEPA is going to strike it down, and then we might actually be left with this shortfall. But also, you mentioned this polling on inflation. Approval on inflation, Real Clear political polling average, 39%. 59% disapprove how they're handling inflation. And the president said himself, he won on the word what? Groceries.
So far, the bond market approves, to your point. So far, bond yields on 10s. 413. Up next on the programme, we'll catch up with the OECD chief economist Alvaro Santos Pereira. Three-day winning streak on the S&P 500. Slight pullback this morning. No drama. Down about 0.05% on the S&P. On the Nasdaq 100, totally unchanged. In the bond market, ever since the Fed met on Wednesday and cut interest rates by 25 basis points, yields drifted higher for 4 consecutive sessions. This morning, pulling back just a basis point. The 2-year, 359.45, just short of 360. But that 4-day run, the longest on the front end, going back to July. Ever since August, we've just had this very powerful rally at the front end of the curve. We just gave a little bit back over the past few sessions.
And maybe it comes with the whole idea of buy the rumor, sell the news. The idea that after Jackson Hole and the speech that we heard from Jay Powell, it was clear they were prioritizing growth and protecting the labor market above curtailing inflation. That run got essentially confirmed to some degree by the Federal Reserve, but maybe not as much as people expected. Maybe we're giving that just a little bit back.
That's the rate story. Stateside, push it through foreign exchange. Euro dollar very close to 118. Actually briefly had a stronger euro off the back of some strong data. The PMIs, Eurozone private sector growth, fastest in 16 months. That's the Eurozone PMI. Later on this morning, 945 US PMIs. I think that's an important data point. First real flavour of just how we're doing coming out of summer.
Especially given the fact that everyone's been talking about a manufacturing revival, and there have been signs around that, and yet the PMIs have been still coming in below the expansionary level. Do we see a shift in that, and how much can that support the idea that we're actually entering into a reacceleration, not the opposite? That's what a lot of CEOs have been telling us.
That's what the stock market's priced for into 26. The euro against the dollar, 117.92. That's the cross-asset price action. Let's get you some single names, some morning movers. Let's cross over to Danny with more. Hey, Danny.
Hey, John. We start with a company that IPO'd just last month to a lot of fanfare. Now it's trading below its IPO price. That's Firefly Aerospace, down a whopping 10% this morning. It had earnings after the bell. Of course, it's the first set of earnings since IPOing, a wider loss than expected. The problem for them, the CEO says there's demand, but they're trying to ramp up their actual supply to deliver out. So again, those shares sinking some 10% this morning. Elsewhere in aerospace, it is a good day for Boeing. Shares are up 3.6% after the U.S. ambassador to China, David Perdue, said that there was a huge order, that was his language, coming from China to Boeing, said that the president would like it and that China would like it. That would be a big deal for the two entities. Bloomberg has been reporting that China has been working on about a 500 aircraft order from Boeing. So maybe it is that order that is sending shares higher. Meanwhile, Kenvue, it is recouping some of the loss yesterday, well on its way to do that, up 5.9% after President Trump said yesterday that pregnant women should avoid Tylenol, or the active ingredient in it, acetaminophen, that of course is made by Kenvue. There's been a reaction from researchers afterwards, saying that the evidence isn't quite there. Citi writing that because of that scientific pushback and the limited judicial risk with no new evidence, they expect that Kenvue shares continue to rebound. John.
Danny, appreciate the update. That stock is up by 5.9%. More from Danny in the next hour. On our radar this morning, Nvidia set to invest up to $100 billion in OpenAI to build new data centers. The investment provided in stages will help power the future of artificial intelligence. Nvidia jumping nearly 4% in Monday's session. Elsewhere, world leaders in New York City, as President Donald Trump is set to address the UN General Assembly. Trump will also hold key meetings with leaders from Ukraine and the EU, plus a special summit on Gaza. And finally, all eyes will be on Fed Chair Jay Powell later today as he gives his first public speech since cutting interest rates last Wednesday. Investors will be looking for clues on the future of policy when Jay Powell speaks around 12:35 Eastern Time.
The future of policy until May of next year, perhaps. This, to me, is really the question. How much does anything he say really matter? Does he give a sense of what his personal view is? And how much are people going to be looking for a signal of the committee's pushback to Stephen Myron's views? Ultimately, is there going to be a litmus test in how convincing some of his arguments were to members on the board? We're thinking about that with Mickey Bowman. I'm also wondering whether Jay Powell is going to mention that at all today as well.
Well, what he said last week when he was Jay Powell, there are no risk-free paths. So he's likely going to say that again. He also said it's not incredibly obvious what to do. We have to keep our eye on inflation. I thought that was interesting what Myron said yesterday about inflation, indicating in the future, because they want to look like they're moving the goalpost too soon, in the future, he would be open to getting rid of that precise 2% inflation target. We could be looking at a very different Fed in 2026 and 2027.
Chairman Powell did a decent job of finding consensus last week when there probably wasn't any consensus at all. And what they all appeared to agree on was just the phrase risk management. What they all disagree on is how much risk there actually is and how you should manage it. And you're going to see that more and more in the speeches in the days to come.
Yeah, and especially if you have data that comes in better than expected, like so much of it has. How much does that kind of tie their hands to? If you start to get, for example, employment picking up, you get sort of a rebuttal of what we saw in terms of the summer weakness. Can they cut in October right now? The market is pricing in a 93% chance that they will. So a lot of room for disappointment right now priced into the Fed funds market.
Chairman Powell, 12:35 Eastern Time. Let's turn to the global economy. The OECD says the world has yet to feel the full impact of President Trump's tariff agenda. A new forecast is marking down global GDP growth to 2.9% for next year, despite a stronger than expected 2025. Joining us now to discuss is Alvaro Santos Pereira, the OECD chief economist and incoming ECB Governing Council member. Alvaro, welcome to the program, sir. Would love to get your thoughts on what's happening with the global economy, but more specifically on what's happening with Europe. The Eurozone GDP number is going to be closer to 1% than 2%. Alvaro, what is happening with the European economy, and why is the stimulus coming out of places like Germany not helping us get a better growth profile?
Well, thanks very much. Thanks for having me. Well, first of all, we expect that GDP growth in Germany will pick up and from 0.3 to about 1.1% next year. And this is because of this fiscal stimulus and the military spending that is expected. Remember, part of this fiscal stimulus has to do with infrastructure needs that Germany really needs, especially in areas of digital. And so I think it makes total sense. On the other hand, we see other parts of the European area, like France and Italy, growing relatively okay, but not spectacular. So Europe continues to grow around 1%, 1.2 this year, 1.1% next year. And so that means I believe there is more needs to be done. What can be done? I think Europe needs to improve its business climate. It needs to reform and reduce barriers to competition and barriers to entry in many sectors. And in particular, I think it's absolutely essential to what the Europeans say to complete the savings and investment union. What this means is that to create the conditions that so that venture markets and more equity markets become stronger and less, and the European firms become less reliant on banking financing.
Do you believe, based on the outlook for inflation, that there might be sufficient space for the ECB to provide additional support in the year to come?
Well, I think right now inflation seems to be on target, and I think it's always important to keep a buffer in terms of monetary policy, on fiscal policy as well. But I think the buffer is important because, as we saw in the last 5 or 6 years, we were hit several times with a pandemic, with a huge energy crisis, followed Russia's invasion of Ukraine, and recently the policy uncertainties around the tariffs. And with all these shocks, governments have to have some margin. Debts are very high, and we believe that it's on the fiscal side, the fiscal discipline is essential. On the other hand, on monetary policy, if you keep some buffers so that you have the room to maneuver in case of a shock, I think this is absolutely essential.
This goes to the question of whether the ECB wants to be a bit more accommodative or is open to that, or whether they want to keep their firepower. And this is important for you, not only as a chief economist of the OECD, but an incoming governing member on the ECB. And I'm just wondering how open you are to potentially cutting rates as soon as December, something that some of your colleagues have been open to, given the lack of growth and the lack of expectation of growth at a time where inflation doesn't seem to be materially picking up.
I think, as I said, inflation seems to be in a good place right now. It's important to say that the problem of Europe, lack of growth, is more to do with the reforms that have not been done, completing the single market, and working on many other areas of simplifying regulations and being able to bring a more general competitive environment rather than on the monetary policy front.
There's been a question around how some of the European economies have dealt with debt and deficit as well. A question of how much raising taxes is the correct measure for this issue, which has raised questions about the French government debt market, among others. How are you viewing the remedies that economies like the United Kingdom are proposing to raise taxes? How are you viewing that in terms of growth versus becoming more of a problem?
Well, we know that debts are at historically high levels in many European economies, not only. And we know that spending pressures are rising. There's more spending pressures for the military. There's more spending pressures for the green transition and the energy that is needed for AI. And there's more spending pressures with the aging of the population, which means that if you start already with very high debt levels and you have all these spending pressures, something has to give. And so going back to fiscal discipline, whether countries work on the tax side or on the spending side, it's obviously a personal choice for governments, and depending on the choices of a particular country. Having said that, we do think that in terms of spending, there's more that can be done in terms of spending reviews, reviewing procurement arrangements, establishing better fiscal frameworks in the medium term, so that there's margin also to do more in terms of spending. In terms of taxes, a lot of taxes do not have enough broad tax bases. There's more that can be done to reduce, to increase the tax base and reduce the rates. So I think there's margin that governments can do before they raise taxes in a significant way.
Your report says that we're going to see the tariff hit from the United States next year. But you're talking a lot when you look at Europe, how they need to think differently and enact reforms. Do you think the President Donald Trump's trade policy is forcing Europe to take major changes that actually will be good for them?
Well, I do think that Europe has to address reforms that have been postponed for a long time. Think about the single market. Europe is fantastic to produce nice reports. We just produced 2 really good ones on Letta and Draghi. But the problem that Europe has very often is that it doesn't follow through, does not implement those reforms and those reports. In particular, the single market was created in about 92. Big changes, creating a much bigger market for all Europeans. But on the other hand, there's many areas in services and transportation, in energy, in which there's not really a single market. So if concentrating on those reforms would be, for me, the priority. I think Europe needs to get its act together in terms of reforms. Of course, tariffs are a challenge, but I think the most problem in terms of Europe is the lack of reforms, and more needs to be done in that area.
Alvaro, do you see the ECB as an institution? Do you see it as their role to make sure there's sufficient discipline to push them to have an incentive to make those reforms? Do you believe that maybe some of the moves we've seen from the ECB in the last decade plus has perhaps taken some of the heat off those governments in a way that has been maybe undermined the continent and the broader economy?
Well, I think the ECB, with its studies and reports, can highlight some of the big challenges that we have going forward. For example, the aging of the population has a massive impact on our systems, tax systems and other systems. We also know that a big challenge in terms of AI. We just highlighted, in fact, in our report, big increase in digital investment in the United States compared to anywhere else, and there's not enough in Europe. What is the case? Why is this the case? And on the other hand, also in terms of the green transition, what can countries do? And so I think the ECB and central banks have an important role to play to highlight and to study, first of all, the problems, highlight possible solutions in the future. And I think the central banks need to look also to these long-term trends that are taking place right now in the world economy so that they are able to guarantee good monetary policy and guarantee financial stability.
Alvaro, just before you go, I wanted to squeeze in an important question. How you would characterize the balance of risk around the inflation story at the moment? Here in America, there is a focus on upside risk to inflation. In Europe, there's been a conversation about the continent potentially eating Chinese overcapacity, and those exports that would traditionally go to America to go to Europe and to other places. And the team here at Bloomberg has done a great job today of just breaking down how much we've seen an increase of exports from China to various regions. Do you see the tariff shock of the last year as potentially a disinflationary shock for the Europeans?
Well, the tariff shock is bringing more inflationary pressures in many countries. And we expect that many of these the tariffs, the effects of these tariffs have not been fully impacted in the economy. We have a graph that shows exactly what's the effective U.S. tariff rate and what is right now the current tariff rate in terms of the customs duties. And there's still a divergence between the two. What this means is that there's still a few inflationary pressures that will have to be embedded into the economy and will be incorporated by firms in the next few months. So we expect that there will be additional price impacts for firms, not only in the United States, but other parts of the world too. So I do think that the overall picture is one in which you have additional inflationary pressures from tariffs. And on the other hand, we have, even though service price inflation has been very sticky around the world, goods price inflation started to tick up a little bit, in particular in countries like Japan and a few others. Food price inflation went up quite significantly, and this is adding additional pressures on goods price inflation. So it's very possible, if this continues, that there'll be additional pressures and additional risks regarding goods price inflation in the foreseeable future.
Alvaro, appreciate your time. Thank you, sir. Thanks for making time for us this morning. Alvaro Santos Pereira there of the OECD. Let's give you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahara Anand for more. Hey, Yahara.
Hi, John. Hong Kong has issued its third highest storm warning as Super Typhoon Ragasa approaches after lashing the Philippines, which you can see there in that video. It is equivalent to a Category 4 hurricane, according to the local weather agency, and has caused major flight disruptions, closed schools, and businesses. It could potentially be the most damaging storm in the region since 2018. Meanwhile, here, President Trump is set to meet with Democratic leaders this week to discuss a funding bill as a shutdown looms in Washington. House Minority Leader Hakeem Jeffries and Senate Minority Leader Chuck Schumer requested to have the meeting with the president ahead of the September 30th government shutdown deadline. And in an interview with Times of India, JP Morgan CEO Jamie Dimon says he hopes President Trump and Indian Prime Minister Narendra Modi can reach a trade deal. Plus, when asked about the Trump administration's steep hike on H-1B visa fees, Dimon said he will be engaging with stakeholders and policymakers, adding that the move, quote, came out of the blue. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next, backstopping Argentina.
China has a foreign exchange swap with Argentina. Would you consider a credit line directly from the United States?
That's not under consideration.
Ed Hosseini of Columbia Threadneedle joins us next, live from New York City. This is Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast? Iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again, when we search for something, and when we find it, when we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Live from New York City, welcome to the program. Under surveillance this morning, backstopping Argentina. Here's the latest. President Donald Trump gearing up for a meeting with Argentina's President Milei today as the US is pledging, quote, large and forceful action to support Argentina's economy. Ed Al-Husseini of Columbia Threadneedle writing, it is difficult to make the case that Argentina is a systemically important economy. All economic interventions in Argentina over the past half century have failed. Ed joins us now for more. Ed, good morning. Good to see you.
Good morning.
Let's just sit on that point. Why do they keep failing? What is it about Argentina and the way it's set up politically that ends up looking like this all the time?
You know, it's an incredibly difficult mix and an incredibly difficult history, and they haven't really broken loose of some of the policy mistakes made back in the 80s to this day. And it's not clear if there's a path forward to do that.
There was one recent election that pushed back against Milei. Up until then, it felt like the market was very happy and comfortable with the reforms and some of his policies. Are we voting down his policies or voting down the individuals that might be coming through? What's this market actually responding to?
Again, it's incredibly difficult. Almost every election in Argentina, when they have an election, tends to be a change election. People are quite uncomfortable with the pace of change, with the sacrifices necessary for that change. Poverty in Argentina is in the 40s. And what markets are starting to get nervous about at the moment is the return of the previous administration, which was a lot less market-friendly, a lot more focused on state intervention, and quite negative for the currency.
Would you say that Argentina is uninvestable, even with any kind of initiative from the U.S. government, just simply because it's already defaulted 9 times on its sovereign debt going back in its history?
I mean, this is super tricky. Argentina is investable at the right price. And the difficult environment that they are in at the moment from an investment perspective is their bonds had priced in their hard currency, the dollar bonds, had priced in a lot of good news just a month ago and have been going through a shock. Faith in Milei's ability to carry on the reform program is fading. Faith in the currency stability program is fading, which means they're losing dollars to support that program. And that ultimately translates into an inability to repay their debt. And so that's the dynamic we're in right now. At the moment, it's very difficult to invest in that debt. But there will be a time when it will be once again attractive.
Well, let's broaden out this idea of, can the U.S. government pick winners and losers? How much does that really change the investment landscape for you when you're looking for developed markets to invest in at a time where a lot of people are saying a rate-cutting cycle around the world, positive typically for these economies? How much does that distort where you're willing to look?
You know, from a credit perspective, these intervention programs, particularly IMF programs, tend to be very important backstops. One, they provide dollar liquidity, which the U.S. government looks set to do here. And two, most importantly, they provide a straitjacket in terms of policy settings. To the extent that Argentina needs fiscal reform, they need currency reform. The ability of the IMF in particular to impose that is very powerful. I think, unfortunately, in Argentina's case, that history is very murky. There's a lot of failures in that history over the course of the past 50 years. And again, they are in an IMF program currently. They've borrowed well in excess of $100 billion from the IMF over the past decade. Will this particular intervention lead to success long term? Probably not. But in the short term, it definitely helps.
In the short term, could it change political concerns around the October 26th election in Argentina?
Probably not. The short-term fix here is the currency is under depreciation pressure. And so they need dollars to defend that currency. Markets have a way of sniffing out that support as being temporary and overcoming it. And so it's very likely that the currency will remain under pressure for the foreseeable future until that election is done, until markets get a view of what policy looks like in the coming years.
So what's in it for the U.S. if they're not going to get this win potentially for Milei in October? Doesn't this put them in a very vulnerable position?
It's an extraordinarily difficult question. I think a lot depends on how this program is designed. The Treasury's Exchange Stabilization Fund usually works through the IMF or in tandem with the IMF. It's rarely used on its own. If this is part of an expanded IMF package, it might provide a little bit of support. It might provide a little bit of fiscal room for the government heading into this election. But the election's in October. There's not enough time to change that dynamic at this stage.
Is this a broader EM problem or just an Argentina problem? Because hopes for EM more broadly have picked up quite recently.
This is, I think, a distinct Argentina problem. One of the fantastic things about EM and these developing economies since the Asian financial crisis really has been a lack of crises. Crises have become exceedingly rare. Financial crises are exceedingly rare. They run policies that are a lot more sophisticated in terms of monetary and fiscal policy. It's a much more credible group of policymakers in charge of these economies at the moment versus where we were, let's say, in the late 90s.
This story at the epicenter of meetings taking place here in New York City this week. Milei meeting the president, Donald Trump.
I wonder what parameters there are on any kind of support lines that the U.S. gives Argentina in terms of those straitjackets that Ed was talking about on policy. That, I think, is something to watch out for.
Ed, it's good to see you. Thanks for dropping by.
Thank you.
And discussing this topic. Thank you. Ed Al-Husseini there of Columbia Threadneedle. Coming up next, Lisa Shannon of Morgan Stanley, the former U.S. Deputy Treasury Secretary Wally Adeyemo, the EDP CEO Miguel Stilwell Dondrad, and Kristen Bitterly of Citi Global Wealth from New York City. The second hour of Bloomberg Surveillance up next.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level, being open to comments, feedback, discussions. There's always this back and forth workflow. Sometimes conversations with different people might open up ideas to explore.
Embrace a growth mindset. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
There is this hopefulness in equity markets that we are going to get through all the risks.
We're not back to U.S. exceptionalism, but there is some demand coming back.
We're seeing more signs of corporate confidence.
I feel pretty comfortable with where we are now.
If you look past this year into next year, we do see earnings improving. We don't see significant catalysts for destabilizing.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 shaping up as follows. On the S&P, down by not even 0.1% following 3 days of gains on the S&P and a 28th all-time high. In the bond market, 4 days of higher bond yields at the front end and the long end on 2s and 10s. This morning, we're back away. We're down a basis point on a 2-year at 359.24. Shaping the outlook for this particular bond for this particular session is going to be this man right here. Chairman Powell speaking later on this afternoon around 12:35 Eastern Time. That's the address to watch on a week full of Fed speak.
Yeah, how much does he really push back against some of what we were hearing in terms of how much the Fed could potentially cut in the next 6 to 12 months? How much does it matter? What does the market actually believe, given the fact that he's going to be out in May? I think there's a bigger question underpinning his speech and underpinning all Fed rhetoric right now, which is how much do Fed rate cuts matter in supporting record high after record high? Is it independent of that expected rate cut path, or is it predicated on that? And that I think we have to answer.
And I also wonder if Chair Powell is going to maybe, at least on the margins, challenge what we heard from Steve Myron when it comes to how deep they need to cut and how fast and how different you basically have. Almost it feels like two different heads of the Fed. Steve Myron probably is not going to be the Fed chair, but he certainly represents the direction of travel of 2025 and 2026.
Everyone seems to be comfortable with where policy's at, and they're looking for a better 26, and they're chasing this market. Alexandra Semenova of Bloomberg put in this piece together today. The record-setting advance has pushed the S&P nearly 3% above the average year-end forecast of those tracked by Bloomberg, which currently stands at 6,486. Only in 24 and 99 have the calls lagged the market's actual return so much around this time of the year.
So if you wanted to know why a number of Wall Street banks, I'm not going to name names, have rejiggered their year-end forecast 4, 5, 6, 7 times, it is because of this. They keep getting left in the dust by how quickly the market is going up, which raises question, is there anything that could torpedo this Teflon market, or is this essentially immune to any shocks based on tech spending and based on rate cuts?
When it comes to tech spending, though, you both mentioned at the top of the last hour, this circular environment we have. It's a self-fulfilling prophecy right now, it feels like, in the AI world, which is bleeding into the financial markets. NVIDIA giving OpenAI an investment to what? Just send it back to them, buy chips. Basically, you're just going to get a little bit of a discount.
So NVIDIA rallies, and that's exactly what we saw in yesterday's session this morning, down by about 0.8%. Coming up this hour, Lisa Shallett of Morgan Stanley. With Wall Street on a record run, we'll catch up with the EDP CEO, Miguel Stilwell d'Andrade, as the US energy costs jump on AI demand. Plus, we'll catch up with Kristen Bidley of Citi as a newly minted Fed governor calls for bigger rate cuts. We begin this hour with stocks near record highs, following NVIDIA's $100 billion investment in OpenAI. Lisa Shallett of Morgan Stanley writing, US equities are increasingly pricing perfection, based largely on assumptions around Gen AI spending. With valuations rich, room for disappointment is very limited. Lisa joins us now for more. Lisa, good morning.
Good morning, Garth.
I know you don't typically do single names, but can we just pick out that deal in the last 24 hours? A $100 billion investment from NVIDIA into OpenAI. Some people scratching their heads and saying, is this just a house of cards, or is this just the beginning and you shouldn't fight it? How do you approach this situation?
Yeah, so it won't surprise you or many viewers who know we typically are a little bit more cautious, that we view this with a little bit of skepticism. You know, it's very interesting when NVIDIA did the spinoff of CoreWeave, which is, you know, kind of a data center operator. We felt like this was a little bit of a way of, you know, we don't want people to start asking questions about whether we're selling to ourselves or whether it's arm's length. There's something about this that is starting to smell very 99, 2000. And so, you know, look, the market right now, I think, is running on the sentiment. It's running on the fumes. It's very hard to stand in front of that. And I think that, you know, sometimes the bull case is the lack of a credible bear case. And I think that's where we are at this very minute. But the skepticism, for me at least, is growing. And so our response to that is to try to invest a little bit away from the epicenter, right, and to diversify away from that Mag 7 and say, yeah, we know that they're the epicenter, but they're probably over-owned and a little sizzly.
Well, let's stay on the bull case for now. And I think you understand it well. Cyclical recovery, pick up re-acceleration in 26, driven by this monster capex boom. What is it about that, the fundamental pieces of the bull case, that don't sit well with you?
So I think fundamentally, when we look at this capex boom thesis, a lot of folks think that somehow this just began and was ignited by, you know, our recently passed tax bill. Our thesis has been we've been in a capex boom, quite frankly, since the government ignited spending after COVID. So we had the infrastructure bill, we had Inflation Reduction Act, and so we've had a capex boom in the United States. Our best guess is we're actually in year 4 of this. And so if you look at Mag 7 capex spending, it has massively accelerated since 2022, but it began in 2022. And that's one of the reasons that earnings actually tanked in 2022, is those huge negative free cash flow. And we're approaching negative free cash flow amongst growth, negative free cash flow growth, I should say, among that cohort. So our belief is we're a lot closer to the 6th or 7th inning than the 2nd inning on this capex spending boom.
You said something that I had to write down because I thought it was so good. Sometimes the bull case is the absence of a bear case. And this raises the question of what the main risk here is. Is it potentially missing out on the upside, as John has laid out for many times before, the career risk of not getting that rally and not capturing it? Or is there actual true downside that you see potentially emerging from what does feel like it's getting into the later stage of the cycle?
Look, I think we do think that the return profile of this market is completely asymmetric, and you could easily see this market pull back into a 20% technical bear market simply if earnings miss. Right now, so much is hinged on this idea of accelerating earnings, of operating leverage, of expanding margins next year, and that we're going to get this 13 to 14% earnings growth in an economy that may only be doing 4 or 5% nominal top line. That's a lot of operating leverage. And so, we think that this is, as I said, priced to perfection. And so earnings misses, I think, are really the thing that could get people's attention here. We know that the news headlines have not been the source of catalysts of late.
Which points to a potential protection in portfolios. It's been gold more than anything else.
Yes.
It hasn't been necessarily long-term bonds, although increasingly people are starting to nibble on that. How do you see the relationship between monetary policy, the rates backdrop, and any potential pullback in the S&P 500?
Look, whenever you have a real sudden pullback in stocks, bonds do work. They really do work as a diversifier. People do immediately rotate in portfolios. And I think that they will continue to play that role. But not having that obvious catalyst in front of us, we like real assets better as a diversifier. So we are talking about gold in the intermediate term. We are talking about REITs. We are talking about commodities. We are talking about energy infrastructure assets as maybe a better diversifier in the intermediate term than long bonds.
You said news headlines have not been catalysts of late. Do you think the markets have really started to understand the president and the direction of travel, where he's going, as opposed to earlier in the year when every other word out of individuals' mouths was we're concerned about policy uncertainty?
So based on my conversations with investors and clients, I don't think it's a question of investors deeply understanding the direction of the president. I think it's investors deeply, dismissing it and saying, I'm looking through all of this, and I'm looking through all of it because there's a good portion of it that ultimately may not be fully implementable because it will be challenged in court, or I'm looking through all of this because, there's even odds that sometime in the next 3 months it'll be pivoted and reversed. And so there's almost a cynicism, I think, about the headlines. I'm not encountering a lot of deep analytic thought about, oh, goodness, I read those headlines and I know exactly what's going on. I'm changing my forecast for this, that, or the other thing.
Is there something, though, in the policy sphere that would give investors pause and not want to just look through the rhetoric out of Washington?
Again, I think it's how policy is playing through to actual results. One of the things that's given the market, I think, confidence to say things like tariffs don't matter, or immigration doesn't matter, or some of these other things don't matter, is it hasn't really shown up in a big way in the numbers. And I think if, in fact, it does, and that's what we're looking for. We're looking for next year where those earnings disappointments come from. They come from the fact that companies actually can't make the margins because they actually are eating the tariffs. I mean, the money that's coming into the Treasury on tariff revenue is coming from somewhere, right? And we're going to have to ultimately attribute it. And I think that thus far it's been absorbed by a good portion of small and mid-cap companies and their margins. And I think ultimately, as we get into 2026 and you fully realize what is a six-fold increase, right, from an effective tariff rate of 3 to a likely effective final tariff rate of somewhere around 18, that's going to hit margins, at least in a couple of those manufactured goods sectors.
Elisa, can we just finish with how you describe conversations with clients at the moment, and what would be the more dominant sentiment? Is it an anxiety to get out or a fear of missing out? What's the more dominant sense of things at the moment?
Yes, so right now it's about getting out. I think we're having a lot of meetings with clients who now have been extraordinarily pleasantly surprised at where they are. Here they are. It's September. They're up 14%. They thought, oh my goodness, maybe nothing. Certainly back in March, they were, underwater. And there's a lot of folks saying, what should we be looking for? How do I know when? Of course, our job is to keep people in the markets and discourage market timing. But I think that there's a lot more anxiety building among folks in the market saying, oof, this is feeling a little bubbly to me. Gosh, the market's going up every single day.
Trying to work out if that's bullish or bearish now after hearing that.
Yeah, exactly.
Honestly, the fact that there's skepticism makes me think this can go on for a lot longer. So I don't know that this is exactly something to say.
Yes, this is not the catalyst. No. This is not it.
Lisa, appreciate your thoughts, as
Absolutely.
always.
Thank
Good to touch
you.
base with you. Thank you. Lisa Shallett there of Morgan Stanley. Let's give you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Yahara Anand. Hey, Yahara.
Hi, John. In a blockbuster AI deal, NVIDIA is set to invest as much as $100 billion in OpenAI to support new data centers and other AI infrastructure. The agreement will help OpenAI build the data centers using NVIDIA's advanced AI chips. The investment will be provided in stages with an initial $10 billion. NVIDIA shares popped nearly 4% yesterday on the news to close at another record high. Meanwhile, the White House is banning the Iranian delegation in New York here for the UN General Assembly from shopping at wholesale clubs like Costco or buying luxury goods. The State Department saying it will not allow Iranian elites to, quote, have a shopping spree. The delegation's movements are also restricted while they're in town. And Spirit Airlines is cutting flights and placing about 1/3 of its flight attendants on furlough. The budget carrier has filed for bankruptcy twice this year, and the cuts are part of a restructuring and cost reduction plan. And pilots could be the next group to see cuts. Spirit saying it wants to find $100 million in cost savings from pilots. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, President Trump returning to the UN.
At the center of our vision for national renewal is an ambitious campaign to reform international trade. I will never fail to defend America's interests.
A conversation up next with the former U.S. Deputy Treasury Secretary Wally Adeyemo from New York City this morning. Good morning.
A powerful pitch can unlock transformative growth. Having at least 1 million pre-launch equips companies with a 25% higher likelihood of success.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey. Not just my own area of physics, but things on the business side.
The right expertise can move your business forward. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Live from New York City, welcome to the program. Equity futures on the S&P shaping up as follows, following 3 days of gains on the benchmark stateside and another all-time high. We're down 0.1% on the S&P. On the Nasdaq, we're down by 0.1% also. Moments ago, Morgan Stanley's Lisa Shallett describing things at the moment as maybe a little too sizzly, getting close to the 99 type kind of stuff that she was thinking about.
She said we're one bad earnings report away from potentially even a 20% pullback just because everyone's loaded on one side. At the same time, you asked her, what did clients say to her? They talk about getting out, which makes me think this probably has more room to run. It doesn't seem like this is exactly a runaway train with no skepticism.
More anxiety to fuel the fire, maybe. I don't know. Nasdaq futures this morning down about 0.1%. Under surveillance this morning, President Trump returning to the UN.
At the center of our vision for national renewal is an ambitious campaign to reform international trade. The American people are absolutely committed to restoring balance to our relationship with China. I have made very clear I will not accept a bad deal for the American people. I will never fail to defend America's interests.
So here's the latest this morning. President Donald Trump speaking to the UN General Assembly at 10:30 a.m. Eastern Time. The president addressing the group of world leaders for the first time of his second term. Bloomberg's Tyler Kendall joins us now for more. Tyler, good morning.
Hey, John, good morning. There's a few different threads that we're following on the policy front when it comes to this speech. Of course, two conflicts expected to take center stage. One, the war with Ukraine, as President Trump is set to meet today on the sidelines with Ukrainian President Zelensky, and our allies are urging this White House to commit to firmer security guarantees. And the second, the war between Hamas and Israel, as several U.S. allies have moved to recognize an independent Palestinian state in recent days. We are expecting President Trump to use this speech to defend Israel's right to defend itself. I'll also quickly mention that domestic politics will probably make their way into the president's remarks. The White House previewing it to us here at Bloomberg that he will call on other countries to tighten their asylum restrictions, ultimately in a bid to try to curb immigration in the long run to the U.S. But John, for context, hovering over this backdrop, the context that President Trump is speaking against is that the U.S. has been the largest financial backer to the United Nations, and President Trump has made clear he doesn't feel that the organization has been serving the U.S.'s purpose. In fact, the U.S. has actually stopped paying its bills completely to the United Nations since January when President Trump took office. Combine that with prior delinquencies from other administrations, and the U.S. is currently on the hook for $3 billion in dues to the United Nations. Our analysts at Bloomberg Economics do point out, though, John, that either way, with or without the U.S., the UN is in trouble. The Secretary General in January had declared a liquidity crisis, and it's currently trying to cut about a fifth of its staff.
Tyler Kendall with the latest here in New York. Tyler, thank you. Joining us around the table, the former Deputy Treasury Secretary, Wally Adeyemo. Wally, good to see you, sir.
It's great to see you as well.
You co-authored a piece recently in Foreign Affairs, the title of which reads as follows: "The world economy was already broken, but there is a better way to fix it." Can we address the broken piece first? What's broken about it? What was broken already?
At the core of what was broken was China's use of anti-competitive behavior to manipulate the global trading system. And this is exactly what needs to be addressed. And I think President Trump has a choice. He can try and do what former presidents, including himself, have done, which is negotiate a bilateral deal with the Chinese, or he can work together with our allies and partners to put together a set of policies that will hold China accountable and lower tariffs on each other. And I think that's the choice that the president faces at the moment.
John mentioned this earlier, and you mentioned it in your piece about China basically dumping on other markets, especially since the barrier of entry has gone up so high in the United States. Isn't that going to force countries like what Mexico is attempting to do, force countries to take on China themselves and basically do what you're saying, a collective unity against China?
I do think that gives the president an opportunity, because if you're in Southeast Asia today, you're in Europe today, you're seeing Chinese overcapacity wash over your shores, ruining your manufacturing sector. And the question is, what can you do? And alone, it's hard for them to stand up to China. But working together with a large ally like the United States is possible. But ultimately, the thing that I found with all these countries is that they move when there's a leader, and the United States needs to be that leader. So if the president calls on them to work together to hold China accountable, I think it's possible. But left to their own devices, it's really hard to stand up to a big country like China or the United States.
But the Biden administration tried a multilateral approach, and it didn't work.
I think the difference now is that the president has changed the global trading system by putting tariffs in place that have reordered things. And while it's created a lot of challenges, including headwinds here for consumers and for the economy, it now creates an opportunity because something new has to happen. And that's what we talk about in the piece, that ultimately now the president has the opportunity to either say that we can all work together to make sure that China's anti-competitive behavior stops, or we can try and negotiate with China unilaterally. The unilateral approach hasn't worked in the past.
At this point, though, how do you work together
with other countries when everyone is skeptical of one another, and essentially you're forcing them to take a side, because ultimately a lot of countries, as you mentioned, are scared of China just as much as they're scared of the United States.
I think you're right. There's a great deal of skepticism out there. But when you look at the global economy, it's still concentrated in the hands of countries that should be our closest allies, the G7, make up almost 50% of the global economy. If we were to act together, only the G7, it would be a large enough bloc to put real pressure on the Chinese. So we're calling for the president to start with the countries that we're closest with. And ultimately, the goal has to be that we create an economy that not only works better for the United States, which it should, but works better for other economies also, because the more trade that you do, if you're a country, the less aid you're going to need in the future. So the key now for the president is to talk to these countries who ultimately need the United States, frankly, because we are one of their biggest consumers in the world, to try and work with them to put pressure on the Chinese, because the unilateral approach, previously at least, hasn't worked.
I just am wondering how much the world order has already changed and already shifted away from the United States being able to play the role in the way that it could have even a couple of years ago. The idea, for example, of the Ukraine-Russia war and the repatriation potentially of some of the holdings, and how much that's shifted foreign currencies, foreign governments to buy gold and diversify away from the dollar. Is it too late?
I think everybody always says that, but in 2022, I was looking at what should we do with regard to Russia when they were thinking about invading Ukraine, and the Russians had moved a bunch of their assets, but more than 88% of Russian bank transactions on one side was still the dollar. It's really hard to get away from the U.S. economy. We're the biggest economy in the world. We're the biggest trading economy. And while that is shifting over time, I think this is the moment for us to try and make sure that we build a system that works better for us going future. If we wait too long, and we say this in the piece, China's use of anti-competitive behavior will fundamentally have changed the global economy in a way that will make it harder for the U.S. to win going forward. And not just the U.S., but for other economies as well. That's why what we do over the next few years is critical.
While you've been in the room, the president truths a lot about how annoyed he is with Europe that they continuously buy Russian fossil fuels. It's been very hard for them to really divest away. How difficult it is to deal with the Europeans?
It is hard, but I think the U.S. has a lot of leverage here, especially over one of the countries that's doing this, Hungary, who's a big purchaser. And I think fundamentally one of the things we've got to do is work with Europe to both end their purchases of Russian energy. We did a lot to do that in terms of providing Europe with LNG to replace Russian energy. But we've also got to take actions, not only against India, but against China, who's a huge purchaser, but also a huge seller of the goods to Russia that they need to build the weapons they want for this war in Ukraine.
These stats on Chinese exports are just phenomenal. This came from the newsroom this morning. On track for a record $1.2 trillion trade surplus coming out of China. And if you look at the exports to India, record high in August. Shipments to Africa on track for an annual record. To Southeast Asia exceeded their pre-pandemic era peak. Just figure that out. We're talking about massive numbers of Chinese product that's just being now dumped on the rest of the world. And you're going to find out whether they'll come along for the US or not for the ride, because it's really important. You said Mexico. I wonder how many people follow Mexico.
Yeah, and I'm wondering about, for example, European auto manufacturers, considering how many electric vehicles China has been offloading to Europe. On the flip side, it hasn't been supporting the Chinese economy. They've been in a deflationary spiral. There's a lot of questions about how much these are unprofitable goods. There are a lot of questions economically that are underpinning this as well.
Wally, it's good to see you.
Great
as always. Always diplomatic. Thank you, sir. Wally Adeyemo there, the former Deputy Treasury Secretary. Up next on the programme, Miguel Stilwell Dondrad, the CEO of EDP, on the race to power artificial intelligence. Plus, Danny has your morning movers. AutoZone shares falling following their latest earnings. That stock is down 2%.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
The president speaking later on this morning, a preview of that speech coming from the press secretary Caroline Leavitt just moments ago. President Donald Trump will highlight the return of American strength during a speech at the UN General Assembly while delivering blunt and tough talk about the failures of globalism. All of that still to come in the next few hours.
Yeah, the president's set to take the stage at 9:50. We're probably going to hear a little bit of what Trump said back in his first administration when it comes to the United Nations, but also going against the globalists, kind of what he said likely when you and Lisa were at Davos earlier this year, and basically talking about how, at least in America, they've rejected that world order for now.
Back in the day, 2019, in the first term, there would be people in the audience sneering at the president as he made these points about what the Europeans needed to do to change. He'd talk about European energy, the relationship with Russia. I don't sense the same sneering this time around. Many years later.
There's a different landscape, and I think that there is a greater rejection of some of the old norms. I think we're in a new normal, and the question is how that's going to get rejiggered and exactly what kind of leadership is going to be provided for that next phase.
That's the policy talk coming up later on this morning. In the market at the moment, equity futures pulling back by just 0.1% on the S&P following 3 days of gains on the S&P 500. On the Nasdaq, down by just 0.06. In the bond market, 4 consecutive days of high yields following the Federal Reserve decision last Wednesday to reduce interest rates. This morning, we pulled back by just a basis point on 2s, likewise on 10s. We're down to 412.93 going into Chairman Powell later on this afternoon.
How much does this really become the new stasis as people try to understand exactly what the balance of opinions is on the Federal Reserve? I think the big question, not just for Jay Powell, but for some of the other speakers is, particularly Mickey Bowman, who speaks in about an hour and a half, how much do they push back against the view of the world that we heard from Stephen Myron, and how much do they embrace this idea that the neutral rate could be significantly lower?
Chairman Powell at 12:30 Eastern Time as we count you down to the opening bell about 2 hours away. Let's get you some morning movers. With more, here's Danny. Hey, Danny.
Hey, John. Boeing shares are moving higher this morning by more than 2%, with the U.S. ambassador to China, David Perdue, saying that there was a huge order in the works from China to Boeing, saying that it would be a big deal for the president and a big deal for China. Bloomberg did report last month that China was working on finalizing an order of about 500 aircrafts from Boeing, so that could be this deal. Again, with shares rising this morning. Elsewhere, Kenvue making the work to snap back some of the losses it had yesterday. Shares are up just under 5%. They fell yesterday after President Trump said that pregnant women should avoid the active ingredient in Kenvue's Tylenol, which is acetaminophen, but there has been a little bit of pushback from the research community. Citi, for example, saying that no new scientific evidence was offered and there is limited judicial risk from the announcement, so they expect shares to come back. Finally, a little bit of earnings this morning. AutoZone reporting they did beat on their comparable sales. Net sales, though, that was a miss. And notably for them, margins were a miss. And maybe even more notably, they had a really, really big inventory buildup. It was 14% higher than at this time last year. That far exceeded analyst estimates. Just shows you for these companies that are having to import parts how difficult it is to grasp the inventory picture and how much they should hold. So those shares down more than 2%, John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. On our radar this morning, Nvidia investing $100 billion in OpenAI to expand the fleet of data centers that power ChatGPT. The Nvidia CEO, Jensen Huang, saying it will be the biggest AI infrastructure project in history. Elsewhere, U.S. Treasury Secretary Scott Bessent pledging support to President Javier Milei to keep Argentina from falling back into financial crisis. The announcement calming investors and prompting a rebound in Argentina's assets. And finally, President Donald Trump talking with Democratic leaders as soon as this week about a funding bill. House Minority Leader Hakeem Jeffries and Senate Minority Leader Chuck Schumer requesting the meeting ahead of the September 30th shutdown deadline.
What's interesting about this is that you have these 3 New Yorkers getting in the Oval Office. Maybe they can hash out a deal. But it remains unclear whether the Speaker, Mike Johnson, and the Senate Majority Leader, John Thune, will be there to represent their case in Congress. We're a week out from the government shutting down. Or will Trump be left almost to his own devices to try to go into this, to negotiate with the Democrats, himself from the executive branch.
I'm old enough to remember when people used to care about government shutdowns. Right now, there's almost a 70% chance baked into some of the prediction markets that the government will shut down. It's almost expected that there will be some sort of shutdown. And people are saying, well, unless it goes on for a month, 2 months, 3 months, unless we're 6 months out and we don't have a government, then we'll start to care. I mean, it just highlights how policy insensitive this market has become. And I think that that is a notable takeaway from this.
The shutdown is a political event and not a market event. And we've all been conditioned by experience to believe that. That's what we've lived. Why would that change anytime soon?
Well, if it carries on for long enough, there is actual financial repercussions to this. And potentially they're even greater should there be a rejiggering of some of the power lines. But, you know, I'll go with that. Maybe there's nothing.
There we go. Let's move on and talk about a different kind of power line. Let's turn back to AI. Nvidia pledging to invest $100 billion in OpenAI to help build new data centers. According to the Energy Information Administration, US electricity prices are up 10% from January to May of this year, due in part to massive spending and higher demand. Miguel Stilwell d'Andrade is the CEO of EDP, one of Europe's biggest wind energy developers, with projects also in the US. Miguel joins us now for more this morning here in New York. Miguel, welcome to New York. It's good to see you.
Thank you. It's a pleasure to be here.
Thank you for being here. Let's talk about the US market. Your outlook now compared to where it was maybe 5 months ago. How have things changed?
Well, I think the situation has become much more stable. I think there was a lot of uncertainty, certainly at the beginning of the year in terms of the policies. And so I think now we have at least visibility with the big, beautiful bill and also with some of the guidance from the IRS in terms of the growth for the next couple of years in renewables in general. So solar, batteries, wind. As you know, we have 10 gigawatts here, over $20 billion invested in the U.S. So I think things are more stable, and that gives us, some optimism for the future.
Do you need a partnership with the White House for this to work?
I think we need a stable framework, a stable legislative framework to be able to invest, and I think that's what we're looking for.
And so you feel like that it has been sufficient, even with some of the pushback from the White House about wind turbines. We think that President Trump doesn't like them, right? He thinks that they're ugly, and he doesn't like them near his golf courses. I mean, how much does that really affect?
And they're bad for the birds.
How much does that affect your investment plans?
So I think it's important that, we're agnostic in relation to technologies. We invest in wind and solar and batteries. We also have gas turbines, certainly back in Europe. What I think is important is to have competitive energy, cheap, reliable, and that it should be, if possible, not have any emissions. And so that's what we're aiming for. I think wind is a perfectly good technology. It's very mature. It's being rolled out sort of across the US and across big parts of the world. And it provides clean energy at competitive prices. And it helps a lot of the landowners. I mean, some of our biggest advocates are actually the people that we work with on the ground in the local communities. Because for a lot of the farmers, this is another source of revenue that they can get from these projects.
We've talked a lot about the energy needed to power artificial intelligence and some of the hopes and dreams of some of the big tech players that have been fueling a lot of the market rally. I just wonder how much of a deficit there is in power generation right now versus the hopes and dreams of the NVIDIAs, the OpenAIs, the Microsofts, the Googles.
I think it's relatively well known that one of the biggest obstacles to rolling out AI is access to power. And certainly here in the US, although that's also true in other parts of the world. So we're seeing huge demand. And I think going back to, in terms of technologies, what are the technologies that are available to supply that power? I mean, no one is building any new coal power plants. Maybe you can extend them a little bit longer. Nuclear, you might like it, but it's going to take time, quite a lot of time, to be able to actually implement it. Gas turbines take relatively long still to get them implemented. So actually the projects that are most available to actually be implemented in the short, medium term are actually renewable projects. Solar, wind, batteries, all of those. If it's cheap, if it's competitive, if it's secure, use it.
We've heard a lot about deregulation from this administration. Are they actually cutting the red tape to take on projects like this in an accelerated fashion?
So we're still seeing some bottlenecks. It's not particularly true of this administration. I think we've been advocating for quite a while that we should accelerate all the permitting and licensing. Access to the network, for example, is super critical in a lot of the key markets in the US. This is something that affects infrastructure projects, I think, in general. And we have been pushing to try and simplify that as much as possible.
When it comes to the supply chain for a lot of these materials, a lot of that is coming from China. How have the tariffs impacted your company?
So about 2 or 3 years ago, we completely reconfigured our supply chain. And most of our supply chain is actually in the US. So we use domestically made products, whether it's panels that are made in the US. We have a framework agreement, for example, with First Solar, batteries. So we tend to try to use as much as possible domestically made equipment. It is more expensive than if you import it. Although nowadays with the uncertainty around the tariffs, we prefer to pay that premium, but ensure sort of a stable supply chain.
How feasible is this? Right now, China is dominating the solar, the wind, all renewable energies. Their battery plants have been far exceeding what the U.S. Production capacity has been. How much more expensive is it to source it domestically? How far behind are some of the technologies in the United States?
I think you have to separate what's the cost of the panels versus, let's say, then the additional tariffs or the additional costs on top of them. The underlying costs to produce them here in the U.S., maybe are 2 times what it would cost elsewhere. Then that can be compounded if you have sort of tariffs on top of that. But I think the key issue here is if you can increase the critical mass of the local production, of the national production, then you can hopefully bring those costs down over time. So I think building out that supply chain, I think you need to continue to invest in it to actually bring those costs down.
Is it harder to have a global footprint now?
You need to be more careful about where you are. I mean, energy infrastructure projects are typically very long dated, so we invest over 30 years. So we like to be in places, where rule of law is important, strong institutions where you can have that predictability over the long term. So we are, very focused on a couple of key countries. The US is one of them, where we really invest for the long term.
That's what I wanted to build on. Are you looking to narrow the scope of the countries that you're in?
So we were in about over 20 countries, almost 30 countries. We've been paring that down. We're going to be sort of closer to 15 countries, and we are exiting some of the non-core countries that either had less critical mass or that we didn't feel as comfortable in. So we're going to really focus more.
Where are you most comfortable at the moment making additional long-term investments?
Europe, US, some places in Southeast Asia, for example, Singapore. We like Australia, we like Japan. We have a big investment in Brazil. Slightly different risk profile, but we're pretty comfortable there as well.
How much do you expect that to change over time, or this is sort of the new order as you see it? Are there countries that you no longer will participate in?
Well, I think it's been changing now, and I think our strategy has been to really keep a low risk profile. So I think, we certainly think that this will carry out over the next couple of years. We don't see this changing, if anything, only getting worse. We've been very careful about, or we see, I think, as does everyone, sort of the decoupling and some need for de-risking, and so we're following that strategy as well.
What do you have to say about the CTG and the biggest shareholder, 21% stake? What do you think they want to do with that stake?
I think they're an investor like many others. I mean, 80% of our investors are either U.S. institutions, Canadian pension funds. We have investors from the Middle East. We have investors from Europe. So hopefully they're a happy investor, and like all of our other investors.
Miguel, appreciate your time. Good luck for the rest of the week. Thanks
you.
for being here.
Pleasure.
Thank you, sir. Miguel Stilwell Dondrad, the CEO of EDP. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief, the latest worldwide with Yahara. Hey, Yahara.
Hi, John. Argentine assets surged after the U.S. pledged financial support for President Javier Milei. Treasury Secretary Scott Bessent said on X that all options were on the table to help arrest the run on the Argentine peso due to political uncertainty. Full details will likely only emerge after Milei meets President Trump at the UN General Assembly later today. Meanwhile, NATO is promising a robust response to repeated Russian airspace incursions. The military alliance says it will use all options to defend itself after Estonia said Russian jets violated its airspace last week. NATO is already strengthening its eastern flank with continuous air patrols under Operation Eastern Sentry. And week 3 of the NFL season wrapped up with the Detroit Lions defeating the Baltimore Ravens in a high-scoring thriller, 38-30. The Lions' rushing attack, led by David Montgomery and Jahmyr Gibbs, combined for over 200 yards and 4 touchdowns. The Lions also sacked Lamar Jackson 7 times, tying his career high. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next, Governor Myron making the case to go big.
In my opinion, it's imperative that we get closer to neutral quickly. And so I thought 3, sort of a series of 50s to recalibrate interest rates was the appropriate policy.
A conversation up next with Kristen Biddley of Citi, live from New York City. You're watching Bloomberg TV. the opening about a few hours away. At the moment, equities are doing okay, just slightly negative on the S&P 500, closing at all-time highs in yesterday's session for a 28th time in 2025. The equity benchmark just a little bit lower, down by not even 0.1%, totally unchanged on the Nasdaq so far this morning. Under surveillance this morning, Governor Myron making the case to go big.
In my opinion, it's imperative that we get closer to neutral quickly, and so I thought sort of a series of 50s to recalibrate interest rates was the appropriate policy. My view is that policy is roughly 2 points too restrictive. Even though I am expecting growth to be a little bit better in the future, that could get derailed unnecessarily so and create an output gap where one need not exist if we don't get policy closer to neutral.
So here's the latest this morning. Stephen Myron making the case for aggressively lowering interest rates to avoid damaging the economy. The newly minted Fed governor making the remarks in his first speech since joining the FOMC. Joining us now to discuss, the head of investment solutions at Citi, Kristen Bidley. Kristen, good morning.
Good morning. How are you?
Good to see you. It's been too long. We've got some rate cuts, or at least one so far. The prospect of more to come. What kind of activity is that unlocking for your clients, and what are you advocating for them to do at the moment?
I think for right now, this was largely anticipated and expected. So I think if we would have had any change, then there would have been changes in the portfolio. But for right now, we're sticking to our guns and staying fully invested. We're balanced across fixed income and equities with a quality bias and also leaning towards the U.S. market as well. And so for us, there's no real change unless we see a deterioration in the employment backdrop or unless we see inflation start to accelerate.
For people sitting in cash at the front end of the curve and looking at where Fed funds is, which is still north of the curve all the way out close to 10s at the moment.
Yeah.
Just below 10s at the moment, or around that level. What are they saying to you about the incentive to go out along the curve? And what kind of argument can you make for them to get out of cash and put it elsewhere?
Yeah, it's a great question, because when you look at cash is certainly building up on the sidelines, and I would say there's always that argument around the $7.6 trillion that's sitting on the sidelines, but quite candidly, that's only increasing. It's not decreasing. And so when you look at our portfolios, we're not advocating for long duration at all. I think you have to be weary of some inflationary pressures. So the average duration in our portfolios is around 5 years. I think that catalyst from going from cash into a 5-year duration, we have to be realistic about the investor psychology. So what we see more often is not your traditional 60-40 portfolio, but maybe a 60-30-10, where that cash position, people will hold it so they can be more nimble.
There is this issue of what's the best hedge against inflation? Couldn't it just be stocks? Isn't that almost what people are betting?
Yeah, I think it is. And I think there's actually a defensive play in terms of the largest free cash flow generating companies. And I know you guys have been discussing this all morning in terms of where should you be invested, particularly in equity markets. I think as an inflationary hedge, we have gold in our portfolios. I know many asset managers do as well. But when you look at where you want to be within U.S. equity markets, I think the major debate right now is, do we want to lean into momentum and the winners, or do we want to play this broadening out trade? I think the broadening out trade, while certainly it can deliver returns, I think it's still tricky, because when you look at small caps, their earnings are declining. They're not growing. And then you look at these large companies, they've contributed over 60% of the earnings growth this year. So while it feels weird to be invested there, I think you have to play the momentum.
At the same time, as we were talking about this morning, the NVIDIA OpenAI deal, the idea that NVIDIA is investing $100 billion for OpenAI to buy their products. Exactly. So it creates this feeling that we're all hinging on this circular bet within big tech names that isn't yet getting ratified in the profitability in the rest of the economy. At what point does that feel wrong?
I think the main question is almost, what is the bear case from here? And that's one of the questions. When we see all of this CapEx spending, when we see, what is the timeline for that? When you will actually see the returns? And I think investors are patient. I think it's more, I saw a piece recently where it was innocent until proven guilty. And so looking out 1 to 3 years, I think there's patience in that investment. But I do think we have Q3 earnings coming up, and if there's one miss, or if we don't have a beat and a raise, I think you will see a pullback in the market.
When you talk to clients, what are they most concerned about right now? You mentioned in your notes this tug of war between the AI story, but maybe even tariffs at some point hitting them next year. Are clients just dismissive, as Lisa Shallett said, of what's coming out of policy, or is it still in the back of their mind brewing?
I agree with Lisa in her comments. I think there's almost there's tariff fatigue. So it's almost that was the dominating conversation a couple of months ago, and now it's It's not really even a question that clients are asking. And so I think the major thing on investors' minds right now is really trying to position for the longer term, understanding that short term there could be some volatility, there could be some pressure one way or the other, but where are you positioned longer term, and really the balance between private and public markets.
Is that a cap-weighted US index? Is that how I
think
position for the
so.
long term still?
Still, I think when you look at, again, we're not in the camp of this broadening out trade right now. And so you could probably see some strong returns, particularly with interest rates coming down, and you don't want to fight the Fed on that. But I think like when you look at the name of the game is really quality and free cash flow generation, and who's going to be able to make those types of, not $100 billion investments, but similar to really kind of fuel the growth.
Let's build on that. Why don't you like small caps? Had a great run off the back of the repricing of the Fed. Why is this just another head fake?
Because I don't think it's based on fundamentals. And so when you look at, okay, if there are inflationary pressures, if there's part of the market that is going to be exposed to tariffs ultimately, if there's part of the market that's not going to be able to do that CapEx spending, who's going to get left behind? It's smaller companies. So maybe through M&A, you could see some activity there, but I think this is really a market that's going to be driven by those making the investments and seeing the return on these investments.
The main argument has been the rate cutting cycle could potentially provide a boost to
Sure.
the rest of the economy in a way that some people weren't expecting. Has that all been priced in already? Or do you think that there could be some sort of upside surprise in the rest of the market as a result of potentially an even greater degree of dovishness in the Fed come after May of next year?
I think it's largely at this moment, if we're just looking from here to the end of the year, I think it's largely been priced in, especially for small caps. Again, these rallies that have been driven more not on fundamentals, but almost expecting that Fed momentum, I just see better opportunities in other parts of the market.
You pointed something out in your notes, and I love this, the idea that every single time that the Fed has been cutting rates at a time when the market's been at a record high, every single time, the 1 year out, the market was up and often up considerably. Why not just overweight risk right now?
So, great question. In our notes, basically what we shared was when the Fed, since 1980, has, with markets at all-time highs, the times that the Fed has started to cut rates, we've seen positive returns. We actually just saw that last year. So in September of 2024, we got a rate cut. We're now up about 17.5% since last September. So I think you still have to strike a balance, though, because what are the risks on the horizon? You don't want to be all in on equities in an environment where you still have, what are the risks? You basically have earnings and someone not delivering on earnings, and given that concentration, you could see some downward pressure. You also have the deficit, which is another major risk, and we have to talk about labor too. That when you look at the labor market, that is something that, well, we could say it's stalled, it is softening, and we're starting to see this emergence of why is the labor market stalling? Is it because of AI and people holding off? Is it because of tariffs? Is it because of immigration? There's really three cases there, but if we see the labor market continue to deteriorate, that's something that will ultimately impact consumer spending.
The labour market for grads is just awful, terrible. We've all seen the numbers. Does not look good at all.
Yeah, I mean, it's a personal issue. It's also something that very much speaks to the economy and the idea of upward mobility at a time when there are all these other pressures, cost of housing and the like. How much are companies truly replacing entry-level talent with AI? How much are they using that as a smokescreen simply because they don't feel very confident about the trajectory going forward?
Don't know, but I wonder if the much tighter restrictions around H-1B support or complement the effort to try and do something about the lack of employment right now for graduates in this country?
It's a good question, how much that really comes in parallel, and that's the reason why some people have supported more homegrown talent. I also wonder who's going to push back, get that lobbying engine back in Washington, D.C., and what exactly some of the carve-outs are going to look like.
That's all Washington, D.C. is, right?
Lobbying
Just
machine.
a big lobbying effort. Isn't that what it is?
And it's also one of those things where you could see a market that continues to grind higher, earnings continuing to go higher, and the unemployment rate going higher, which is something we haven't seen, but that is a reality.
Something to watch. Kristen, it's good to see you.
Good to see you too.
Thank you. Kristen Bidley there of Citi from New York City. The third hour of Bloomberg Surveillance is up next.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly. by my friends, my family, and hopefully generations to come.
Fed's in a difficult position, but it's certainly taking a risk by lowering interest rates.
They have room to maneuver. They have room to come down some on the policy rate and still put downward pressure on inflation.
The flattening that we've seen is a bit of a buy the rumor, sell the news on the back of the Fed.
The Fed is cutting on risk management grounds into what may be the early stages of a cyclical reacceleration.
You kind of have the benefits of Fed cuts without the penalty.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. Following 3 days of gains on the S&P 500 and a 28th record high of the year so far. Equities pulling back by not even 1/10% on the S&P. On the Nasdaq, totally unchanged. In the bond market, 4 consecutive days of higher bond yields, now lower by a single basis point on 2s, down 2 or 3 on 10s to 411.96. Going into this speech later on this afternoon at 12:35 Eastern Time, the chairman of the Federal Reserve, Jay Powell.
The chairman for now. And how much will what he says actually give a guidance as to the Fed policy that will be followed? I'm just struck by right now what markets are saying. They're saying the Fed can cut rates, have a cutting cycle of 125 basis points more cuts by the end of next year without a reignition of inflation, while allowing markets to go to record highs. It is essentially the soft landing that everyone was talking about without the landing part. And it raises a question of, is everything priced to perfection predicated on a very narrow path, or have we reached a place of stasis amid policy uncertainty where people don't care and are watching earnings go up and an economy chug along?
People are getting uncomfortable. And by people, I mean Lisa Shallard of Morgan Stanley, who was on the program about an hour ago, comparing this to the late 90s and saying perhaps things are getting a little bit too sizzly.
The idea that maybe the biggest bull case right now is the absence of a bear case. People can't see what could disrupt this. The point that she made and that Kristen Bitterly made as well is that we're one bad earnings report away from a significant drawdown. And that, I think, is the key. How much are people hinging the entire positive outlook on the idea that these big tech giants can keep generating massive amounts of cash at a time when they are investing increasingly in each other, and companies are not showing the profitability to the degree that many people were hoping?
There's that angst, I get the sense, from these investors, given what Lisa Shallard said. One earnings miss is what could ruin it, not the policy uncertainty from Washington, not the Fed rate cut. And she said news headlines haven't been a catalyst. Markets have become almost dismissive of what the president said. He really set the tone in April when he backtracked. Now it feels like everyone's hinging on what the Fed's going to do, but more importantly, what is NVIDIA going to report next quarter? That's the big driver.
November 19th. Got to wait a while. A few months before we get there.
I mean,
we're talking about this for a number of weeks, okay?
It basically is going to be 2026 when we get NVIDIA's report.
I wish they'd moved that. But
I
we've
think
made
that
that
they
argument a
should.
few times, you know? Let's bring it in.
Is it all them, or ultimately will it also come down to some smaller companies and how much they're actually using AI, whether they can monetize it or they're just investing it in little bots that talk to each other?
If NVIDIA is investing in them, that'll be more important to hear from those companies in this new circular AI economy.
Going to get Ed Ludlow to fix this next time he speaks to Jensen. Coming up on the programme, we'll catch up with Liz Ann Sanders of Charles Schwab as stocks trade near all-time highs. We'll speak to Gil Luria of D.A. Davidson as NVIDIA is betting big on OpenAI, and Stephen Stanley of Santander, with Fed Chair Jay Powell set to speak later on today. We begin this hour with stock steady. Liz Ann Sanders of Charles Schwab warning the market may be too top-heavy, writing the following: investors face a risk the market breadth narrows and performance becomes overly dependent on a few dominant stocks. This dynamic can distort perceptions of market health. Liz Ann joins us now for more. Liz Ann, good morning.
Good morning, John.
Good to see you, and welcome to New York.
Thank you very much.
Thank you for coming in. Let's talk about that quote right there, and whether you believe we're becoming more or less dependent on just a handful of stocks at the moment.
We're becoming still very dependent on a smaller handful of stocks, though. So if you look at the cohort of the Magnificent Seven, just to pick a cohort as opposed to, say, the top 10, only 4 of those stocks now are outperforming the S&P 500. And the best among them, no surprise, NVIDIA, is only the 47th best performing stock in the S&P 500, meaning 46 stocks within that index have better performance than NVIDIA. NVIDIA is the largest contributor to cap-weighted S&P gains, but it's not the best performer. The Mag 7 are all in the NASDAQ. NVIDIA, as the number one performer among the Mag 7, is ranked, I think, 630th within the NASDAQ. So I think we're starting to see more dispersion even among these concentrated cohorts. You've also got correlation within the S&P has come down, dispersion widening out. So I actually think it's not a bad backdrop from a stock picker's perspective. It levels the playing field a little bit more for active relative to passive.
Let's build on that just a little bit more. So Kristen Bidley of Citi was with us about 15 minutes ago. And she said for long-term investors, stick with a cap-weighted index. That's the way to go. What are the risks around that, given what you just said?
Well, you've got the concentration problem embedded in that index with the 10 largest names representing 40% of the index. That's an all-time high. Even the top 5 names represent close to 30% of the index. So you're certainly guaranteeing the cap-weighted return on the upside, but there's a downside to it. Now, memories tend to be short. All you have to do is look back to earlier this year, the mid-February to early April bear market in the case of the NASDAQ, near bear market in the case of the S&P, but many of those stocks were the drags on performance. So it does work in the other way. And we always say to our investors, pretty much all $11.2 trillion of our client assets are individual investors. And leaving aside the take a passive approach and index to the S&P, you don't have to take the same concentration risk. If you're an institution and you're benchmarked against the cap-weighted S&P on a quarterly basis, you are at the mercy of the construction of the indexes. But if you're an individual investor, you're not being benchmarked against the S&P on a quarterly basis. You can take more of a stock picking approach and not take that risk of having such a concentrated portfolio.
Isn't that concentration a feature, not a bug? And I say this at a time when we're talking about the potential for an outperformance of the S&P 500 and the NASDAQ, even with a labor economy that is questionable right now.
Well, it's a feature in keeping the cap-weighted index returns high. But here's a stat. Just since the April 8th closing low, S&P has not even had a 2% drawdown over that period of time, continual record highs. But the average member within the S&P has had a 14% drawdown since April 8th. The average member within the NASDAQ has had a 32% drawdown just since April 8th. So there's a lot of churn and rotation under the surface. It's a feature in that all you need is a few mega cap stocks to bring those cap-weighted indexes. I just think the fuller story, not the real story, but the fuller story is told under the surface of these cap-weighted indexes.
John was mentioning Kristen Bitterly, who is just here, and she is talking about the cap-weighted and not necessarily the broadening out trade. She doesn't necessarily see that gaining traction. Do you disagree, based on the idea that you have seen this drawdown in the average stock outside of the Magnificent Seven, and that those companies potentially could be the most beneficially affected by a rate-cutting cycle that a lot of people are expecting?
Yeah, that's certainly the macro fundamental reason why small caps caught a bid, particularly given that the real surge was tied to Powell's Jackson Hole speech. I think one way to think about the broadening out, the fact that Russell 2000 finally hit a new all-time high, last time prior to this one had occurred was 2021, is I think staying up in quality still makes a lot of sense. And one piece of advice that we provide to investors, not to buy an index tracking, but if you use index as a source for ideas, Russell 2000 is still on the lower quality end of the spectrum, given that 40% of the stocks are some combination of non-profitable or zombie companies. Whereas the S&P uses a profitability filter in constructing their S&P 600. So it's inherently a higher quality index. And in fact, looking ahead, S&P 600 earnings outlook versus S&P 500 earnings outlook, the former has a much better trajectory, mid to high 20% range in terms of 2026 earnings versus more in the kind of mid-teens for the S&P 500.
How correlated is the Russell, these small caps to do well, with how quickly the Fed continues on a cutting cycle?
That, I think, would be a risk that the outperformance trend does not persist, is if the Fed has to cut short the cutting cycle, not dissimilar to what happened last fall. And the one thing that's interesting is we've seen that edging up on the part of the long end, very much in keeping with what happened last year when the Fed cut by 100 bips and the 10-year went up by the same amount. Mortgage rates went up by 80 basis points.
When you mention these cap-weighted indexes, they're so sector-focused and concentrated. So isn't it doing the opposite of what investors want? Where are people diversifying?
Again, I think the active approach, I think there's a reason why active ETFs, the growth rate in active ETFs is higher than the growth rate in passive ETFs. Now, part of the reason why it's a higher growth rate is it's coming off a lower base because passive ETFs have been much more popular. But I think that is a bit of a tell that there are investors looking for opportunities outside of just the cap dominance within these cap-weighted indexes.
Does this feel bubbly to you? You've seen it all. Let's finish there.
I have seen it all.
How does it feel?
Almost 40 years doing this. I'd say that the big difference, probably the most important difference between now and the late 1990s, is there's more there in terms of massive cash flow generation. There's actually a denominator in the valuation equation now. There was no denominator in the valuation equation. I mean, we all look now through the benefit of hindsight and say, boy, was that just so silly. And, the attaching of .com to companies that had nothing to do with that. So there is more there. But again, going back to that period just this year, mid-February to early April, when you had the DeepSeek news and concern about whether the massive amount of spend was indeed a protective moat built around these hyperscalers, I think that we can go through valuation adjustments, necessary valuation adjustments, or even just periods where you get about a profit taking that is distinguished from what ultimately happened in 99, 2000. I think it's a right tail risk for the market, maybe with similar probability as what would be the left tail risk, which I think the left tail risk is a recession, which I don't think is priced into the market. But these are much higher quality companies than was the case in the late 90s.
I just sense the discomfort from a lot of people with some of the recent announcements, whether it was Oracle in the last few weeks or this one from NVIDIA to OpenAI. They will look back in a few years and they're worried about feeling foolish, looking back and thinking, well, wasn't it obvious? This company came out, invested this money so this other company could buy their stuff. Like, shouldn't we look at that and say that doesn't make sense? That's a house of cards.
Shouldn't we look at the fact that NVIDIA's customers are almost entirely the hyperscalers, almost entirely the Microsofts and the Alphabets and the Oracles, and this idea that it is a sort of closed cycle and we're not seeing it in the broader economy? And you add on top of that the sense that almost everyone is saying up, and more up, and they're upgrading the forecast. It's making people uncomfortable, but that discomfort can prolong the cycle. And that, I think, is what key people keep saying.
And they're the companies making money.
Exactly.
To Lizanne's point, there is some there. Lizanne, it's good to see you here. Thanks for being here. Lizanne Summers at Charles Schwab, thank you. Thank you very much. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Yahira for more. Hey, Yahira.
Hi, John. We start with that massive AI deal. NVIDIA is set to invest as much as $100 billion in OpenAI to support new data centers and other AI infrastructure. The agreement will help OpenAI build the data centers using NVIDIA's advanced AI chips. The investment will be provided in stages with an initial $10 billion. NVIDIA shares popped nearly 4% yesterday on the news to close at a record high. Meanwhile, the Trump administration has linked Tylenol to autism, urging pregnant women to avoid it. The move comes despite a lack of widely accepted scientific evidence supporting the risks. Still, the FDA recommended doctors consider minimizing the pain medication for low-grade fevers while noting a causal relationship between autism and Tylenol has not been established. And the U.S. Secret Service says it interrupted a network of devices that could have severely disrupted cellular service in New York. Authorities say the SIM cards and SIM servers were used to threaten senior U.S. government officials while world leaders gather here for the UN General Assembly. The Secret Service says it bore signs of foreign involvement. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. More from Yahira about 30 minutes from now. Up next on the programme, the Morning Calls, plus Gil Luria of D.A. Davidson as NVIDIA is betting big on OpenAI. From New York City this morning, good morning.
The key driver of this bull market has been AI and tech, and the key driver for the overall market has been the earnings from these companies. Does it raise some, eyebrows a little bit? Sure, but in the near term, I think this means that earnings continue to move up, and that continues to support this tech trade and the overall market.
That was Keith Lerner of Truist, sticking with it in the equity market following 3 days of gains. It's a quiet market so far this morning. Futures going nowhere on the S&P 500. Likewise on the NASDAQ. Things get a little busier in about an hour and 30 minutes when we get some US PMI data for you. A read on the start of September. I think that's important coming out of the summer. Are we actually seeing a pickup in the US economy? It's what the market is priced for. It's what many companies are guiding for.
Yeah, and how much can manufacturing play a part in this? This is sort of underpinning a lot of the hopes and dreams of the resurrection of the US economy, as it's going to be with greater degree of manufacturing, and we have seen that. Do you see the PMIs confirm that after what we saw in Europe? Again, this goes to this question of, is a reacceleration just a US story or is it international?
And then after the PMIs, you'll hear from Chairman Powell. That's the main event for the Fed speak later on this afternoon at 12:35 Eastern time. In the bond market at the moment, in anticipation of that, following 4 days of high yields, a little bit lower across the curve this morning. 2s out to 30s. The 2-year down by a basis point. The 10-year down by a little bit more than that. The yield on a 10-year maturity this morning at about 4.13. That's the price action. Let's get you some morning calls. First up, Wells Fargo upgrading CoreWeave to overweight, saying demand signals are too strong to ignore. Their stock is up by 1.6%. Your second call from Morgan Stanley, raising its price target on Oracle to 320, expecting fundamental changes in its revenue growth from massive contracts. That stock is down about 1% this morning. Big rally to start the week for that name. And finally, Evercore raising its price target on Nvidia to 225, following its deal with OpenAI, seeing Nvidia as uniquely positioned to help OpenAI with its infrastructure build-out. Let's stick with Nvidia and their story. Gil Luria of D.A. Davidson maintaining his buy rating, but has some worries following the deal. Gil writes the following: "While the announcement is positive for OpenAI's ability to ramp, we're concerned Nvidia has become the investor of last resort, bailing out OpenAI's overextended commitments." Gil joins us now for more. Gil, welcome to the program, sir. I'd love your perspective on this. Just how uncomfortable are you following that deal announcement, and why?
We are uncomfortable because if the market really was as good as Nvidia and OpenAI said yesterday, there would be other capital available to OpenAI as opposed to the vendor that's supplying the AI trade. We really need to start separating what's real, what's healthy from what's unhealthy. And you had a great discussion so far this morning about this. Let's talk about what's healthy. Microsoft, Amazon, Google are healthy. They have the real customers, and they have the capital to invest in new data centers to provide AI. AI, the models are fantastic. They are doing things we never imagined they could do, and they keep getting better. People are using them for more things. They're bringing them to work. That is very real. On the other hand, we have companies like OpenAI making commitments that there's no way they can live up to. Let's not forget, Microsoft has right of first refusal for all of OpenAI's compute, so they're going to handle most of it. OpenAI just committed $300 billion of compute commitments to Oracle, another $100 billion to backup, another $25 billion to CoreWeave, and then signed up for projects in the UK and the Gulf. They don't have that capital. They're on a $12 billion revenue run rate, and they're going to lose probably $10 or $20 billion this year. They're building hardware. They're building a consumer product. That is not real. So you have to be careful about the marginal trades here. Interesting talking about CoreWeave and Oracle upgrades. Those are the marginal players. Those companies have neither customers nor capital. Unlike Microsoft, Amazon, Google that have both, they're just dumping them over the excess demand onto CoreWeave and Oracle. As soon as they have enough of the capacity they need, they won't need those marginal players. Those marginal players are the bubble.
Gil, this to me is fascinating. I'd love to unpack that, this idea of all of the commitments that OpenAI is promising. What actually are they promising as part of those commitments? I mean, you could make the argument they could be the next Alphabet, right? That they could really compete with Google in a material way. And then that could be worth it in terms of their valuation and some of their software provisions, as well as their algorithms. Where do you see the disconnect in what they're actually offering?
So the operative word in what you just said is could. Unlike Google that ran away with search, OpenAI is in a very competitive market. We don't know that they're going to have the winning solution. They have a lead now, but so did Yahoo and so did MySpace. What we know is that Google has models that are just as good, if not better, than OpenAI's. Anthropic, for certain things, has models that are just as good as better. We know Zuckerberg is investing tens, hundreds of billions of dollars in building a different model. We know there's Chinese models. OpenAI is not going to run away with it. They have a lead. They may participate, but the likelihood that they'll run away with it and need $500 billion of compute over the next 5 years is pretty far-fetched.
Given some of the commitments that you've been talking about, the $300 billion to Oracle, the $100 billion investment announced overnight, you start adding this all up, it's real money. I just wonder, Gil, at what point, if you see an OpenAI show its vulnerability, how much that disrupts the larger ecosystem in a real material way from a valuation perspective and beyond?
Yeah, it'll cause disruption. Again, I would be weary of the marginal players here, because they're going to be the ones that get hit the worst. NVIDIA will keep selling chips. Microsoft will continue providing services to its customers, so Amazon Web Services, so will Google Cloud. But I'd be weary of all the incremental marginal trades on AI that are really getting out of control right now. NVIDIA is the most attractive direct bet on AI right now. That's why we moved to buy, because at 28 times earnings, they're trading at a lower multiple than any of those marginal players, in spite of the fact that they're going to win one way or another. Whether they sell chips just to Microsoft, Amazon, or Google, or to more companies beyond that, isn't as important. The demand for data centers is there because AI is potent. Just be aware of where you're investing in that.
Well, last week we saw NVIDIA take an investment in Intel. This week it's OpenAI. Who's going to be next?
Well, so in a different world, NVIDIA would be buying a lot of these companies, but we are in a world where the big techs cannot make acquisitions. So they're going to have to make these types of investments, acqui-hires, et cetera. Now, Intel is a little bit of a different matter. Intel is a strategic investment in the ability to move the supply chain to the United States after the US government stepped in and said that they will ensure that would happen. That facilitated NVIDIA coming in and saying, you know what, we are going to put Intel into our ecosystem, make sure they have a viable customer so they can ramp up their 14A technology. We'll bring them into the data center, which is a little ironic considering NVIDIA is the one that wiped the floor with Intel for so many years in the data center market. Now that they've defeated Intel, they can bring them back in as a marginal player.
Gil, I've got 45 seconds. It sounds like the company you really have an issue with right now is Oracle and the move we've seen so far this month. Can I just give you 45 seconds just to explain what is your problem with that move this month?
That $400 billion of Oracle's market cap is tied to one company, OpenAI, that has made commitments that there is no way it can live up to. So if that much of your market cap is tied to one commitment that really is untenable for all the reasons we just discussed, maybe that's a little too much. It's been how they've expended their remaining performance obligations from 80 billion to 455. The vast majority of that is OpenAI. That is the entire move on Oracle's stock. I would revisit that calculation.
Gil, it's your opinion. We appreciate hearing it. Thank you, sir. Gil Lurie there of D.A. Davidson. Thank you, sir. The latest on Oracle and some of the big moves we've seen this month alone.
Larry Ellison, if you want to call in, please go ahead. I'd love your rebuttal to that because I think it's actually a salient point.
NASDAQ futures this morning just about unchanged, very close to all-time highs. Up next, Stephen Stanley of Santander with Fed Chair Jay Powell set to speak later on today. We are 60 minutes out from the opening bell, and equity futures are only slightly negative on the S&P, just pulling back from all-time highs on the S&P 500. With your morning movers, your single names, here's Danny Berger. Hey, Danny.
Hey, John. One of the best performing stocks in the S&P 500 pre-market is Boeing this morning, up 2.4% after the U.S. ambassador to China, David Perdue, said that there was a huge order in the works of Boeing aircrafts by China to Boeing. Bloomberg has reported in the past that China has been working on a 500 aircraft order from Boeing, so that could be what indeed the ambassador is talking about. Elsewhere this morning, a little bit of deal news breaking in the past hour. Sempra, the energy infrastructure company, in one of its energy infrastructure portfolios, it will be selling about 45% of it to affiliates of KKR and the Canadian Pension Plan. That deal will net them about $10 billion. They'll get that in cash equity, 47% of which at the close. The next bit comes through the year 2027. Finally, wrapping things up with some earnings we got this morning. That was from AutoZone, the auto retailer. Shares down 3.3%. It was the fifth consecutive earnings that they missed. Even with that miss, though, the CEO saying that they're doubling down, opening more physical U.S. stores, but margins missed and their inventories were higher. So all in all, a negative report for them, John.
Danny, thank you. A few names to look at going into the opening bout. The opening bout 60 minutes away. 15 minutes after that opening bout, some important economic data, the US PMIs at 9:45 Eastern time. Then later on this afternoon, capping off a busy day of Fed speak, we'll hear from Fed Chair Jay Powell speaking just afternoon at 12:35 Eastern time. With the preview, let's cross over to Mike McKee for more. Good morning, Mike.
Good morning, John. Well, I'm not sure we're going to get a whole lot out of Jay Powell today that we don't already know, because he just spoke a week ago after the Fed meeting, and he said the Fed is at this point concerned about the labor market and considering cutting rates again, but check with us as we get closer to the date, which would be October 29th, because we want to see more data and see how the economy develops. What might be more interesting today is Mickey Bowman's speech. You had her up there on that graphic. She speaks at 9 o'clock in the morning, and she was perhaps the person on the board closest to Stephen Myron's views. Does she agree with him that the neutral rate has fallen significantly and the Fed needs to play catch up and cut rates a lot going forward? Does she have an estimate for the neutral rate? And how much does she agree with Myron's outlook going forward? Powell has said over and over again that we shouldn't make policy by using the neutral rate because you can't really observe it. So he's probably going to be talking much more about the data and the data dependency the Fed has been on, which, of course, is somewhat backward looking. So doesn't look like we're going to have anybody solving the debate this time. It just looks like we're divided, and we're going to continue that for some time.
Michael, have we got any reporting whatsoever on just how well received or not Governor Myron's argument was on the committee last week?
It's about the same that we've been reporting all along, that people give him credit for being a decent economist and for making plausible arguments, but they don't really believe what he's saying. There are people, Bowman, who might be one of them, who would say that, yes, we probably need to do more sooner. But in general, the majority on the Fed is at this point in a watch and wait mode, willing to cut rates, but wanting evidence that they need to do so.
Mike, thank you, sir. Michael McKee. Look out for Governor Bowman later on this morning. Let's stick with the Federal Reserve. Stephen Stanley of Santander writing, Chairman Powell seems frightened that the economy could be on the cusp of a surge in layoffs. But while new hiring has slowed dramatically, layoffs are not picking up. Stephen joins us now for more. Stephen, good morning.
Morning.
Do you think rates pricing is too aggressive?
I would say it is. I mean, I think it's not outrageous for the rest of this year, but there's a lot of easing also priced in for 2026.
Why do you think the labor market is more solid than it currently appears, especially given some of the revisions in non-farm payrolls?
Yeah. So I would say a couple of things. The first one is I think that a lot of the slowdown in job growth is a reflection of changes that we've seen on the supply side of the equation, right? Just the slowdown in immigration. We haven't seen a dramatic slackening in things. I mean, the unemployment rate has ticked up a little bit, but it's still pretty close to where it's been for the last year and a half. I think the other point I would make, and I think this is the more important point, is that you have to think about why is the labor market slowing down. And when you listen to what companies are saying, they're not saying, oh, you know, we're getting ready for a recession, we're about to lay off a bunch of people. They're saying, we've put ourselves on hold for a few months, we're waiting for policy certainty, and once we have that certainty, we're going to reengage. And I thought it was interesting that we heard from a couple of Fed Bank presidents yesterday suggesting that maybe firms are just getting to that point where they're almost ready to reengage because we have seen a lot of the policy uncertainty resolved at this point.
I think a big question is, what does re-engage mean? Does it mean invest in a bot that can talk to another bot that can then talk to another bot to tell it what to do, and then a robot will fulfill the order, or will it be actually hiring people? Could you see a scenario where you get a re-acceleration in the U.S. economy without the labor market getting materially more robust?
Well, it certainly depends on what sectors of the economy are driving you, right? I mean, if you're talking about just purely a manufacturing revival, then that's not going to generate a ton of jobs. Service sector is still very labor intensive, so I think most parts of the service sector, if they're strong, there you'll see a good amount of hiring.
To Lisa's point, though, how much are companies just saying policy uncertainty as an excuse for AI taking entry-level jobs?
I think we are seeing places where AI is having a big impact. I think that, there's been a lot of talk recently, I've written about this, the weakness in the market for recent college grads. And I think that's certainly, at least in some industries, one place where AI may be taking away from what would normally be demand for workers. But we've seen, you can go back 200 years, right? We were an agricultural economy, and then we moved forward to a manufacturing economy and a service economy. Some would say now we're moving to an information economy. Technology is always eliminating certain types of jobs, but in the process, it has always in the past generated new jobs. So you can't always predict what those new jobs are going to be. I'm not on an aggregate level, I'm not worried that we're not going to have enough jobs for people, but I do think there's going to be definitely some shifting around in the market.
How does the Fed discuss that? Because they don't have a prescription for AI's impact on the labor market.
No, the Fed can't really, that's something the Fed can't really control, right? So the Fed has to stick to its knitting. We have to keep inflation close to 2%, and keep the labor market close to full employment. When there are supply side shocks to the real economy that are beyond the Fed's control, that makes the Fed's job harder, for sure.
Bit of a guessing game, but where have you got neutral? Where do you think it is?
Yeah, I have more sympathy for the high neutral camp.
Okay.
So I maybe 3.25 to 3.5, somewhere in that range. And the reason I would make that argument is that the economy has, by and large, performed very well over the last few years. I mean, if you remember, at the beginning of 2022, the funds rate is at 0. Market participants never had the funds rate getting back above 2%. And the idea was if you got to 2% or higher, the economy would fall apart, we'd have a recession, the government couldn't fund itself, there were all these dire things that were going to happen. And here we are, we had over a year at over 5%, we've had over a year at 4%, the economy's done pretty well. And by the way, financial conditions are tremendously positive at this point. So it just doesn't feel like the Fed is grossly restrictive at the current rate level.
I can tell you, just to echo that, I remember in 21 being on a call with Bill Dudley and Mohammed Al-Arian, and at the time they were talking about the prospect of getting rates back to 5. Maybe we'd have to go back to 5. I remember just being in shock thinking, if we go back to 5, what would happen to markets? What would happen to the bond market? And here we are. Yet here we are. And Governor Myron's saying we're 2 percentage points too tight. Now, for an individual yourself who believes that maybe market pricing is too aggressive for 26, I want to understand how you'd respond if an incoming Fed chair, someone nominated and confirmed, said the same thing that Governor Myron said this week, that monetary policy was roughly 2 percentage points too tight. How would you respond to that? How would you start to think about and recalibrate your expectations for next year?
Yeah, I mean, I think that there's two issues there. One is how much sway does one person have, even the chair? And I think the answer to that is, if someone comes in who is grossly out of line with the consensus, I think it will be very hard to drag everybody along. So I think that a super dovish chair would have some influence on the path of policy, but not just going to come in and get their way. And then the second point is, how aggressive would the Fed be in that sort of an environment? Would it be, let's jump first and ask questions later, or are we going to kind of take things as they come? And we're only gonna move as the data dictate, right? And as long as inflation is closer to 3% than to 2%, I think you're going to see a lot of caution on the committee. And we heard that yesterday out of some of the more hawkish members on the committee, Hammack and Bostic and
Muslim as well, right?
Yeah. But caution, but that isn't preventing them from cutting rates. And that the baseline right now is priced into markets. You started by saying you think it's actually pricing in too many rate cuts and you think that there actually will be fewer. Let's say they do cut by an additional 125 basis points and that the baseline of the committee does see neutral at a lower level than you do. How much greater is the risk of true reacceleration in inflation next year? How underpriced is that possibility?
Yeah. I think it's a risk. I don't think it's a baseline scenario for sure. As we talked about with the labor market, in my mind, it's not a disaster, but it's certainly less overheated. If it's overheated at all, it's much different than it was, say, 2 years ago. I don't see we've got the tariff impacts that still have to flow through, and you can imagine a scenario in which tariff-related price hikes kind of kick off something bigger. I don't think that that's a high probability scenario, but it's a possibility. It's something the Fed wants to guard against and something they've talked about a lot. I don't think that we should be, just pulling our hair out that inflation is about to take off again. But at the same time, inflation has proven to be stubbornly high. And I think the Fed needs to, in my view at least, needs to take that into account and be cautious in moving rates down. The closer you get to the Fed's view of neutral, I think the higher the bar is going to be for cutting again. And you heard that a little bit yesterday. It's like, okay, I was willing to go along with last week's move, but I'm not sure I'm going to go along with another one. And then there'll be others who will say, well, I could go for one more, but I don't know about two more. You look at the range of longer run dots that we got last Wednesday. There are 19 people in the FOMC. There were 11 different answers for where neutral is, ranging from 2 5/8 to 3 7/8, right? So as you start to get into that zone, more people are going to get uncomfortable if you keep cutting.
We're getting closer to that zone.
We are.
Every meeting between now and May gets a whole lot harder potentially and not easier. Stephen, appreciate your time. Thanks for being here. Thank you. Stephen Stanley there of Santander with an update on stories elsewhere this morning with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. U.S. President Donald Trump is in New York to address the U.N. General Assembly later today at 9:50 a.m. Eastern. Trump is scheduled for high-stakes bilateral talks with leaders from Ukraine and the EU, as well as a multilateral meeting on post-war governance in Gaza with leaders from the Middle East and beyond. In an interview with Times of India, JP Morgan CEO Jamie Dimon says he hopes President Trump and Indian Prime Minister Narendra Modi can reach a trade deal. Plus, when asked about the Trump administration's steep hike on H-1B visa fees, Dimon said he will be engaging with stakeholders and policymakers, adding that the move, quote, came out of the blue. And Hong Kong has issued its third highest storm warning as Super Typhoon Ragasa approaches after lashing the Philippines, as you can see there. It is equivalent to a Category 4 hurricane, according to the local weather agency, and has caused major flight disruptions, closed schools and businesses. It could potentially be the most damaging storm in the region since 2018. That's your Bloomberg Brief. John?
Yahira, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with David Rubenstein of the Carlyle Group, live from New York City this morning. Good morning. You're watching Bloomberg TV. The opening bow is about 43 minutes away. Going into that opening bow, equity futures totally unchanged on the S&P. Likewise on the Nasdaq 100, on the Russell, on the small caps, up by 0.2. In the bond market, yields lower by a single basis point on a 2-year bond this morning, 3.59 on 10s, 4.13. Yields down about a basis point. Around an hour from now, the focus on the economic data. Talked loads about the Fed speak. Can we just talk about the data? I think these PMIs are important to get a flavour of how things started to build coming out of the summer.
Yeah, especially because European PMIs came out stronger than expected, and substantially so. At a certain point, are we seeing the reacceleration? Is it global? Is the U.S. the epicenter of it, or is it not? And I think that that's sort of an interesting question, especially when you look at the currency and then gold, and then you wonder what's going on there.
A gold rocketing.
Yeah, exactly.
40% plus move year to date.
Bonkers.
Amazing.
It is. I mean, and how much does it continue given the fact that central banks continue their investments?
Let's get you a sneak peek of the next week, including what you can look for today at 9:45 Eastern Time. As I said, PMI data coming out. Then just after that, President Trump speaking at the UN General Assembly. Later on this afternoon, comments from Fed Chair Jay Powell. On Wednesday, Fed President Mary Daly is speaking. On Thursday, another round of jobless claims. Plus, we get some results from Costco. Finally, PCE data to round out the week on Friday. Going into the weekend. Before we get to the weekend, make sure to watch the latest episode of Bloomberg Wealth at 9 p.m. Eastern Time as David Rubenstein sits down with Wellington Management CEO Gene Hines. David Rubenstein, the co-chairman of the Carlyle Group and host of Bloomberg Wealth, joins us now for more. David, welcome to the program, sir. We've got a range of topics to work through. First of all, given the Federal Reserve and Chair Jay Powell is in focus later on this afternoon, a man who, of course, you know well, we'd love your reaction to the latest pressure on the Federal Reserve and the division within the committee right now, and the daylight between Governor Myron coming out of the White House and everybody else. David, what's your reaction to that as it builds through the summer and as we enter the fall?
Well, the Fed did what most people thought it was going to do, which is to have a rate cut of 25 basis points. President Trump didn't applaud that. He didn't criticize it either. I presume he wanted a bigger rate cut, but generally he was okay with it based on what I've heard. But I think he would like more rate cuts. Whether the Fed will do more, time will tell. Jay Powell likes to look at the data, and I think he got enough favorable attention for the 25 basis point rate cut, such that he's not under pressure immediately to go do another 25 right away. But I suspect when the Fed meets again, another 25 basis cut would probably be on the table. Whether it will happen or not, I don't know. Depends on who's on the Fed, of course. As you know, there is Supreme Court litigation about who's on the Fed right now, and we just don't know who's actually going to be on the rate-cutting committee when the next Fed meeting occurs.
David, how closely are you tracking the replacement, the process to replace Fed Chair Jay Powell, and how credible do you think that process is?
I think the president has largely made up his mind. I obviously can't speak for the president, and I haven't talked to him about it. But I suspect that there are very few people that he is considering at this point. He knows all the people who are likely to be candidates pretty well. And I think it's down to one or two people, but I think he probably has made up his mind, would be my guess. I don't really know for sure. And I think those are people who are likely to do pretty much what he's interested in doing. So I don't think he's looking for any surprises by picking somebody he doesn't really know.
David, you're in a wonderful
position. And Jay Powell's term is not up until May, and Jay's made it very clear that he wants to stay through the end of that term, which is May of 26, and then he'll be gone, and then you'll have a new chairman. Presumably that person will be confirmed before Jay Powell actually leaves.
One of the questions for the Federal Reserve, as well as economists, more broadly, is just whether this economy is truly reaccelerating or whether we are facing something that is more pernicious, particularly led by the labor market. Based on your position, the hat that you wear at the Carlyle Group and the portfolio companies, are you seeing more signs of reacceleration? Or are you seeing more signs of something that's more tepid?
The biggest surprise to date is that the impact of the tariffs has not yet been felt in the economy in any meaningful way. When tariffs were imposed, people thought this would produce runaway inflation. It hasn't happened yet. That's in part because the tariffs haven't gone fully into effect, and in part because I think some of the U.S. importers are not passing along the costs. But probably it will take us 6 months or maybe even a year before we know the true impact of the tariffs. One thing I would like to point out, though, is the tariffs, whether you like them or not, are now going to be part of our economic system. And this is what I mean. When the big, beautiful bill passed the Congress, it assumed over the next 10 years or so we'd have roughly additional $2.2 trillion of federal indebtedness, $2.2 trillion over 10 years. But that assumed about $4 trillion of tariff income coming in. So if the tariffs were to go away, as some people would like them to be going away, you're going to have another $4 trillion of additional federal indebtedness. So we're in a difficult position. If you don't like the tariffs, you've got to come up with some other way to get $4 trillion of revenue into the system where you're going to have a gigantic increase in the debt.
David, you were talking about how this is a different system, right, where tariffs are a part of it. We also are talking, we've talked a lot about how the government has taken a stake in Intel, had a more direct influence over a number of different technology companies. When you talk to the heads of wealth, for you yourself at Carlyle, how much is it difficult to really adjust or change the way that you invest around some of these changed policy perspectives?
I don't think it's really changed that much because right now, most things that people like Carlyle or Blackstone or Apollo or KKR are investing in are not directly affected by what the president is doing. There are a couple of very visible deals that the president has taken or on behalf of the U.S. government some stakes in or had some modifications on the deal that was on the table. But generally, I don't think it's had a big impact. Right now, the investing world is in reasonably good shape. Inflation is not a gigantic problem at the moment. U.S. growth seems to be in reasonable shape. Clearly, there are always some challenges in the economy. I think most investors would like to have more certainty about where the Fed is going in terms of interest rates. But generally, I don't think people are holding back on doing deals at the moment. In terms of the stakes that the federal government's taking, presumably they will all be put in some kind of sovereign wealth fund or something of that type at some point. The U.S. government doesn't have a sovereign wealth fund. In effect, our sovereign wealth fund over the years has been our printing press because we've, in effect, been able to print all the dollars we really needed and, in effect, substitute that for a sovereign wealth fund. But I think the president seems to be interested in developing a sovereign wealth fund, and the Secretary of Treasury and others have talked about it. And presumably some of the stakes, like the Intel stake and others, will ultimately go into some kind of sovereign wealth fund.
David, if I could just quickly pick up on that comment you made earlier about Jay Powell will be gone. His governorship ends in 2028. This is someone you know really well. Do you think he will leave after he's no longer chair, or do you think he's going to stick around?
I don't want to speak for him, but my guess is that he will follow the pattern of every other chairman of the Federal Reserve, which is when their chairmanship is over, they depart from the Federal Reserve. Yes, he could theoretically stay longer, but once you've been the chairman of an organization for a long time, it's very difficult to stay around as a regular board member. So no, I believe, but I don't want to be making news about it, but I believe, based on everything I know, that he will step down as chair and step down as a board member when his term as chair is over.
David, you've been generous with your time. Thanks for your time this morning. David Rubenstein there of the Carlyle Group on the Federal Reserve and a whole lot more.
You know, his comments on the sovereign wealth fund were very interesting. The idea that the Intel stake and some others could end up in a sovereign wealth fund that we don't yet have. And that so far the sovereign wealth fund has essentially been the dollar and the printing press and how much that's going to shift to real investments in companies. That's something I want to wrap my head around a little
We've
bit.
asked the administration this. I've been in the room, and they say that that's not really the direction of travel right now. But David is right. There's been tons of speculation around this, and potentially this is what they are trying to do. When it comes to Jay Powell, he didn't want to make news, but Powell has yet to tell the administration he's leaving.
I know.
And this is where some of the angst is right now when it comes to Treasury Secretary and the president and how they're thinking about the Fed next year.
They want to put the chess pieces in certain places. Still trying to work out if there is a free place when Chairman Powell finishes his term as Fed chair in May.
Yeah, and I wonder why he isn't going to commit to that essentially right now. He's focused on the current ahead. He's not going to mention this later today.
It's going to be a conversation for the new year, I imagine. Going to wait until then. We'll see. Coming up tomorrow, here's the lineup for you. Peter Cheer of Academy Securities, Neil Dutta of Renmac, Barbara Reinhardt of Voya Investment Management, and Nathan Sheets of Citi. The chairman of the Federal Reserve coming up a little bit later, 12:35 Eastern Time. Look out for that. From New York City, you're watching Bloomberg TV.
इस क्रूड ऑयल को देखोगे साइडवेज चला गया है। जीडीपी का डेटा आया था यूएस का, अभी यूएस मार्केट ओपन हुआ नहीं है, बट यूएस का जीडीपी का डेटा ऑलरेडी आ चुका है। मेजर डेटा सारे के सारे ऑलरेडी इज देयर। सारे के सारे डेटा पॉजिटिव थे डॉलर के लिए, नेगेटिव फॉर गोल्ड एंड सिल्वर, चाहे वो जीडीपी का डेटा था, अनएम्प्लॉयमेंट क्लेम्स, ड्यूरेबल गुड्स, कोर ड्यूरेबल गुड्स और फाइनल जीडीपी प्राइस इंडेक्स, सारे के सब डेटा पॉजिटिव फॉर डॉलर, नेगेटिव फॉर गोल्ड एंड सिल्वर। अब 7 पीएम पे यूएस मार्केट और फिर 7:30 पे एग्जिस्टिंग होम सेल्स का डेटा है। 8 पीएम पे नेचुरल गैस की इन्वेंट्री फोरकास्ट देखोगे, लास्ट टाइम 90 बिलियन था, इस बार 76 बिलियन, मतलब लास्ट टाइम से कम एक्सपेक्ट कर रहे हैं। तो अगर 76 बिलियन से कम आता है तो इट इज़ बुलिश फॉर नेचुरल गैस प्राइस। तो फोरकास्ट तो बुलिश है, देखते हैं एग्जैक्टली कितना आता है डेटा 7 पीएम पे यूएस मार्केट के लिए। अभी नेचुरल गैस में सेल मत करना, ठीक है, वेट, थोड़ा सा वेट करना, डोंट सेल डायरेक्टली ओवर। नेचुरल गैस में ध्यान रखना है, नेचुरल गैस में नेक्स्ट मंथ का मैंने चार्ट लगाया बिकॉज अभी एक्सपायरी हुई नहीं है, आज है, कल से हम नॉर्मल चार्ट यूज़ कर सकते हैं उस केस में। ठीक है, यहाँ से एक सेलिंग का ट्रेड नेचुरल गैस में, ज़्यादा बड़ा एसएल मत लेना, 2 पॉइंट का एसएल काफ़ी रहेगा। एंड ठीक है, ये टारगेट है, इतना काफ़ी है टारगेट सेलिंग के लिए। इसको एक सेकेंड एक काम करो, हाँ उसको ना दोनों को नीचे वाले को भी मेंशन कर देते हैं, कोई नहीं तो फिर बड़ा दिखेगा। ठीक है, इन्वेंट्री सीधे 7 बजे आएगी तो सॉरी 8 बजे आएगी, तो ध्यान रखना थोड़ा सा। सेलिंग यहाँ से है इन नेचुरल गैस नाउ, ऑलरेडी करके बैठे हो तो एसएल इससे बड़ा मत लेना, इनफ एसएल है। यहाँ से एक बार सेलिंग आई है लो, दूसरी बार लोअर लो, तीसरी बार सेलिंग है, थर्ड टाइम आ रहा है प्राइस यहाँ पर, आप कह सकते हो दिस इज अ थर्ड टाइम प्राइस हिटिंग दिस लेवल। दो पॉइंट का एसएल काफ़ी है। भाई क्रूड ऑयल भी साइडवेज ही हो गया, मोमेंटम ही नहीं आ रहा इसमें भी। आखिरी बार है, लास्ट टाइम ही समझो। ठीक है, लगभग 2 पॉइंट का एसएल है, इससे ज़्यादा बड़ा एसएल लेना भी नहीं है, इतना इनफ रहेगा मेरे अकॉर्डिंग। दिस एसएल इज इनफ, 2 पॉइंट का ही है ना, देखते हैं फिर। थोड़ा बहुत रिस्क करता ही है कभी कभी, उतना रिस्क ले सकते हैं, ऐसा नहीं है। वन रेशियो 3 है, क्या ही होगा। सेम ही सिनेरियो है, दोनों सेम ही बने हुए हैं। देखते हैं ये निकलता है नेचुरल क्रूड ऑयल का। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ सकते हो। बाकी कॉपर की रैली कंटिन्यू है, कॉपर रुकने का नाम ही नहीं ले रहा। इवन डेटा देखोगे, डेटा थोड़ा सा नेगेटिव जरूर था, जो भी आया था जीडीपी का और बाकी डेटा, बट कॉपर कल से रैली में है। आज अर्ली मॉर्निंग ओपन हुआ, थोड़ा बहुत प्रॉफिट बुकिंग, फिर रैली। अभी थोड़ा बहुत डेटा की वजह से सेल ऑफ आ रहा है, बट उतना कुछ खास नहीं। आता है तो वापस मेरे अकॉर्डिंग सपोर्ट ले लेना चाहिए कॉपर एमसीएक्स में 940 939 से 940 के बीच में। बाकी गोल्ड में भी थोड़ा बहुत सेलिंग ही आ रही है बिकॉज ऑफ द डेटा। लास्ट कैंडल जो थी 15 मिनट की 6 PM पे जब डेटा आया था, जैसा मैंने बताया सारे के सारे डेटा नेगेटिव ही थे गोल्ड और सिल्वर के लिए। ऑल डेटाज जीडीपी का है, अनएम्प्लॉयमेंट, कोर ड्यूरेबल गुड्स सभी डेटा पॉजिटिव फॉर यूएस डॉलर, नेगेटिव फॉर गोल्ड एंड सिल्वर। तो उसका इम्पैक्ट कंटिन्यू चल रहा है अभी गोल्ड में, कंटिन्यूसली सेल ऑफ है 6 PM के कैंडल से अभी तक। सपोर्ट है लेकिन लास्ट सपोर्ट है, ब्रेक हुआ तो ये अगर ब्रेक कर देता है नीचे सपोर्ट तो बढ़िया है। अब काफ़ी टाइम से रुका हुआ है उसी लेवल पे, बार बार सपोर्ट लिए जा रहा है। नीचे 3690 95 वो रेंज अभी भी टेस्ट नहीं हुई है। एंड गोल्ड में देखोगे तो पहली बार सपोर्ट आया था, हाई बना था, दूसरे बार एक लोअर हाई, ये थर्ड टाइम आ रहा है यहाँ पे। बताया नहीं, बता दो दिया, नेचुरल गैस का फोरकास्ट बता दिया अभी तो थोड़ी देर पहले बताया था। नेचुरल गैस का जो फोरकास्ट था लास्ट टाइम डेटा आया था उससे कम एक्सपेक्ट कर रहे हैं, तो अगर 76 बिलियन से कम आता है तो इट इज़ पॉजिटिव फॉर नेचुरल गैस प्राइस, बुलिश फॉर नेचुरल गैस प्राइस। तो फोरकास्ट नेचुरल गैस की प्राइस की इन्वेंट्री का बुलिश है, ठीक है, अगर फोरकास्ट के अकॉर्डिंग डेटा आता है तो। नहीं आता तो अपोजिट भी जा सकता है, बट अभी के लिए फोरकास्ट बुलिश है। नेचुरल गैस में क्या हो गया, ओपन इक्वल टू लो, ओपन इक्वल टू लो कैंडल है, तो गलत कैंडल बन गई, ओपन इक्वल टू लो कैंडल। लास्ट कैंडल भी नॉर्मली थी में, सडनली क्या हुआ पता नहीं, ओपन इक्वल टू लो कैंडल है, ओपन इसका 0 टू 86.3, लो टू 86.3। इवन दो इसमें रेजिस्टेंस पर ही है प्राइस, कैंडल का ध्यान रखना, ओपन इक्वल टू लो कैंडल है एग्जैक्टली। टू 86.3। बुश के तो नहीं बना रहे, ओपन इक्वल टू लो पहले ऐसा उड़ाएंगे फिर नीचे लेके आएंगे। ऊपर तो है रेजिस्टेंस, वो काफी ऊपर है लेकिन चल जाएगा तो होल्ड मत करना, उसके ऊपर एक और रेजिस्टेंस है, वहां से देखेंगे फेक ब्रेकआउट ना हो बस। वही ना, फॉर फेक ब्रेकआउट ना दे, हो जाएंगे नहीं तो। भी साइडवेज हो गया है, मोमेंटम ही नहीं आ रहा, नीचे आता है तो शायद ब्रेकडाउन ही हो जाएगा। ठीक है, ऐसे जाएगा तो निकल जाना, होल्ड मत करना। ऊपर वाले एक और रेजिस्टेंस जोन है, वहां से सेल कर देंगे नहीं तो। दैट इज ऑल्सो रेजिस्टेंस एरिया। कह रहा हूँ फेक ना हो, जाना है तो पूरा ही चला जाए। 15 मिनट है यूएस मार्केट की ओपनिंग में।
News when you want it with Bloomberg News Now. I'm Karen Moscow. We have the latest on how a government shutdown could lead to a large-scale round of layoffs in just a moment. But first, we have breaking economic news crossing the Bloomberg. The U.S. economy grew in the second quarter at the fastest pace in nearly 2 years as the government revised up its previous estimate of consumer spending. Inflation-adjusted gross domestic product, which measures the value of goods and services produced in the U.S., increased at a revised 3.8% annualized pace. That was stronger than the previously reported 3.3% advance and followed an outright contraction in the first quarter. Initial applications for jobless benefits in the U.S. fell to the lowest since mid-July, underscoring how companies remain reticent to lay off workers. New claims decreased by 14,000 to 218,000 in the week ending September 20th. Continuing claims, a proxy for the number of people receiving benefits, were little changed. The White House is telling federal agencies to make plans for mass firings ahead of a possible government shutdown, now less than a week away. Bloomberg's Tyler Kendall has more.
This marks a significant escalation in rhetoric and threat from the Trump administration because normally we see those non-essential government workers furloughed but then brought back with back pay. Instead, we're seeing this memo from the OMB, which is directing agencies to come up with a list of workers whose activities are not paid for via mandatory funds or any new funding from the One Big Beautiful Bill, as well as to make a list of programs deemed inconsistent with the president's priorities.
And that's Bloomberg's Tyler Kendall, who says the memo comes after President Trump canceled a meeting with Democratic leaders that was focused on ways to keep the government open. Democrats say they won't be intimidated by the threat of mass firings. The deadline for a deal is 6 days away. The newest Federal Reserve Governor Stephen Miron is making the case for aggressively lowering interest rates to avoid damaging the economy, diverging from some other FOMC members. He was a guest this morning on Bloomberg Television.
It comes back to the longer that you stay restrictive, the greater the risks. And let me put it this way, it was just a few years ago that we were having endless conversations about declining population growth rates and the whole world becoming Japan in terms of interest rate profiles, right? Those forces are still real. Those dynamics are still real.
And that's Fed Governor Stephen Miron speaking to Bloomberg Television. Miron argues the Fed's current policy rate is highly restrictive because it's well above his estimate of the so-called neutral level, where policy neither boosts nor restrains the economy. President Trump is scheduled to meet today with two world leaders. Turkish President Recep Tayyip Erdogan will be at the White House for the first time in 6 years, while President Trump will also welcome Pakistani Prime Minister Shehbaz Sharif. Still no word on what motivated a man to open fire on a U.S. Immigration and Customs Enforcement location in Dallas. One detainee was killed, 2 others wounded before the gunman took his own life. The FBI says ammunition found at the scene contained anti-ICE messaging. A Paris court sentenced former French President Nicolas Sarkozy to 5 years in prison after finding him guilty of criminal conspiracy and an alleged scheme to finance his 2007 campaigns with funds from Libya. In a surprise decision, the court ruled that he will be incarcerated even if he appeals. Denmark probing potential Russian involvement after enduring the second drone attack this week. Large professional drones spotted at several airports and military air bases in Denmark disrupted flights and sparked a major police operation overnight. The airports are now open. The Russian embassy in Copenhagen said it firmly rejects speculations of involvement in the incidents. Disney preparing for a legal fight with President Trump now that late-night host Jimmy Kimmel is back on the air. We get more with Bloomberg's David Gura.
The president expressing surprise that ABC put Jimmy Kimmel back on. He said he was under the impression that Kimmel was canceled. Of course, that wasn't the case. It was always a suspension from the get-go here. But the president posting on Truth Social, I think we're going to test ABC out on this. Let's see how we do. Last time I went after them, they gave me $16 million. This one sounds even more lucrative. A true bunch of losers, the president writes in that post.
And that's Bloomberg's David Gura, who reports Disney had been expecting the Trump administration to go after its broadcast licenses even before Kimmel's controversial remarks about Charlie Kirk's murder. Bloomberg News has learned Intel has approached Apple about making an investment as it looks for more ways to boost its business now that the U.S. government is a part owner. Matthew Bloxham covers tech for Bloomberg Intelligence.
Intel's going through a massive kind of overhaul and transformation under new leadership. They're obviously struggling a lot, losing momentum to NVIDIA in the chips, and have really struggled to kind of make this new business, the foundry business, essentially producing chips for other companies, really kind of take off.
And that's Bloomberg's Matthew Bloxham. And Starbucks says it will close stores and eliminate 900 jobs in a $1 billion restructuring effort. This as the company amps up a turnaround plan under new chief executive Brian Niccol. And futures this morning are lower following that economic data, with S&P futures down 0.4%, Dow futures down 0.2%, NASDAQ futures down 0.6%, and the 10-year Treasury yield 4.18%. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
कि क्रूड ऑयल में देखोगे फिर से ओपन इक्वल टू हाई कैंडल सडनली नीचे आया, ये लेवल मल्टीपल टाइम टेस्ट हो गया, ब्रेक नहीं हुआ है, दैट इज द ओनली थिंग। अभी तक वैसे ब्रेक हो जाना चाहिए। सपोर्ट ब्रेक ही नहीं हो रहा, ये ना ऊपर का रेजिस्टेंस भी मल्टीपल टाइम टेस्ट हो गया, सपोर्ट भी मल्टीपल टाइम टेस्ट हो गया। इस रेंज से कहीं बाहर निकल जाए तो बेटर है, नीचे आ जाए तो भी बढ़िया, ऊपर जाता है वो भी बढ़िया। जब तक ऊपर वो क्लोज नहीं होता तब तक तो वो बढ़िया ही है। नेचुरल गैस भी स्टक हो गया है, या तो ऊपर ही चला जाए अब। Geopolitical risk outweigh oversupply concern for crude oil. थ्री मिनट यूएस मार्केट ओपन होने वाला है 3 मिनट में नहीं उसको रहने दो लेट इट गो क्रूड में हुआ था नेचुरल में नहीं क्रूड में नहीं हुआ था क्रूड में ही हुआ था US market open. ठीक है, वो याद रखना सेलिंग वाला जो ट्रेड था उसमें एसएल जा चुका है, यहाँ पर वो हल्का सा टच कर दिया था उसने एसएल, फिर से नीचे आ गया, नहीं निकले तो निकल जाओ, अब कॉस्ट टू कॉस्ट प्रॉफिट में आ गया फिलहाल के लिए थोड़ा बहुत, बट एसएल निकाल चुका है। इन्वेंट्री आने वाली है तो देखते हैं, अब सीधा शायद मे भी इन्वेंट्री के बाद ही मूव करें, इससे बड़ा एसएल अभी रखना ही मत इसमें, इन्वेंट्री के बाद ही, नहीं तो फिर मूव होगा मोस्ट प्रोबेबली, अगर अभी मूव नहीं होता है तो। कितना है इसमें टारगेट, लगभग कितना रख सकते हैं अप्रोक्सीमेटली, इससे बड़ा टारगेट ही मत रखना, काफ़ी है, एक ब्रेकआउट था वो। वो भी एक सपोर्ट है वैसे तो। जो 7:30 का एक डेटा और है, बाकी नेचुरल गैस सॉरी क्रूड ऑयल को बाय मत करना, मल्टीपल टाइम आ गया इस लेवल पे, अब अवॉइड ही करेंगे, अगर अब बाइंग आनी है तो थोड़ा सा गिर जाए प्राइस 5640 के अराउंड, वहाँ देखते हैं। रेंज ब्रेक हो जाए फिर देखते हैं। बाकी अगर एक क्रूड ऑयल रेंज ब्रेक कर देता है नीचे साइड में तो फिर डे हाई को एज अ रेजिस्टेंस मान लेंगे। ठीक है, हल्का सा पुल बैक आएगा तो वापस सेल ही कर देंगे, नीचे आ जाता है बढ़िया है, नीचे से बाइंग। क्रूड ऑयल में रेंज डाउन साइड की ब्रेक हो जाए इन केस दिस विल बिकम अ रेजिस्टेंस, देन एक्सपेक्ट था ऊपर की रेंज ब्रेक करेगा, नहीं कर पाया। 1:3 भी नहीं बना है इसमें तो। ऊपर आ जाए तो सेल। ठीक है, क्रूड ऑयल में दोनों ही ट्रेड हो सकते हैं। अब ये हल्का सा अगर नीचे आ जाता है यहाँ बाई कर लेना पहले ही, अगर ये नीचे आने से पहले ऊपर चला जाता है एक बार तो यहाँ सेल। इस लेवल पे फिर से बाई मत करना, इस रेंज के लोअर एंड पे मल्टीपल टाइम टेस्ट हो गया है। इन्वेंट्री आने वाली एक डेटा भी है 7:30 पे, गोल्ड और सिल्वर को थोड़ा बहुत इम्पैक्ट करेगा, एग्जिस्टिंग होम सेल्स का। देन 8 PM पे नेचुरल गैस की इन्वेंट्री। आज तो बुलिस है, देखते हैं एग्जैक्टली कितना आता है डेटा।
Technology touches on everything that we care about. The economy.
President Trump, what happened with Chuck Schumer?
Are you going to push Zelensky for peace, President Trump?
President Trump, why did you cancel the meeting with Chuck Schumer?
Technology touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
HSBC says it has achieved a world-first breakthrough in deploying quantum computing in financial markets. The London-based bank used IBM's quantum processor to attain a 34% improvement in predicting bond trade prices. Let's bring in Robert Lee right now, senior analyst at Bloomberg Intelligence, for the details on this apparent breakthrough and what it could mean for banking. So, Rob, the head of quantum technologies at HSBC telling Bloomberg he sees this potentially as a Sputnik moment for quantum.
Yes, I did see that. I think that's an interesting choice of words, and I think it's a very interesting development. But again, if you take a step back, any innovation, any new technology sort of follows a continuum, really. It sort of starts with that Archimedes moment in the bath, you know, the flash of inspiration. Then it goes into the research phase, and then through to development, and ultimately commercial deployment. So the reason I explain that is I think quantum computing is still very much at the research phase. So this is very much, a very interesting development. I suppose, again, looking looking at the headlines and HSBC's announcement, what we don't know is if what they've achieved is repeatable, and is it scalable, and is it ultimately deployable at an affordable cost. So, for example, if you were to build a quantum computer in your living room, you would need state-of-the-art equipment that's probably only found in IBM labs or, the labs of Imperial College and the like. It's incredibly complex, incredibly expensive. For example, you need to lower the temperature of these things down to literally very close to what is called absolute zero. You need huge setups, you need superconducting technology. It's really, really difficult. So I think what we're seeing is an interesting step along the research path, but the commercial deployment of these things remains many, many years away.
Okay, so you can't just put one of these quantum computers next to or on a trading floor and expect that magic happens. Given all of those questions and all those caveats that you underscore for us, Rob, what is your sense, what is your understanding as to when we start to get real practical applications for quantum?
Right, in my mind, keeping things very simple, you've probably heard of fusion power. These are power plants that are trying to replicate the conditions of the sun. If scientists and developers can crack that problem, then in theory, it would solve all the world's energy needs. In theory, it's unlimited power at a very, very low cost. Now, that is something really to gun for, something to aim for. Quantum computer is similar. These are two technologies with massive long-term promise, but they face considerable technological barriers, and we're nowhere near achieving commercial deployment on either of them. So again, at the research lab phase, businesses should continue to develop, but it goes back to the premise of risk-reward. The promise and the reward is potentially huge, but the risks and uncertainties relating to those, you need a real, Nobel Prize-winning development. And so trying to predict that is next to impossible. Will it happen in the next year, 2 years, 5 years, 10 years? Who knows? So very, very interesting technologies, both of them, but based on what we do know, based on the facts, the commercial deployment of these technologies remains pretty distant, I think. That's a rational way to look at it.
Yeah. Okay, no, that's really interesting in terms of how to frame the timing of this and all the question marks over that. Rob, you were there in Hong Kong. To what extent is quantum computing and the race towards that end goal, whatever the time frame is a race between China and the US, or at least China and the West? And where does China stand? To what extent is this a geopolitical story as well?
Well, yeah, that's a very interesting question. It is, and if you look at China's strategic objectives, quantum computing is one area that the government has outlined of being of national importance. But again, it very much remains at a research phase. It's government labs, private labs who are pursuing investments. Again, as far as I'm aware, there are no deployable quantum solutions in the China market at the moment. So absolutely, given their vast scale in resources, in a way, it is a bit of a two-horse race, again, between the US and China. But again, let's not forget people in Europe, people at Imperial College and elsewhere. There is a global development going on at the research phase at the moment.
Technology touches on everything that we care about. The economy, media and information, markets, trade, geopolitics.
The Trump show hits the road every once in a while, and the aperture opens. And welcome to the second term. He hit a lot of themes that he'd hit previously in this, although probably more strongly than in the past. Basically, he sort of assailed the UN over, as he mentioned, climate and immigration as two big topics, going so far as to basically completely dismiss the notion of climate change as a hoax, but also on immigration, saying that it's the single biggest political issue of our era. So trying to draw a line in the sand. But Trump, being Trump, he talked about the teleprompter, not working. This was sort of a bit of his in the campaign. Let's just say it's open to interpretation whether that was actually the case or not. The UN said the teleprompter was working fine. And of course, but then was griping about the escalator.
That was not working fine.
That was not. I can confirm the escalator
was not working,
and then later was working. It seemed to get under his skin, and that's when he went off about the renovation that he wished he'd done, and told them, you could be walking on marble, you're walking on terrazzo flooring, you know that, right? So, it's it was a journey, a weave, as President Trump likes to say, but I think it just underscores not only his long-standing disdain for the UN. Remember, the U.S. is delinquent right now in its funds to support the UN. Trump has given no indication that he plans to change that, but also that kind of new grievances are adding on. In particular, he thinks he's obviously kind of gently, somewhat campaigning for a Nobel Prize. He talks about ending 7 wars, and he's wondering where the UN has been. He sort of wanted credit for it, said they didn't get a phone call. But Trump being Trump, he got off stage, sat down with Guterres, and then was all smiles and nice. So pick your lens, I suppose.
Yeah, even mentioning other leaders who he had said things about, but then had run into personally, essentially saying, I ran into this person, I can't believe I'm going to be talking about this. And it's kind of, for you who covers Trump, covers the president, it's not surprising because that's the way he is. But for world leaders who are sitting there who are not necessarily accustomed to following every comment that he makes, especially at the UN, this was unconventional.
I think that's fair to say. I mean, if you're being sort of re-onboarded into a Trump speech after maybe 6 years, it had been since his last one, for sure, this is going to take you by storm. I do think that there are things to watch that will make news today, for sure, beyond the speech, including the bilateral with President Zelensky, which should be wrapping up just as we speak, right, or just has wrapped up. Trump has really shifted on Zelensky a lot. He said today that it's remarkably brave what the Ukrainians are doing. That is a big shift in tone from January. And so that one we're watching, he sort of tacitly endorsed the notion of NATO nations shooting down Russian planes if they violate
Does that have to do with the recent violations of airspace that we've seen?
I think I personally would read that more as a Trump sort of hand-wavy type of comment. I would not read that as like an emphatic shift in U.S. policy. Okay. He sort of danced around the drone issue. He danced around it again in a separate answer today. But he did say flatly, yes, he thinks that NATO should have the right to shoot down Russian planes, not drones, if they incur on NATO airspace. So we'll see. As you know, this is speaking of longtime grievances. It wasn't just the UN. NATO, of course, he has had sort of a bumpy ride with, but he's been more pro-NATO as of late, in particular touting the increased defense spending pledges from Europe and Canada and other allies generally. So I think that one we got a lot of eyes on. This Macron meeting could be interesting. He made a little bit of news last night, wandering the streets of New York, upset about the president's motorcade. We can all relate to that.
Well, everybody knows a city bike is the way to go during the UN General Assembly.
That's
so
right.
If only he had had a helmet, maybe we would have seen the French leader on a city bike.
We can hope.
That would
we
have
can
been
hope.
lovely.
Yes, yeah, we can hope. But no, that'll be going. Trump is hosting a reception tonight. We don't actually know who's going. So we don't know if this is sort of a friends-only thing, like, Milei and the other whatevers, or if it's a broader thing. So we'll see. We don't know right now whether they'll let the press in, but I'll be there waiting, hoping, praying. So
Josh
I'll keep you
outside.
posted.
Hey, I'll be here outside waiting for you guys to invite me in.
On your city bike?
Yeah.
On your city bike?
Yeah.
I mean, against everything else that's going, we're still doing stories about the H-1B visas. I mean, there's just so much, Josh. When you look at the president, I don't know how you guys do it because there's so much coming at you. Top of the White House agenda right now, because sometimes I feel like, watch here, guys, but don't look at here, which is maybe something impactful. I don't know. How are you sussing out kind of what matters right now when it comes to the White House?
I mean, Trump always likes to flood the zone. That's been a consistent theme throughout his presidencies. I think on the H-1B thing, this is a big change, and it's a little unclear to me whether they're shifting it on the fly. Remember, they had their big announcement Friday. Everyone's brains exploded. On Saturday, they started to, let's say, detail, critics might say walk back, some of the things. For instance, Secretary Lutnick said things on Friday that have not ultimately been the policy. And then today, the new development is sort of getting rid of the lottery system. We knew that was happening. Trump had signaled before the whole $100,000 fee thing that was happening. But this is a huge change. And so they, whether its impact on the tech sector, on healthcare, all this is really up in the air right now. And it's, part and parcel, obviously, with a complete overhaul of the American immigration system as he sees it. So, people that have H-1Bs now are breathing a sigh of relief because there was a moment there where they were like, oh, shoot, we got to get back on U.S. soil, in hours. But it doesn't look like that's the case.
geopolitics.
Good morning, this is Bloomberg Daybreak Europe. Happy Thursday. I'm Tom McKenzie in London. These are the stories that set your agenda. US futures edge higher after Wall Street takes a breather from the AI-driven rally. The Fed's Mary Daly says more cuts are coming, but says the central bank should move cautiously. Bloomberg learns Intel has approached Apple about a potential investment in the struggling chip maker after locking in funding from Nvidia and the US government. And the US lowers tariffs on auto imports from the EU to 15%, cementing the terms of their framework trade agreement. Meanwhile, America sets the stage for levies on robotics. So a little bit of caution settling into these equity markets over the last few days. A little bit of softness coming through across European stocks. By the end of the close yesterday, down around 0.3. A similar picture for US markets as well. Certainly question marks around how far the Fed will go. And a mixed response, of course, from those Fed officials. European futures right now pointing a little lower after the losses of yesterday. 2 straight days of losses right now on US stocks. FTSE 100 futures pointing down by 21 points. S&P futures after the downside of yesterday. Again, down around 0.3 on the S&P 500. Looking to modestly add around 0.1%, and a similar picture for the Nasdaq 100, looking to add 22 points. Let's flip the board and have a look cross-asset then. Part of the concern filtered through yesterday with a modest sell-off in treasuries. Right now, 4.13 on the benchmark 10-year, largely unchanged across US treasuries. Stability back, it seems, in the session today. 134 on the pound, up 0.1% versus the US dollar. A reminder from Bloomberg reporting on the splits amongst the members of the MPC between the BOE governor and Megan Green as well, both pointing to different factors that they're concerned about in terms of the labour market and inflation. There is division, of course, atop the MPC at the BOE. Copper holding at near highs, currently largely unchanged in the session. This is on supply disruption out of Indonesia. So we look at Dr. Copper for the moves there, but certainly a reminder of the tightness when it comes to supply on strong demand continuing for that metal. Brent at $69 a barrel, down 0.4% on oil. Currently a little softer in the session on Brent. Let's cross over to Asia right now, check in on how Asian equities are faring, what the Asian session is focused on, and bring in Winnie Su. Winnie, what are you looking at?
Yeah, Asian stocks pretty mixed today. A bit of a fatigue after these record highs, right? Actually, in the Hong Kong market, the typhoon has finally left. We are seeing a little bit of an upside here. And also in Japan, rising a little bit, driven by the gains in bank shares after, as expectations are rising, that the Bank of Japan will likely raise rates in October. And we also saw quite solid demand when it comes to the 40-year JGB auction that happened just a while back, signaling how investor sentiment remains quite intact amid this whole geopolitical uncertainty. Now, one sector that really stood out today, as you mentioned, Tom, is that copper-related sector. We are seeing that the miners are up across the board, and that's really because of how copper prices surged after Freeport-McMoran's Indonesia mining incident, and that raised concerns around the supply disruptions. So mining stocks, whether it's in Japan or in Hong Kong, we're seeing jumping some 10%. And while we talk about kind of the optimism around AI, we have to take a look at what's going on in the Chinese tech shares. Again, we're seeing HS Tech up 2%. So there's no cooling down in terms of the optimism for the China AI story. Alibaba yesterday jumped some 9% already after the CEO said that they're going to increase the AI investment. And today it's still up, right? And when you look at CATL, another one that I really wanted to draw your attention to, it's hitting another record high because of the strong demand when it comes to the outlook for battery, and it has now just overtaken Maotai to become China's third largest stock.
Okay, well, from the drinks maker then to the maker of those batteries. And no let-up, as you say, in that AI theme over in China, even if it starts to cool in the US. Bloomberg Asia Equities reporter Winnie Su, thank you very much indeed with that update. Staying on tech, Bloomberg's learned that Intel has approached Apple about a potential investment in the struggling chip maker. Part of its comeback, of course, or its comeback push after the US government took a stake. Sources say the companies have also discussed closer cooperation. Apple was a long-time Intel customer, but then switched to in-house processors in the past 5 years, with its most sophisticated chips being made by TSMC. And the AI boom has made its way to the credit market after Oracle's jumbo bond sale as the software market ramps up its spending on the technology. Software maker ramps up its spending on the technology. Let's bring in Bloomberg's Valerie Teitel right now for the read across the linkages between tech spending on CapEx and the broader markets, particularly when it comes to credit. Val, how significant was Oracle's issuance?
It was a huge deal yesterday, the second largest corporate bond deal of the year, coming second only to Mars's massive $26 billion bond sale to finance a takeover. The deal was oversubscribed. The total orders reached around $88 billion. Tom, they tapped every part of the curve from 5-year all the way out to 40-year. But this is really starting to beg some questions over this massive gap of funding, just how the AI boom is going to finance it. Morgan Stanley did some very interesting analysis of where the boom in credit could be seen. If we flip the board, Morgan Stanley sees that most of the spending will be covered by the cash flow from hyperscalers, nearly $1.4 trillion to cover the total nearly $3 trillion of CapEx that has been pledged. But they see a decent boom coming into private credit. $800 billion in the next 3 years could be raised via private credit. Now, given the size of the U.S. private credit market right now is around $1.5 trillion, that is a 50% expansion of the private credit market. They also see it going into other private vehicles such as private equity and venture capital. But this is a very interesting time, Tom, to be thinking about just how these companies are going to be raising this financing, and have they set an impossibly high bar for themselves in order to raise this funding in the next few years. To really try to put this into perspective for you, Morgan Stanley is saying they need to raise around $1.5 trillion over the next 3 years. The U.S. government in 1 year borrows around $2 trillion. So they are looking to borrow as much as the U.S. government to fund this AI CapEx spending in the next few years. Now, this kind of thought has been weighing on the equity market this week. Yes, we're down, but just slightly in the last 4 sessions, down just around 0.25%. But Tom, this is now looking like the worst week for the equity market in 2 months. It's really gone against the weak September seasonals this month. To have such a strong September is really quite an outlier.
Okay, that's some remarkable stats in terms of the borrowing that's going to be needed to build out that infrastructure for AI and the comparisons with the US government. Bloomberg's Valerie Teitel, thank you very much indeed. And the softness, of course, that we've seen filtering across the S&P 500 in the last couple of days. Part of that was down to concerns about where the Fed goes, of course, and how much conviction there is that the Fed really is leaning into this dovish mode. How many more cuts will be coming through? Well, we will bring you an interview on that front with new Fed Governor, of course, Stephen Meyer, and he's called for multiple 50 basis point cuts. That conversation kicking off at 1 p.m. London time, certainly worthy of your attention. Now, the US has formally cut tariffs on EU cars to 15%, with the lower rate backdated to the 1st of August when the agreement was reached. Let's get more from Bloomberg's news desk editor Balazs Pence. Balazs, this is something that clearly the European automakers and the industry had been waiting for, so good news for the EU. How clear is the path ahead then? How significant is this deal? Is it completely locked in? Can they now breathe a sigh of relief?
Well, this is certainly a relief for European automakers who have been seeking some sort of stability for the market and have been seeking a sign that they can go ahead and with their planning and kind of know what sort of business environment to expect when it comes to the U.S. market. So it is something that the EU has been pushing for ever since Donald Trump announced those tariffs. There are a few sticking points still in that trade relationship. steel and aluminum being part of that, where the EU has been pushing for lower tariffs. They floated an idea about quotas for European exports. Germany, for example, has been very vocal about trying to get something done there. It doesn't look like they have gained a lot of traction with the U.S. side, but getting this deal done, getting this in the books and getting this cemented does help the auto industry and does show that the EU has been able to achieve some of the most favorable rates within this new trade and tariff environment globally.
Okay, so that's one hurdle out of the way, Balázs. But then the Trump administration throws another hurdle in the way, it seems, threatening tariffs on robotics and medical devices. What have they been saying? Why?
Well, this is an interesting one because these sort of investigations are often the precursor of sectoral tariffs. We've seen that, for example, in the pharmaceutical industry. We've seen that those types of investigations ongoing in the semiconductor industry. This was the sort of investigation that laid the groundwork for auto industry tariffs as well. And what's important about these tariffs is that these are different from those kind of country-by-country tariffs which are being challenged and which are being decided by the Supreme Court whether they are legal or not. This is a different process, and these can stay even if those tariffs are found to be unlawful by the Supreme Court in the U.S. So this does seem to lay the groundwork for another sector where tariffs might be coming in. This would cover a lot of exports that companies use to bring in the machines for their plants, a lot of presses, a lot of that sort of equipment. So it does look like there's yet another sector where we can count on some level of uncertainty.
Okay, another wrinkle in global trade. Bloomberg News Desk editor Balázs Pence, even as the US removes those tariffs, or at least edges them low, down to 15% on EU autos. Balázs, thank you. Here's what else to think about in the day ahead then. We get the SNB, the Swiss National Bank, rate decision. That's at 8:30 a.m. UK time. We will break that for you. Of course, all sorts of implications with a nation that faces far higher tariffs from the Trump administration than the EU, and we know negotiations, at least the Swiss, are attempting to negotiate that away. So there's implications for the currency at a time, of course, when the inflation dynamics are starting to adjust over in Switzerland. So we'll break that for you, of course, the implications, and we'll watch the Swissy on and in the lead up to that decision. At 1:30 p.m. UK time, we're going to get US jobless claims. So this week, US jobless claims giving us more detail on the labour market amidst concerns, of course, amongst some Fed officials that the labour market is starting to deteriorate. And then, of course, you have PCE on Friday. So you get both labour market data and inflation details this week at a time when we know FOMC officials are split in terms of where to put the emphasis on those two considerations. And at 2:45 p.m. UK time, there will be an address at the United Nations General Assembly by Palestine and their representatives at a time, of course, and on a week when France, the UK, Canada and others have formally recognised a Palestinian state. You get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, terminal subscribers can go to DAYB Go. On the terminal, front and centre is this intriguing story about HSBC and its use of quantum computing power to better predict bond prices, a potential Sputnik moment, according to executives at HSBC. Coming up, Ukrainian President Volodymyr Zelensky issues a warning to Europe at the United Nations General Assembly. We'll bring you that speech and the context. Plus, as I mentioned, HSBC beating its Wall Street rivals by deploying IBM's quantum computer in a world first. We have the details later in the show. This is Bloomberg.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Welcome back to Bloomberg Daybreak Europe. Now, Ukrainian President Volodymyr Zelensky has urged the European Union to provide Moldova with funding and support for its energy sector. Zelensky gave a warning in his address at the United Nations General Assembly.
We have already lost Georgia in Europe. Human rights and the European nature of the state system are only shrinking there. Georgia is dependent on Russia. And for many, many years, Belarus has also been moving toward dependence on Russia. Europe cannot afford to lose Moldova too.
Well, for more, I'm joined by our Europe correspondent, Oliver Crook. Ollie, Zelensky's warning then on Moldova, coming, of course, at a time when President Trump has apparently shifted his stance on Ukraine. Of course, he can shift it back again, given the nature of this US president. But why is the leader of Ukraine focusing in on Moldova?
So he's focusing in on Moldova because they're holding parliamentary elections this Sunday, just a couple of days away. And if you look at the polling, it's pretty razor thin in terms of the sort of pro-Russian side of things. And then the current president's group that is going up against that side, really coming in with a couple of basis point percentage differences, with a lot of sort of external factors that are involved as well. We had a great story out a little bit earlier this week about a report that we had about seeing documents about basically the Russians' plans to try to sort of destabilize this, try to encourage their side of the political aisle. And as you know, Tom, this is a very familiar story for many political stories across Europe, but particularly in Eastern Europe. So something that, of course, Ukraine is very conscious of, because Moldova is on the other side of Ukraine. You have Russia here to the east, and then Moldova in the sort of southwest of the country. So something that is very present in the mind of Volodymyr Zelensky, and very present in the mind of the Europeans, who have been trying to attract more and more of these countries into the orbit of the European Union. And Maia Sandu, the president of Moldova, has been bringing the country closer and closer and closer in that direction. There is now the strong magnetic pull on the other side from the Russians, and trying to sort of pull them in the other direction. And this really speaks to the situation in so many of these countries, Tom, where you have this sort of tug of war between Russia and the European Union. And again, the European Union trying to bring more and more countries into the blocs at a time when within this bloc itself, the European Union having a great deal of issues with nationalism and all other kinds of issues. So again, a key election to be watching this Sunday.
And we mentioned Trump's change of rhetoric, change of tone on Ukraine and Russia. Is he backing that up with additional pressure on Russia and more support for Europe? And if not, why not?
And so we're talking about sort of familiar patterns, what we're seeing in sort of Eastern European politics. There's a familiar pattern that we've seen and become very sort of aware of within American politics, which is something shocking happens, something nobody really expected from the Trump administration, something that feels very significant. And then 24 to 48 hours later, the dust is settling and you're like, actually, what does this mean? What does this actually mean for Europeans? And that is what they're trying to figure out now. So Trump's rhetoric has shifted on Ukraine. We should not undersell how significant that is, how significant it feels to have the United States on your side for the Ukrainians and the Europeans. But what the Europeans now need to do is to turn that sort of good feeling into some actual positive momentum, into actionable points. And one of the most actionable things that has happened over the last week is the Trump administration pressure on the Europeans to basically get rid of the Russian LNG and gas. That is something that they now have moved forward with. They moved it a year earlier, but it's still a year away. Maybe the United States could be used to put pressure on Hungary Hungary and Slovakia to get them off of the oil and gas that is still coming from Russia. But again, that is a sort of small part of the conversation there. There is also the question of weapons now. Will the Europeans be able to mobilize more money? Because now we know that the United States is willing to sell those weapons. Will there be new funds? Who is going to back that? So I think that that is really the big question. And of course, to say nothing, Tom, of the fact of the big sort of debate that is now going on in NATO and how to deal with these air infractions. We've had basically three different models. You had the Polish saying anything that comes into our airspace, we will shoot down. The Estonians are taking a much more measured approach, saying we need to be sort of strong, but we don't want to sort of instigate too much. And the Germans saying, actually, you're just playing into Russia's hand. You need to be much more cautious and much more skeptical of all of these sorts of things. Again, to Trump sort of adding an additional sort of interesting element here, saying that basically the Europeans should be shooting down Russian jets. But again, coming back, stepping 48 hours after those comments to actually figure out what this means from the United States and how the Europeans should action it, we should say that the Europeans, as welcome as these sort of comments are very skeptical that this is something that they can hold on. What they want to do is use Trump momentum when they've got it, but not rely on it for the future.
Yeah, and that question that overhangs all of this, doesn't it, as to whether or not Trump ultimately does have Europe's back if tensions with Russia escalate further from here with those incursions. Bloomberg's Oliver Crook, thank you very much indeed with the latest. Now, some other stories making the news this Thursday. The US is preparing a $20 billion swap line for Argentina and may buy the country's bonds, providing support for President Javier Milei as he works to regain investor and voter confidence. US Treasury Secretary Scott Bessent told Fox News the financing is intended to assist Milei ahead of next month's midterm elections. Democratic Senator Elizabeth Warren has described it as a bailout for a Trump political ally. US envoy Steve Witkoff is predicting a breakthrough in the Israel-Hamas war in the coming days. That's after President Donald Trump presented a 21-point plan to regional leaders in a meeting at the United Nations General Assembly. Witkoff didn't detail the plan, but said it addresses Israeli concerns as well as the concerns of all the neighbors in the region. Politico earlier reported that Trump promised Arab leaders in the meeting that he would not allow Israel to annex the West Bank. Coming up, will the Swiss National Bank avoid dropping rates to negative? We'll do a preview for you. That decision's at 8:30. We'll set you up for the SNB decision. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The Swiss National Bank expected to hold rates at 0% today after having cut six times in a row. The Swiss franc's strength is a pivotal factor, of course, affecting future decisions, along with domestic inflation standing at 0.2%. 0.2% inflation in Switzerland. Bloomberg's economy and government reporter Bastian Benrath-Wright is in Zurich with a preview for us. What are the chances then, Bastian, of a surprise from the SNB?
Good morning. Well, if you ask economists, they are pretty low. We polled more than 20 economists, and just one single one said they expect a cut to negative 25 basis points. However, obviously, that being below zero would be a massive step, the reintroduction of negative interest rates. So really, since everybody is expecting that hold at 0%, it's a very binary decision today. So either it's going to be rather boring if they hold, if they do what everybody expects, or it's going to be very exciting because it would be the first time negative interest rates are reintroduced in the world after the 2008 crisis and the following aftermath, the euro crisis and so on. Since then, the SNB was one of the last to exit negative rates in 2022, almost to the day 3 years ago. So it's not, for Switzerland, it's not that long ago. So the question is, will they really want to go there? We'll see at when they have the decision in not so long a time.
OK, that could be a new chapter, or at least returning to an old chapter, but a new chapter in the current regime. Meanwhile, Bastian, the tariff impact, we're reminded, of course, that Switzerland faces almost 40% tariffs. What is the tariff impact on inflation?
Well, the question is what will happen. There's multiple channels on which the tariff goes on inflation. So for once, there's obviously growth. The growth forecasts for next year have just been slashed if there's no resolution to this tariff spat with the US found. And obviously, if growth goes down, inflation will go down, which is already very slow. And on the other hand, you also have the strong franc because actually since April, since Donald Trump has unleashed his tariff onslaught on the world, investors have been pushing money into the franc and have been pushing the franc up, and that is also weighing on inflation. So either way, inflation is it's weighing on inflation on different channels, and at 0.2%, it's already pretty low in Switzerland. So the policymakers of the S&P definitely have to watch that.
Bloomberg's Bastian Benrath right on what could be a very interesting day in Switzerland. Joining us from Zurich, Bastian, thank you very much for that preview of the SNB decision. And stay with us for the SNB President, Martin Schlegel's briefing after the rate decision. We will have an interview with him later in the day. Coming up, we're going to be speaking to the CEO of the asset manager ICG, which raised more than €3 billion for a European infrastructure fund. That discussion is coming up. This is Bloomberg.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level, being open to comments, feedback, discussions. There's always this back and forth workflow. Sometimes conversations with different people might open up ideas to explore.
Embrace a growth mindset. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. US futures edging higher after Wall Street takes a breather from the AI-driven rally. The Fed's Mary Daly says more cuts are coming, but she says the central bank should move cautiously. Bloomberg learns Intel has approached Apple about a potential investment in the struggling chip maker. That's after locking in funding from Nvidia and the US government. And Spanish Prime Minister Pedro Sanchez says he will run for re-election in 2027. That is despite polls showing his Socialist Party will have a hard time winning a majority in Parliament. We bring you our interview with the Spanish PM. Before that, though, let's get to the markets and a check. Given the relative softness that we've seen, a bit of a cooling of the appetite around the equity story, of course. Still, global markets at close to those record highs, but 2 straight days of modest losses for
इन्वेंट्री आज इन्वेंट्री पॉजिटिव आई है इन्वेंट्रीज लुक्स लाइक पॉजिटिव देख लेते हैं एग्जैक्टली न्यूट्रल है ये तो इन्वेंट्री न्यूट्रल ही है वैसे पॉजिटिव है 1 पॉइंट का डिफरेंस है 1 बुलियन का बट मार्केट इसको न्यूट्रली लेके चल रहा है लुक एट दिस 90 बुलियन लास्ट टाइम आई थी 76 बुलियन फोरकास्ट था मतलब कम था फोरकास्ट आई कमी है 76 बुलियन से कमी हुआ 75 बुलियन बट सिर्फ 1 बुलियन का डिफरेंस है तो नेचुरल गैस इन्वेंट्रीज बुलिश फॉर नेचुरल गैस प्राइस बट वेबसाइट ने इसको न्यूट्रल लिया है वाई बिकॉज डिफरेंस बहुत कम है तो हम कह सकते हैं इन्वेंट्री बुलिश ज़रूर है बट बहुत ज़्यादा डिफरेंस नहीं है ठीक है तो वेबसाइट इसको न्यूट्रल लेके चल रही है इसलिए ना ये रेड है ना ग्रीन है न्यूट्रल कह सकते हो न्यूट्रल फॉर गोल्ड नेचुरल गैस प्राइस इन्वेंट्री देखते हैं यहाँ पर ये सपोर्ट करता है या फिर नहीं करता है थोड़ा क्वांटिटी का ध्यान रखना, इन्वेंट्री आ रही है, ऐसा ना हो ब्रेक डाउन ही कर दे। बाकी अब और कोई डेटा नहीं है, आज का डेटा हो गया कंप्लीट, डन। भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। ठीक है, इन्वेंट्री आई है वैसे तो पॉजिटिव, बट उसको न्यूट्रल ही मानना, इतना डिफरेंस नहीं है यहाँ पर। ये सपोर्ट जरूर है, देखते हैं इन्वेंट्री में होल्ड करता है या नहीं करता है। क्वांटिटी का थोड़ा ध्यान रखना, ज़्यादा क्वांटिटी मत लेना। इन्वेंट न्यूज़ बेस्ड कैंडल है, ऐसा ना हो मार्केट में नीचे डाउन साइड ब्रेक डाउन ही कर दे। वेट भी कर सकते हो, इन्वेंट्री वाली कैंडल का क्लोज होने का वेट भी कर सकते हो। नहीं नहीं अब नहीं, वो तो ऑलरेडी निकाल दिया ना उसने, चलेगा कोई इशू नहीं है। वो वैसे भी डाउ जोन्स में नहीं है। White House asked for mass firing plans ahead of possible government shutdown. Palestinian President Abbas ready to work with US and others to implement peace plan. हाँ, क्रूड ऑयल में भी हल्का सा ऊपर आता है तो यहाँ से एक सेलिंग, अगर ऊपर जाने से पहले नीचे आ गया तो फिर यहाँ से वापस बाइंग। यहाँ पर मत करना, अब यहाँ पर ट्रेड मत लेना इस रेंज के मिडिल पॉइंट पे, वो मुझे नहीं लगता सही रहेगा इन क्रूड ऑयल। बाकी कल लास्ट ट्रेडिंग सेशन है, आज वेनेसडे, थर्सडे माफ़ करना, कल फ्राइडे रहेगा। कल अगर डेटा की बात करें तो कल आपका कोर पीसी प्राइस इंडेक्स का डेटा है, और ये दो डेटा इंपॉर्टेंट है, कंज्यूमर सेंटीमेंट और इन्फ्लेशन एक्सपेक्टेशन का। सितंबर में आई थी भाई उसमें। हाँ वैसे तो पॉजिटिव ही है इन्वेंट्री, बट वेबसाइट में देखोगे उसने न्यूट्रल दिया है। वाई? बिकॉज डिफरेंस इज नॉट दैट मच, सिर्फ 1 बिलियन का डिफरेंस है, इसलिए बहुत कम डिफरेंस है। सत्या जी, नेट नवंबर ट्रेडिंग एज 340 प्लस एट अ बिग प्रीमियम। सीजनलिटी का इफेक्ट है क्या? ऑल्सो सिल्वर व्यू ऑन एमसीएक्स व्हेन यू गेट टाइम। सिल्वर को देख लेते हैं, बाकी नेचुरल गैस में ऐसा कुछ सीजन का तो मैं कह नहीं सकता अभी, ऐसा कुछ वहाँ यूरोप में तो हो नहीं रहा है कि वहाँ बहुत ज़्यादा ठंडा हो गया हो। यूरोप में भी गर्मी हो रही है तो पता नहीं, फिर भी सिल्वर देख लेते हैं। हाँ वो ठीक। मेटल तो बुलिस ही है यार, मेटल कंप्लीटली बुलिस है। वो 6 पीएम पे एक डेटा आया था, थोड़ा बहुत फॉल हुआ था, बट अगेन होल्डिंग। मार्केट ने अपना एक नया ऑल टाइम हाई बनाया सिल्वर एमसीएक्स में, फॉरेक्स में तो ऑलरेडी काफ़ी दूर है ऑल टाइम हाई। इंट्राडे देखोगे मॉर्निंग से बुलिश ही है ओवरऑल। कुछ है इसमें कोई रेजिस्टेंस तो मुझे दिख नहीं रहा, ऑल टाइम हाई का ही शायद एक रेजिस्टेंस है। ओह, ठीक है, वो 6 PM पे डेटा आया था, वो वहाँ से थोड़ा बहुत सेल ऑफ एक्सपेक्ट कर सकते हो वापस से। क्योंकि वही ऑल टाइम हाई का ही एक रेजिस्टेंस है आपका 1,36,700 टू 1,36,900 के बीच में। राइट, नीचे आता है 1,34,000 से लेकर 1,34,200 एक सपोर्ट जोन रहेगा, तो ये दो रेंज को प्ले आउट कर सकते हो फिलहाल के लिए। 6 PM पे डेटा आया था, उसके बाद से थोड़ा बेरिश जैसा हो गया ये, डेटा नेगेटिव ही था। यहाँ से वापस सेलिंग ही करनी चाहिए मेरे अकॉर्डिंग, नीचे आता है तो एक बाइंग का एरिया है यहाँ पे, कोई न्यूज़ ना आए इसका ध्यान रखना। तो ये रेंज है फिलहाल, इंट्राडे की बात कर रहा हूँ, 15 मिनट MCX ओनली। बाकी जो आपने नेचुरल गैस कहा वो बात तो सही है वैसे, अगर हायर टाइम फ्रेम पे भी देखोगे, इवन अक्टूबर मंथ का भी अगर मैं चार्ट देख लूँ, इसमें अभी शो नहीं करेगा, बट हायर टाइम फ्रेम पे भी देखोगे तो थोड़ा सा बुलिश ही है नीचे। आज तो एक्सपायरी है, अक्टूबर मंथ का चार्ट भी आप देखोगे, सितंबर अक्टूबर 285 चल रहा है ना, 300 कहाँ चल रहा है, 340 कहाँ चल रहा है, 285 चल रहा है। तो ये मैंने ही वही चार्ट लगाया हुआ है, नेक्स्ट मंथ का ही, अक्टूबर मंथ का ही चार्ट है ये, क्योंकि एक्सपायरी है तो सितंबर मंथ का लगाया नहीं मैंने, अक्टूबर मंथ का ही लगाया है। दिस इज अक्टूबर मंथ चार्ट, इट इज ट्रेडिंग एट 286 87। हो सकता है ट्राई कर ले एक बार वापस 300 को। नेचुरल गैस अक्टूबर मंथ में हाई लेवल पे रेजिस्टेंस है, तो मुझे लगता तो नहीं अक्टूबर मंथ का चार्ट 300 के ऊपर सस्टेन करना चाहिए इतना इजीली। ऊपर रेजिस्टेंस ही है टोटल 290 से 300 मेजर रेजिस्टेंस जोन। इसके ऊपर निकल भी गया तो भी आपका ऊपर 308 से 316 के बीच में एक और रेजिस्टेंस है डेली टाइम फ्रेम पे। तो मुझे लग रहा है हो सकता है वहाँ पर रेजिस्टेंस लेने के लिए जाए फिर फॉल करे। ये कैंडल जो इस आज की कैंडल है वो 280 के ऊपर क्लोज होती है, जो कि हो ही जाएगी। कल काफ़ी ट्राई किया था 280 के ऊपर जाने का, नहीं जा पाया, लास्ट में नीचे ही क्लोजिंग आ गई थी। 280 के ऊपर आज की कैंडल क्लोज हो जाती है तो फिर नीचे भी एक रेंज बना देगा मार्केट 270 से 280 के बीच में, वो सपोर्ट ही है फिर हमारे पास। नीचे कहीं ब्रेकडाउन होता है तब एक पॉसिबिलिटी बनेगी कि प्राइस थोड़ा सा फॉल करने आए आपका 240 से 245 के बीच में, बट वो काफ़ी दूर है। तो बेस्ट के सिनेरियो यही है कि थोड़ा ऊपर जाके रेजिस्टेंस लेके यहाँ से फिर फॉल करे और फिर नीचे आए हायर टाइम फ्रेम पे।
US stocks. European futures pointing a little lower by 0.1% after closing down 0.3 yesterday. FTSE 100 futures here in the UK pointing lower by 21 points. S&P E-minis then after the drop of 0.3 yesterday pointing marginally higher by 0.1%. Nasdaq 100 futures looking to add 12 points. Let's flip the board and have a look at treasuries, but also copper as well on those supply constraint concerns. The benchmark 10-year at 4.13, close to 4.14, largely stable across the treasury market today. The pound at 1.34, splits amongst the BOE. We've heard that from Andrew Bailey and Megan Green, both emphasising different aspects that they're focused on. Megan Green suggesting they could skip in November. Andrew Bailey saying there are more cuts coming. Copper at 10,300, and this on concerns about those supply constraints and disruption out of Indonesia and one of the mines there. Brent at $68 a barrel, close to 69, down 0.5%. Now, earlier this month, the alternative asset manager ICG raised more than €3 billion for its second European infrastructure fund. ICG said there was significant surge in demand from investors in North America. Let's find out how it will be invested and bring in opening trade anchor Kriti Gupta, who is at the IPEM Private Capital Conference in Paris. Kriti.
Tom, it's a fascinating time to be here, not only because I've got the best assignment in Paris, but because private markets are really juicy markets right now, especially in Europe. We've got one of the key people, the key players involved, as you just said, ICG CIO and CEO Benoit Duterte joining me right here, overseeing about 125 billion of assets under management. So we thank you so much for your time this morning. Benoit, we're here in Europe. We're here in Paris, the beautiful city of Paris. There's a lot of hype in Europe right now. A lot of international investors, especially from the States, want to deploy their money here. And they're attaching that reason to the massive amount of fiscal spend coming out of the government and encouraging investment environment, perhaps. How long does that stick around?
Well, I think probably for quite some time. I mean, if you look at the fiscal programs that a number of governments have put in place, and think Germany, that's the largest one, that's at least a 10-year program. So this is a 10-year horizon on that investment pace. And also more broadly, I don't think it's just that. I think it's, people are just, they're assessing risk and they're comparing risk. And suddenly, Europe looks, oddly enough, quite stable. There may not be, you're not thinking massive growth, but you're also looking at there are a lot of buffers to protect that growth level on the downside. So that makes for a relatively favorable environment for investment.
When it comes to the environment for investment, though, because there's so many investors coming to Europe right now, trying to get that exposure to defense, AI, energy security, the many themes we're watching, how much of that increases and affects the valuations that you're seeing in the private markets?
It hasn't yet.
Will it, though?
So it may, because historically you've seen valuations were typically higher, sometimes much higher in the US and Europe, so there could be a catch-up. It's possible. I'm not seeing it yet. I'm also a bit more cautious on, I think those flows of capital are coming into Europe, but they need to find the right place in which to invest, and that takes time. It's not as though there's suddenly awash with money. So it'll take time to walk it through the economy and possibly valuations as well.
Well, let's talk about one of the key factors in that, and that feels like the geopolitical volatility that's swirling around, certainly affecting some of the capital markets, affecting the exits that we're seeing. There's a thought here that there has been a real glut of exits for about, I want to say 2 or 3 years. Correct me on that if I'm wrong. But a lot of that in the recent months coming out of just geopolitical volatility and uncertainty in the investment environment. In your perspective, where do the capital markets stand right now?
Yeah, I think you're right. I mean, that's the correct assessment. It's been 3 years. Actually, we're going into the fourth of a below normal levels of general deal flow in the buyout space and exits as a result. Hasn't moved. I mean, if you've looked at the reports for the first half of the year, it shows it's flat on the previous year, maybe slightly down, and some of that is linked to the geopolitical environment, but it's also linked to a bid-ask spread on valuations that hasn't yet fully converged. It will over time, but it's a big overhang, and it probably will take a few years before everything is worked through the system.
So if you don't do the traditional IPO as an exit, are there other ways to find that?
Sure. I mean, there's been a lot. There's been a resurgence of exits to corporates, to the industry, which hadn't been that much the case before, and so you're seeing because a lot of the industrial players or corporate players are actually quite cash rich, so you're seeing them make a move and take advantage of this environment to acquire, and so that's becoming an exit path as well. And in Europe, unlike the US, the IPO route has never been the major route for buyout exits in Europe. Maybe it will in the future, but I think for that you need stronger capital markets and maybe a more cohesive European capital market, which I believe all governments are trying to work on, but it's taking some time.
Well, Benoit, about a year ago, Bloomberg was right here at this conference, and what was kind of the sound in the room was this idea that you are seeing GPs facing a lot of pressure on the exit front from their LPs. Sure. And the thought at that point was, if the IPO markets or the capital markets broadly stay frozen, where does that money go? Since then, we've seen a real, specifically in the States, this idea of democratization and access to private funds show up. Does that alleviate some of the pressure around exits?
I'm not so sure, because I don't think it's a question of capital. The capital is there. There's capital available. Actually, some people are saying there's quite a lot of capital sitting on the sideline, particularly for private equity. So the issue is not access to equity or debt, for that matter. The debt markets are quite hot right now. It's more of a question of, are the right investments there? Is there the right balance given the economic environment and the right valuations for people to move and proceed? There is deal flow, not like the market's completely frozen. There is deal flow, but not the same level of deal flow that you saw 4 or 5 years ago.
Yeah, kind of dipping their toe into the market, perhaps, if we're looking at a resurgence.
Choosing the best deals first and making their way through that overhang of buyout deals.
Spoken like a true PE investor. Benoit, talk to us about the interest rate environment here. We're starting to see a massive shift to dovish territory in the States. The ECB has already been cutting earlier this year as well. Does that make deal making better, or should we be reading that as concern around a slowdown in the economy? How do you think about that?
No, I think in Europe it's been relatively stable. It's come down much faster, and it's now at a relatively stable rate. Inflation is relatively low. I mean, in France it was at its lowest this summer in a long time. So you're actually in a relatively stable environment, that's conducive to deals. At least that's not what is preventing deals from getting done. And the level now, yes, it's not the zero or even the negative that we might have seen a few years ago, but you're sorry, early in the morning, but you're at 2%, so it's not, this is not something that's preventing deals from getting done.
A final question to you. We're here in Paris. There's a big question right now about the French investment landscape, specifically as we see a government that's kind of still trying to find its feet. We're talking about the idea of a wealth tax being imposed as well. How are you approaching investing in France?
I mean, you know, yes. I mean, but there's always been movement and noise in French politics. But if you look at what's been happening, you know, for the past several years now, there's been actually quite a lot of effort on the part of the government to make France more attractive for investment, and it's worked actually. You know, you've seen significant inflows into France, so that has worked. You know, the noise around the various politics, wealth tax is not new, and that's not a new debate in France. We had one actually for a while, and now there's a tax on real estate, which is a different type of wealth tax. So this is not new. You know, that's not what's going to stop investment. We've been investing in France for 36 years. You know, we've seen a lot of movement and government changes. It's always been for us. It's always been a really attractive country in which to invest.
All right, we look forward to see how that all pans out. Benoit Durteste there, joining me here in Paris at the EPEM conference. He, of course, is the CIO and CEO over at ICG. Tom, back to you.
Kriti, great conversation. Thank you very much indeed. Opening trade anchor Kriti Gupta, of course, who will be continuing these conversations from EPEM throughout the next hour. We're going to be hearing from leading voices from AXA, KKR and Brookfield. So stay tuned for those interviews. Talking of interviews, Spanish Prime Minister Pedro Sanchez says he will run for re-election in 2027, despite polls showing that his Socialist Party would have a difficult time winning a majority in Parliament. He announced his plans to Bloomberg News Editor-in-Chief John Micklethwaite.
I will do it for sure. This is something that I have already spoken with my family and with my party, and if they allow me, I'm confident that we can repeat a majority and to keep the work ahead. No, but let me add, coming back to migration, that the dilemma that all Western societies we're facing is whether we open up and grow, or we close off and shrink. This is the real dilemma that we need to face. So the challenge that we have within the European societies is how do we integrate this migration?
Do you think it's easier in Spain because you get a lot of people from Latin America where everyone speaks the same language? That's at least part of the argument why you might have been better.
So when you listen to some center-right parties and the far right, they are saying, no, well, we need to expel all these migrants coming to our... Okay, so what we do with demographics? Because either you have family policies,
yes,
plus migration, but they don't propose anything in these two policies. No migrants and less welfare state, and therefore less family policies. And that means social services, healthcare, social security, and so on and so forth. So what I'm trying to say is that if we don't have this contribution of migration, what we will face in the coming years in Europe is that we have a stagnation. We won't have the capacity to grow, and therefore there will be more cuts in our welfare state. So this is something that we need to explain to our citizens, that if we articulate a positive migration policy, that would be for the good of the Europeans and the Western societies. So just to give you a figure, 94% of the total migrants that are living nowadays in Spain came from regular, let's say, systems, and they came on legal basis. So we're talking about only 6%. And this is the reality. So I think that we need to fight and to give a positive, let's say, message about the contribution of migration to our societies and to our prosperity.
Well, that was Spanish Prime Minister Pedro Sanchez. Coming up, Quantum's Sputnik moment. We have the details about how HSBC is using the technology to beat rivals. That's next. This is Bloomberg.
Connecting the dot between what's at stake and what is possible.
Welcome back to Bloomberg Daybreak Europe. Happy Thursday, everyone. HSBC says it has achieved a world-first breakthrough in deploying quantum computing in financial markets. The London-based bank used IBM's quantum processor to attain a 34% improvement in predicting bond trade prices. Let's bring in Robert Lee right now, senior analyst at Bloomberg Intelligence, for the details on this apparent breakthrough and what it could mean for banking. So, Rob, the head of quantum technologies at HSBC telling Bloomberg he sees this potentially as a Sputnik moment for quantum.
Yes, I did see that. I think that's an interesting choice of words, and I think it's a very interesting development. But again, if you take a step back, any innovation, any new technology sort of follows a continuum, really. It sort of starts with that Archimedes moment in the bath, you know, the flash of inspiration. Then it goes into the research phase, and then through to development, and ultimately commercial deployment. So the reason I explain that is I think quantum computing is still very much at the research phase. So this is very much, a very interesting development. But I suppose, again, looking at the headlines and HSBC's announcement, what we don't know is if what they've achieved is repeatable, and is it scalable, and is it ultimately deployable at an affordable cost. So, for example, if you were to build a quantum computer in your living room, you would need state-of-the-art equipment that's probably only found in IBM labs or, the labs of Imperial College and the like. It's incredibly complex, incredibly expensive. For example, you need to lower the temperature of these things down to literally very close to what is called absolute zero. You need huge setups, you need superconducting technology. It's really, really difficult. So I think what we're seeing is an interesting step along the research path, but the commercial deployment of these things remains many, many years away.
OK, so you can't just put one of these quantum computers next to or on a trading floor and expect that magic happens. Given all of those questions and all those caveats that you underscore for us, Rob, what is your sense, what is your understanding as to when we start to get real practical applications for quantum?
Right, in my mind, keeping things very simple, you've probably heard of fusion power. These are power plants that are trying to replicate the conditions of the sun. If scientists and developers can crack that problem, then in theory it would solve all the world's energy needs. In theory, it's unlimited power at a very, very low cost. Now, that is something really to gun for, something to aim for. Quantum computer is similar. These are two technologies with massive long-term promise, but they face considerable technological barriers, and we're nowhere near achieving commercial deployment on either of them. So again, at the research lab phase, businesses should continue to develop, but it goes back to the premise of risk-reward. The promise and the reward is potentially huge, but the risks and uncertainties relating to those, you need a real Nobel Prize-winning development. And so trying to predict that is next to impossible. Will it happen in the next year, 2 years, 5 years, 10 years? Who knows? So very, very interesting technologies, both of them. But based on what we do know, based on the facts, the commercial deployment of these technologies remains pretty distant, I think. That's a rational way to look at it.
Yeah. OK, no, that's really interesting in terms of how to frame the timing of this and all the question marks over that. Rob, you were there in Hong Kong. To what extent is quantum computing and the race towards that end goal, whatever the time frame is a race between China and the US, or at least China and the West? And where does China stand? To what extent is this a geopolitical story as well?
Well, yeah, that's a very interesting question. It is, and if you look at China's strategic objectives, quantum computing is one area that the government has outlined of being of national importance. But again, it very much remains at a research phase. It's government labs, private labs who are pursuing investments. Again, as far as I'm aware, there are no deployable quantum solutions in the China market at the moment. So absolutely, given their vast scale in resources, in a way it is a bit of a two-horse race, again, between the US and China. But again, let's not forget people in Europe, people at Imperial College and elsewhere. There is a global development going on. at the research phase at the moment.
Okay, Rob Lee, really fantastic insights. Senior analyst at Bloomberg Intelligence on this story around HSBC and the uses of quantum, at least in one specific area, and the findings of that. Now, some of the stories making the news this Thursday. Splits within the Bank of England are on full display, with policymakers voicing differing views on interest rates. Governor Andrew Bailey said there was further to go on rate cuts, citing consumer caution and risks from a weakening labour market. Just hours later, external member Megan Green proposed skipping a cut in November. And UK car manufacturing has dropped in August, with output falling 10% from a year earlier, including commercial vehicles, which fell 73%. That was the lowest production for August since 1956. A cyber attack at Jaguar Land Rover has brought production to a standstill and is set to make things even worse for the country's beleaguered auto industry. The FT is reporting that Jaguar will be shouldering the full bill from the hack, as it doesn't have cyber insurance and could end up costing the car maker billions of pounds in lost revenues and profits. Meanwhile, European car sales rose in August, with new car registrations rising 4.7%, with Germany and Spain gaining more than 5%. Consumer appetite for electric and hybrid models is driving up demand, but sales here in the UK and in Italy dwindled, and it's not good news for Tesla once again, seeing sales drop 22%. Meanwhile, BYD continues to outshine, more than tripling deliveries. There's a lot more coming up. Stay with us. This is Bloomberg.
So I wouldn't really characterize the labor market as weak.
Okay.
The unemployment rate is low, especially in many states like Utah, very low. The people are finding jobs. There's, wage growth is still expanding at productivity plus inflation. So you have a sense that people are moving and doing things. But what is true is that it's not as speedy as it once was. So if you think 3 years ago, it was what we called frothy, then it got to healthy, then it got to solid. Now I'd say it's sustainable, but I do not want to see further softening.
The Fed's Mary Daly there on the labour market of the US at a time, of course, when FOMC officials, we know they're divided in terms of where to put the emphasis on the concerns around the labour market or concerns about potentially a pickup in inflation, which remains, of course, on a headline basis, still well above the target at around 3%, the target of about 2%. All of this filtering into the conversation around the equity story yesterday. The S&P 500, 2 straight days of modest losses, but it does seem that the uncertainty over the path ahead for the Fed is one of those factors. We will get more detail on both the labour market today with US jobless claims and then inflation with PCE tomorrow as well. So both sides of those debate will be fleshed out in the next 48 hours. We'll see what the next catalyst is for the S&P 500, whether it is that data. Let's flip the board and have a look at copper and look at miners at the open as well. Still near the highest level in about a year. There's some supply disruptions over in Indonesia. So keep an eye on Dr. Copper this morning as well and how it ties into the UK miners. The opening trade is up next. Stay with us. This is Bloomberg.
A powerful pitch can unlock transformative growth.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey.
I didn't think of it at the time because I was too busy working to save millions of lives. That is the saving and stopping of these wars. But later I realized that the United Nations wasn't there for us. They weren't there. I thought of it really after the fact, not during these negotiations, which were not easy. That being the case, what is the purpose of the United Nations? The UN has such tremendous potential. I've always said it. It has such tremendous, tremendous potential. but it's not even coming close to living up to that potential. For the most part, at least for now, all they seem to do is write a really strongly worded letter and then never follow that letter up. It's empty words, and empty words don't solve war. The only thing that solves war and wars is action. Now, after ending all of these wars and also earlier negotiating the Abraham Accords, which is a very big thing for which our country received no credit, never receives credit, everyone says that I should get the Nobel Peace Prize for each one of these achievements. But for me, the real prize will be the sons and daughters who live to grow up with the mothers and fathers, because millions of people are no longer being killed in endless and unglorious wars.
A powerful pitch can unlock transformative growth.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey.
So yesterday, President Trump came out with this post on social media saying he thinks Ukraine can actually get back all of the land. A very different tone than what we saw from him even just 3 weeks ago. He said that the European Union would have to be on board with this. So what is the path forward?
Well, it was also a very positive statement. I mean, before I also met with the Ukrainians who had a meeting with President Trump and also said that it was a very good meeting, asking, how, U.S. can support also Ukraine and saying that, Russia's economy is not doing well, all what we also read in the post. So we have been on that line and we really welcome the shift in the tone.
The president also talked about even going further into even Russia. Is Europe prepared to buy more weapons to then give them to Ukraine?
Well, we are doing a lot. I mean, this year only our military support to Ukraine has been 25 billion, which is more than any other year. It is clear that we have to help Ukraine to defend themselves because, as President Zelensky said in his speech as well, I mean, if we allow Russia will just go further, we have to push them back. We have to also say that this is not okay and you cannot let the aggression pay off.
Do you have a sense of which European countries, though, are willing to put in more funds when it comes to Ukraine, whether or not it's funds directly or to actually buy those weapons?
Well, we have different initiatives also to help European countries to help Ukraine, but also invest more in their own defense. And we are putting a lot of funding on the table. Of course, it is difficult. It requires also member states to make some very difficult decisions like cutting social spending, but also raising taxes, which are not popular. That is very clear. But we are in this situation where we have to invest in defense. And the problem is that you need it when you actually don't feel the need yet. So you need to do the decisions way before you actually need the defense capabilities. And if you do it, it acts as a deterrence so that the aggressor would not look your way.
Trump also said yesterday the U.S. is prepared for more powerful sanctions, robust sanctions, tariffs on Russia, but only if the European Union is in lockstep. Now, we have seen movements the European Union is talking about when it comes to things like fossil fuels. They are ready to do these tariffs. But we are 3 years and 7 months into this war. Why did it take for President Trump to convince Brussels to do what Brussels probably knew from the very beginning they had to do?
No, excuse me, we have done 19 packages of sanctions and we would like our partners to be in lockstep with us because we have put a lot of pressure. Then next, the package that we propose now has also crypto, financing institutions, also energy. Yes, what President Trump says about energy is true. We have been saying for the...
I know you specifically have been talking about this for years.
For quite some time, because we have been dependent on Russia, and now we are phasing out. And it's true that it should be faster. We are trying to push those few member states who are still buying Russian energy to show that actually, if you want this war to stop, you need to really cut off the funding of this war, which comes from the fossil fuels.
Hungary, Belgium, France. Do you think they're really prepared to do this?
I mean, these countries, the countries who are dependent on, some are making great steps and some are not. So clearly, some are great friends of President Trump, which has been also our appeal to President Trump to talk to them, like Hungary, for example, so that this is necessary. The neighbors around, Hungary, for example, have proposed solutions so that they can get energy from the neighbors and do not have to depend on Russia. But so far, they haven't really wanted to, as the energy is much cheaper.
Do you view this posture now from the United States, some are calling it a full 180, do you view it as concrete? Is this tangible? How long will it last?
We welcome those statements and the change of tone, like I said. So let's build on this. Also, really tangible steps. I mean, on the European side, we have been keeping this line, also putting our money where our mouth is. Supporting Ukraine, their defense capabilities, investing more in our defense, and also pushing back Russia, putting pressure on Russia, what we want to see from all our allies.
One country that could really put pressure on Russia is China. Given the fact that you've been working with the United States when it comes to Russia, could more be done between the European Union and the U.S. to put pressure on China to then put pressure on Putin? The U.S. has tariffs on China. Is it time for the European Union to consider putting the walls up on China? Not just what's going on in Ukraine, but also they're pretty much dismantling the European industrial base.
It is true. We have two big worries with China. One is the economic coercive practices that they are using against European companies, which are really hurting our companies, industry and economy. And the other part is them being the key enabler of Russia's war in Ukraine. So we had the EU-China summit. We are stressing all these points and really raising these points and also acting on them. If you look at the sanctions package, we are sanctioning also Chinese companies who are enabling this war to continue. So we are not, or let's put it this way, that we are believers of free trade, so we are not using tariffs as the measures, but we are putting pressure via other means.
I just want to finish on the incursions when it comes to European airspace. Friday, it happened in Estonia, a country you used to lead. Is Estonia and these countries prepared to do what the President Donald Trump thinks NATO allies should do, shoot these Russian aircrafts down?
Well, NATO is a collective defense alliance, which means that attack on one is attack on all. This is Article 5. So it's clearly if those drones or airplanes are violating the airspace, are creating security risks, then there has to be proper response. The Estonia asked Article 4, which is consultations, how to continue, and all the member states in NATO, including the United States, have vowed to keep up their commitments.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level. Sometimes conversations with different people might open up ideas to explore.
The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
The bullish price action persists in a post-Fed rate cut world. Live from Studio 2 here at Bloomberg headquarters in New York. Welcome back, Katie. I'm Romain Bostic.
And I'm Katie Greifeld. We're kicking you off to the closing bell here in the U.S. It's Friday. Let's bring it home. The S&P 500 looking at record highs again. Remember, we got the Triple Crown yesterday. Doesn't look like we're going to get it today because the S&P 500, the NASDAQ 100, extending from records. I cannot say the same about the Russell 2000. We hit our first record high since November 2021. Now we're falling about 0.7%. Also not cooperating with the bullish price action. I thought this was interesting. Romain, Bitcoin down on this Friday, just about 1.8%, but still, again, not cooperating, not singing from the same choir.
Yeah, not the triple crown, not the quadruple crown, but certainly maybe a daily double. Katie Greifeld. In fact, this will go down as the biggest week of inflows for global stocks all year long. $68 billion allocated to global equity funds, $58 billion in the U.S. That's according to Bank of America's read on the latest data. A show of confidence that the worst case tariff scenarios earlier this year are off the table for the rest of 2025. Confidence that economic conditions now can improve heading into 2026.
You can count me in the camp of someone who was concerned around the tariff impact. It was really hard because it was so unprecedented to kind of model whether or not we were going to have a step change in terms of prices. But instead, what we're getting is what I'm calling boiling the frog.
The positive price shift isn't just limited to stocks. Investment-grade corporate bonds rallying for the 8th week in the past 10. High-yield bonds on a 7-week streak and a measure on the risk premium across the board in aggregate. It actually suggests that U.S. corporate bond valuations now sit at their richest levels since 1998. Now, despite the bullish price action across assets, investor sentiment, curiously, is still bearish. Take equities, for example. Despite the more than $1 trillion in global stock market gains this week, a survey from the American Association of Individual Investors shows bears outnumbering bulls for a 7th straight week, only the 3rd time in 25 years where sentiment has been so bearish for so long at a time when stocks are at record highs.
Well, I'm really interested to see when the sentiment actually translates into the price action, because you take a look at the twin rally that we're seeing in the equity market and in the bond market, 5-month winning streak for the S&P 500. That's what we're looking at right now. Then you train your eyes on the 10-year Treasury yield. You can see we're declining for 2 months here, even with this little uptick that we've seen just in the past 2 days, still much lower than where we started September. So twin rallies in these two asset classes, that's not what's supposed to happen, Romaine. So we'll have to see what is the catalyst to return to maybe the more typical relationship where when this line goes down, this one does too.
Kara Murphy joins us right now to kick us off to the close. Chief Investment Officer over at Kestra Investment Management. And Kara, I mean, that really is the big question right now. I mean, you take a look at the record rally, you take a look at what seems to be a shift in sentiment. But I am curious as to how much conviction is behind this longer term.
So it certainly feels like the momentum is up. And we've used this term as well, the everything rally, where all of a sudden everything is starting to catch a bid. But the other way of thinking about it is that in many ways, this is a healthy shift for the market, where if we think about so much of the market's move over the last couple of years has been really concentrated in the Mag 7. You go back to 2023, those 7 names accounted for 2/3 of the S&P 500's gain. Last year it was about half. This year to date, they're contributing at about 1/3 of the S&P 500's gain. What that means is that other stocks are able to start to take some of that leadership, other asset classes, other parts of the world, and that actually leads to a much healthier market, because we can't just rely on these 7 names, which have fairly correlated stories, to be able to drive this forever.
Well, we did seem to get a little bit of a taste of that, particularly yesterday, seeing the really outperformance by the Russell 2000. Now, that's not carrying over into today. But when you take a look at the possibility of an extended rate cutting cycle and the possibility that economic conditions could at least be stable, does that maybe provide the green light to maybe start to buy more in the small and mid cap space?
I thought it was really interesting to see the rally in the Russell 2000. And then I looked at some more mid-cappy type indexes that did not have that type of strength over the last couple of days. When we think about performance over the next 6 months to a couple of years, we actually think areas like smaller, large, and mid-cap are better positioned. Even in a rate cutting environment, that often comes with a little bit of stress. And a lot of these really small names then can succumb to that stress. And then you think about policy challenges like tariffs. Whereas if you're in that mid cap or smaller large cap area, you still have the benefit of lower valuations kind of being forgotten in some ways by some investors. But they tend to be a little bit more heavily indebted than the really large names. So they benefit from those lower rates, but they're better able to navigate some of those policy uncertainties. So we'd rather be in sort of the middle part of the market cap spectrum rather than going all the way to the small end.
That's really interesting, Kara, because I feel like sometimes the mid-cap space suffers from narrative ambiguity. You think about the personality that you ascribe to large caps. A lot of that comes back to tech. You think about the small caps, those what will probably benefit from a rate cutting cycle. And as the economy maybe is on an upswing, that's the narrative, at least. What is the personality, though, when it comes to mid-caps? How should people be thinking about them?
Yeah, I love the way that you put that in context, right? They're narratively challenged. And even when you look at technology, if you compare the large cap technology indexes to the mid cap technology indexes, you've seen those mid cap tech names have really lagged. So they just haven't been able to ride that AI spending wave that some of these larger tech names have been able to. But I think it goes back to really basics, right? They have decent earnings growth. It's been okay, but it's starting to look better heading into the latter part of of 25 and into 2026. You have really low valuations. And then you have some of the more structural issues where you have a lot of sell-side analysts who are not covering these names anymore. They're not nearly as well known and understood as what we've seen in previous cycles. So I think there are a lot of great opportunities for bargain hunting in that area.
Bargain hunting, certainly some names on sale there. Let's bring this conversation, though, to fixed income, because Romain was mentioning how corporate spreads right now have narrowed in such a significant way. We're at levels not seen since 1998. What do you do with corporate credit in this environment? Is this too tight to be attractive, or do you take a look at those all-in yields and say, this looks pretty good?
I think we're seeing a lot of the same trends in the fixed income market that we are in the equity market, in that the economy remains fairly resilient. You have an accommodative Fed, sort of, and those are things that benefit credit as well. That said, similar to some of the issues that we have in the more richly valued areas of the equity markets, we'd be a bit cautious going way out on the credit curve in the fixed income world as well. So high yield, for instance, with those spreads at really rock bottom levels, you get a nice absolute yield, but is it really enough to overcome the higher level of risk that you have? We think not always. So we're looking a little bit more in high grade credit where you have more juicy absolute yields. But again, we think that those companies can really weather any potential challenges on the economic side.
Then how does that fold out back into the Treasury market, particularly when we start to talk about duration and what still seems to be some reticence by investors in the secondary market, and for that matter, even in the primary market, to start buying 10, 20, 30 years out?
Yeah, I think we share some of that reticence. I mean, when we look overall at the fixed income market, Treasury market in particular, there's a huge amount of volatility that hasn't really settled out. And I think you see that particularly on the long end. And, you know, we tend to hash things out a lot on the short end of the curve because of the focus on Fed policy, especially during a week like this. But really, the bigger risk is how did those decisions today start to impact our view of the long end of the curve? And that's where we've seen inflation expectations very recently have started to increase a little bit. And that's where I think the risk of a policy mistake on the short term ends up getting priced in and could potentially hurt the long end of the curve. So again, even in the Treasury world, we'd rather be in those mid-duration issues.
All right, Kara, great stuff. Kara Murphy, Chief Investment Officer over at Kestra Investment Management, kicking us off to the close here on this Friday afternoon. A monster week for big tech, a monster week for chip stocks, and a lot of questions about where we go from here. Dan Niles, founder and portfolio manager at Niles Investment Management, joins us in a second to talk about what comes next for the sector.
Plus, Jeremy Siegel, Professor Emeritus of Finance at the Wharton School, talks to us about what's next for the Fed and if the U.S. economy is poised to hit a sour note.
And when not hitting a sour note, DJ John Summit, he actually stopped by the studio a little bit earlier ahead of a big festival here in New York City. We're going to talk to him about the music business and, more importantly, about his business and how he runs it. That's coming up in a bit, right here on The Close. This is Bloomberg.
A powerful pitch can unlock transformative growth. Having at least 1 million pre-launch equips companies with a 25% higher likelihood of success.
You're coming from a world that is quite far separated from venture capital. Building up the skills was an important part of that journey. Not just my own area of physics, but things on the business side.
The right expertise can move your business forward. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
Well, consumer credit is in focus amid shifting dynamics as we enter year-end. But a rapid expansion in buy now, pay later is raising concerns on consumer credit trends, even as Klarna and Affirm continue to outperform card lender metrics. Let's discuss the state of the consumer a little bit deeper with Dana Peterson. She is chief economist over at the Conference Board. Dana, great to have you with us. And We tend to talk about the consumer as a monolith, but that certainly isn't the case. And when you take a look at the different spending tiers, the different income tiers in this economy, I would imagine that uniformity falls apart a bit.
It absolutely does. In fact, we did a survey where we asked people how are they paying for things, and we asked about cash, credit cards, web-based payments like Zelle, and also buy now, pay later. And for lower income groups, they prefer to use cash, and also because they can't access credit. But they also are growing in terms of their use of buy now, pay later. When it comes to upper income groups, they're more likely to use credit cards because, first of all, they have the credit scores to get them, and they also get lots of benefits and perks.
That's really interesting when you think about, buy now, pay later, certainly speaking to a certain tier. Then you think about spending on credit, as you mentioned, for those higher earners. There was a really interesting study out from Moody's Analytics earlier this week that the top 10% of earners are driving a growing share of U.S. consumer spending. And I would just love to hear your thoughts on that and what that says about where we are in this moment in time.
I mean, well, that makes sense. They're the folks who have jobs and have money. Most people are working in the United States, but our own surveys are telling us, and even when you look at the JOLTS data, that consumers are concerned about the labor market. And when they're concerned about the labor market, they stop spending. Indeed, many consumers along all different demographic groups and income groups are moving away from discretionary goods to necessary goods. And even among services, they're switching from, vacations and things like that to services that they need, like car insurance. And so we're seeing that shift. And typically, the upper tiers in terms of income always have money, but they may change how they purchase things. So we may go back to, instead of having logos on shopping bags, they're just plain brown bags. And so that's not surprising given the fact that, yes, the economy is slowing and consumers are very worried about that.
But Dana, if I don't have logos on my bag, how will everyone know that I'm rich? I'm confused. In all seriousness, it gets to this idea, though, too, that, we talk about what people are spending on, but also the complexion, the idea that the upper end of the income spectrum seems to be making up the bulk of the growth that we've been seeing in spending. What traditionally arrests that spending at the upper echelon? If it's not a drop in income, is it just what? The wealth effect, the drop in the stock market, what?
I mean, we have different layers of wealthy. I mean, for the most wealthy people, it really doesn't matter. But, for people who are more aspirational, maybe upper middle class, or, they're, going to thrift shops to get things, they're probably going to slow their spending. And certainly, fear of losing your job or recession heightens the likelihood that they will stop spending on these items. And indeed, in the news, luxury brands have been having some trouble because people are pulling back, especially the people who are more aspirational in their purchases.
It's kind of interesting, though, too. I mean, a little bit earlier this week, we had caught up with the CEO of United Airlines, and we've spoken with a couple other airline executives. And there's been a lot of talk amongst them about shifting a little bit more of their priorities towards premium passengers, if you will, whether it's business class, first class, or at least a premium economy experience. These aren't short-term types of moves. You don't just sort of make those changes and then roll them back a month later. These are more permanent and structural changes that they're making, and I do wonder what that says longer term about just, I guess, where we are in this economy.
Well, I think the airline business has done a great job of creating these tranches where people want to play. So, for example, if you want the luxury experience, then you sit in first class, or if you're in economy, you might want more room, extra room. So people are basically paying for what they're willing to put up with for 2 or 3 hours on a plane. And I think that kind of differentiation, a lot of other industries are going to consider as well.
And let's talk a little bit about this week's Fed meeting and what we heard from Chairman Jerome Powell there, because it seems, again, that the focus for this Fed has shifted a little bit more to the labor market and maybe at the expense of that concern about inflation. And again, wrapping it into what we're talking about when it comes to the consumer, I mean, do you think that is the appropriate focus in terms of where their concern is weighted?
I think so. Unlike last year where we found out we didn't have many payrolls, we were still approaching and achieve full employment. And when you're at full employment, you don't need big payroll gains. But this year is different. We've had a major shock, and that's tariffs. And tariffs are impacting inflation, raising prices that are already elevated. And consumers have responded to that by pulling back. And so that potentially is going to affect what we're going to see in terms of consumption, the fact that consumers are very worried and they're just not going to do this. And so I think this cut was an insurance cut to just kind of get things going. And certainly when you look at the SEP, we have another we have 50 basis points of cuts this year, whether that's in one meeting or split, and then we have several cuts for next year, and them not really getting to their steady state till 2027. So I think this is correct, what they're doing, and it's also going back to their preemptive nature that we haven't seen in almost 20 years. But they're still data dependent, so it's kind of a hybrid policy. But definitely the Fed did this, I think, to just give the economy a little bit of a boost.
All right, Dana, got to leave it there. Always appreciate it. Dana Peterson, chief economist over at the Conference Board. And just a reminder, the next big data point, economic data point for this market comes a week from today with the latest numbers on the personal income and spending. All right, coming up here, we're going to talk about the chip sector. It was a big week, particularly for Intel, a more than 20% rally on the week. We're going to break down what exactly comes next for Intel on the heels of that $5 billion investment from NVIDIA. This is The Close on Bloomberg.
In France, when we do something, it often ends up iconic. This radio antenna, for example, iconic. Or a gift to a friend, iconic. A little something for breakfast, iconic. When we aim high, when we go deep, when we make hearts beat faster, and when we make them beat again. When we search for something, and when we find it. When we triumph, even when we stumble. Iconic. When we get people moving, when we get the world moving. Iconic. Why? Because we do things our way. Stylish, bold, exploring, innovating, carrying our history and values into the future. Make it iconic. Choose France.
Time now for our top calls. Big movers on the back of analyst recommendations. And we start off with Tesla. Baird actually upgrading to outperform with a $548 price target. The analysts saying recurring revenue should become a larger part of the EV maker story, particularly if it makes good on those promises to move deeper into physical AI and robotics. Taking a look at the shares, up 2% on the day, heading to a third straight week of gains. Next up, Klaviyo. Morgan Stanley raising the e-marketing company to overweight. The price target bumped to 50 from 40. The analyst saying Klaviyo has a positive growth outlook and an attractive entry point for investors. That stock headed toward its best week since late April. And finally, we got to talk about Intel. Benchmark upgrading the chip maker to buy, saying the $5 billion investment from NVIDIA, it marks a tipping point. And that analyst recommends investors use any share price weakness as an opportunity to build long-term positions. Intel shares pulling back by 3.5% on the day, but still up 20% on the weekend, more than 50% since the start of August. Those are some of our top calls, and we do want to stay on that last one, particularly given all of the attention right now on Intel. Let's bring in Jay Goldberg. He's analyst over at Seaport Research. And Jay, you have a sell rating on this stock. You've had a sell rating on the stock for a big part of the year. And when I went back and looked at your initial note back in April, you talked a lot about a company fighting to survive, a company that hadn't articulated an AI strategy. Are you seeing any changes or potential changes afoot that might make you a little bit more positive on this name?
No. The only thing that's really changed is the company has gotten some outside investment. And that was the big news yesterday. And other than that, they still don't have an AI strategy. And there's still some very large questions around what's going to happen to their manufacturing operations, their fabs.
I am curious. I'm glad you brought that up because this question was raised several times yesterday and no one seemed to be able to give an answer. NVIDIA seemed to be a little bit coy about it. But do you think there's a possibility that NVIDIA might actually find some value in that fab operation and, I guess, for lack of a better phrase, revitalize it?
So they had this announcement yesterday with NVIDIA partnering up with Intel. And the most important part of that is NVIDIA is going to give Intel or invest $5 billion into Intel common stock, which is important, right? And I would like to see Intel succeed here, and that's good news. The problem was the deal itself I found was unsatisfying, and I found the press conference afterwards was unnerving. The two CEOs talked for 45 minutes, and only Jensen Huang from NVIDIA was the only one to mention Intel's fabs. Every question they got was somebody was asking some version of what about Intel's fabs? What about Intel Foundry? And even Intel's CEO, I don't think he mentioned his own fabs once. It was very telling.
Right.
It makes me really wonder what their strategy there is.
Jay, was that the only unsatisfying part of that press conference, or what else more would you have liked to hear from both of those CEOs?
Well, I think that's really the big question. In terms of the actual meat of the deal, it's a fairly small revenue opportunity, right? The market we're talking about is probably a couple $100 million that's left over. Intel and NVIDIA are going to co-design CPU, GPU systems, to use all the acronyms. And those exist already. NVIDIA actually has a pretty good CPU that it uses for most of its sales today. But for the occasional customer who wants to use Intel CPUs, that's now going to be available. And that's not great for AMD. But again, this is a pretty small market we're talking about, right? And so beyond that, what was really significant about the call yesterday was, one, the cash, and two, the signaling that it sent, sort of NVIDIA saying they believed in Intel.
Right. And something that we did hear from Jensen Huang and Lip Bhutan is that the Trump administration didn't orchestrate this deal, but there is the idea out there that this is a deal that probably the Trump administration did welcome. You also consider the fact that, of course, the Trump administration has a stake in Intel. You have sell ratings on both of these companies. Some could say that that's a bold move, given that there is the implicit backing of the government here.
Yeah, that's a fair point, right? I mean, NVIDIA, Jensen Huang made $3 billion for Donald Trump yesterday. And so that's got to count for something for him. But I just think in terms of fundamentals, I'm still very, very cautious about where Intel goes, right? The deal yesterday doesn't change the numbers. It doesn't change their near-term market share, their sales trajectory. And it doesn't answer the big question about their fabs, which I think is important not just for Intel, but important for all of America, that Intel has working fabs. It's important for the industry. And I just would have felt much better if they could have said anything about it.
All right. Well, Jay, of course, a lot of us are really keeping an eye on this. Investors got a little pop, but it'll be interesting to see how all this plays out. Jay, really appreciate it. Jay Goldberg, analyst over at Seaport Research Partners. Of course, Intel did have a phenomenal week, but of course, Jay brings up a lot of issues, so many unresolved issues for this. And as you pointed out, the $5 billion investment in NVIDIA still relatively small and really not articulated with a long-term strategy.
Absolutely. So it doesn't fix the fundamentals, but I mean, $5 billion, not too bad.
I would take it.
Absolutely, yeah. I would too.
You could buy a lot of logo bags with that.
It's true, of course, continue the consumer spending in this economy, but still, Intel shares up nearly 23% on the week. So clearly, investors welcoming this news as well. Coming up, we'll continue to talk more tech with Dan Niles. He is founder and portfolio manager over at Niles Investment Management. That conversation up next. This is Bloomberg.
Good decision-making is learned, not born.
So I connect with this global network to bring my work to the next level, being open to comments, feedback, discussions. There's always this back and forth workflow. Sometimes conversations with different people might open up ideas to explore.
Embrace a growth mindset. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
3:30 p.m. in a beautiful New York City. This is the countdown to the close. I'm Romaine Bostick.
And I'm Katie Greifeld. Happy Friday. Apple CEO Tim Cook greeted customers and Romaine Bostick at the flagship store in New York as the tech giant launched its latest iPhone models and AirPods. Give us the on-the-ground report.
I want you to look squint really hard. I'm actually in the building behind that, behind the glass cube. I was in the lobby up there when he came out to all the cheers earlier today. I was actually surprised. First of all, when I walked, I was not there for the Apple event. I was there for a different event that happened to be in the office building above it. I was surprised at the lines for this, but then when I realized Tim Cook was there, I realized it was probably less line to buy the iPhone and more to get a selfie with Tim Cook.
Get a glimpse of Tim Cook. Yeah, you can see the fans loving it. It's interesting. I mean, for as much as we criticize, will critique, of course, in a thoughtful way, some of the product moves that Apple has made. I mean, the sales are there. You can see the crowds.
Well, that's the thing. I mean, as much as, like I said, you kind of, okay, great, another iPhone with another pixel in the camera or something. But at the end of the day, this still remains a cash juggernaut, a phenomenal week for the stock, and an ecosystem that, at least so far, has proven to be very sticky. The question is now, what do they do next to sort of really capitalize even further off of it?
That's the thing, the network effects. Hard to walk away from your Apple products, but that is the question, what they do next. So joining us to discuss basically the whole tech ecosystem, I'm pleased to say we have Dan Niles. He is founder and portfolio manager over at Niles Investment Management. Dan, great to have you with us on this Friday. So you think about the tech sector overall, the Magnificent Seven, there's still that enthusiasm, there's still the narrative when it comes to AI, but at this point, where we are on the charts, how are you feeling about big tech as a whole?
Well, I mean, I think knowing that you've got a rate cut for the Fed for the first time since December of last year, you got two more probably coming, I think it's time to think more broadly beyond just the Magnificent Seven. And so I've talked about we're in this phase of irrational exuberance right now because you do have these rate cuts and everybody wants to believe. But I think you want to be prudent with that irrational exuberance. And so thinking more broadly about the S&P 500, where names that benefit from rate cuts or small caps, they're probably going to do pretty well in this environment. I mean, don't forget, we're almost 3 years into this AI trade. And I'm not saying that you're not going to have still some winners from that, but it's pretty much crowded out all the other investments. And I think with the environment we're in, you need to think a little bit more broadly between now and year end.
Well, Dan, I want to go right down to the bottom of the notes that you sent over to our producers. I thought this was so interesting that the best risk-adjusted idea you have today is to own the S&P 500 as a whole. It's refreshing to hear that because a lot of folks come on and tell you why you have to be a little bit more specific. But why in this moment do you just want to own the index?
Because you're taking on a lot of risk. I mean, the market's trading at 25 times earnings. You're dealing with the fact that the Fed's cutting, despite the fact that if you look at their dot plots relative to 3 months ago, their forecasts, they have inflation going up in aggregate through 2027. They have GDP estimates going up through 2027. They have unemployment going down, but they're cutting rates anyway. And so you're in this environment where you're superheating the market. The Fed's letting the economy run hot, much like they did in 2021. And 2021 was a great year, right? We all felt good. The S&P was up 27%. And then in 2022, you had to pay for the Fed letting the economy run hot and saying inflation was transitory. So if you're in this environment where multiples are so high, the price to sales ratio on the S&P is at the highest it's ever been, then I think you want to be more broadly diversified than owning just 7 stocks in the market where the multiples are even higher for those names and the expectations are even higher in those. So that's why I'm saying a broader group that benefits from rate cuts, sectors that have been forgotten. That's where we're increasingly putting our money to work.
I am curious, Dan, just about investor sentiment overall, given where we've gone. I mean, some recent surveys, including by Bank of America, as well as the AAII survey, seems to suggest that there is still a bearish tilt with regards to sentiment. And I'm wondering if that in and of itself could end up being more of a bullish signal, that if people do feel like they are finally missing out on this phenomenal rally, that they do come off the sidelines and push money into the market.
100% agree with you. And the best numeric way to look at that is you would think in this environment where the S&P is up 13%, you think everybody's flooded into the market. But if you look at money market funds, they're sitting at $7.3 trillion at a record, and they're up 16% year over year. Now, if you go back to prior periods when you've had these ramp ups in the market, a lot of those cases, money market funds were flat to down for a good portion of it, other than the kind of the blow off tops that you saw. So, greed is a really powerful motivator. When you've got the Fed cutting, investors remember 2021, they see some of the Magnificent Seven stocks starting to work again, even some of the laggards. You get towards year end and everybody knows about the Santa Claus rally and the fact that November, December, January, the 3 best consecutive months of the year. It's going to be hard to fight what you just said, Romaine, which is sort of the greed factor starting to kick in and FOMO.
With regards to the AI trade specifically, Dan, and coming out of this earnings season, we seem to get ratification that, at least for right now, the corporate spend on this is holding up. As we get into 2026 and those companies have to start articulating what that spend looks like for next year and beyond, do you think we're going to see similar levels, or are you anticipating maybe we'll start to see a little bit of a ratchet down in that spending now that at least the initial start is already out there?
Well, I think you're going to start to see some ratcheting down of the rate of growth and maybe some contraction in some cases. Because, don't forget, there was a warning shot that was fired across the bow. And that's the fact that NVIDIA missed the data center forecast that Wall Street had, despite having had a write down in the prior quarter. Now, they didn't miss by bunch, by 1% or so. But at the end of the day, it's the first miss since we ever heard about this thing called ChatGPT. So that's something to keep in mind. But more importantly, if you think about at the end customer level, what have we heard? Well, you saw that MIT survey that said 95% of corporations investing in AI were getting 0% returns. This is 3 years after we heard about ChatGPT. You look at OpenAI, Sam Altman, the CEO, has said several times that we're in an AI bubble. And if you look at their own forecasts, they increased revenues by about $26 billion for 2030 to about $200 billion. But it took $80 billion more in cash burn to get to that number. Or you look at Salesforce, which was kind of the poster child for agentic AI. The stock was at an all-time record high in late 2024. It was at a 52-week low in August.
Right.
Because corporations just aren't adopting this. So you're starting to see some warning shots across the bow, which is the other reason why I say, hey, you want to be in a broader group of stocks, because we're 3 years into this. Spending is torrid, but you're going to need to see a return, and I think you're going to see some slowdown, or not. You're not going to have companies raising capex necessarily when they report the September quarters in another month or so.
Well, Dan, don't have a lot of time left here, but I do want to get specific. And when we talk about big tech, I hear what you're saying about that MIT study, certainly heard around the industry, and the fact that we haven't seen a lot of ROI. I know, though, that when it comes to the Magnificent Seven, you still see a pathway here for Google, especially when you think about ChatGPT and how Gemini is positioned there.
Well, absolutely, because if you look at the data, last Friday, Gemini passed ChatGPT in the free app store for Apple. And the reason is, you may have heard of the new app Nano Banana, which is a image editing app. But they also have VO3, which is a video generation app. And AI overviews I'm finding very, very useful. And you're seeing that more and more. And the engagement with Google is going up, in the sense that March quarter paid clicks were up 2% year over year. That's down from when ChatGPT got introduced, when they were up 8% year over year. Yeah. Well, in June, they actually went up. They went from +2 in March to +4 in June. So you're starting to see people engaging more. And I know for myself, early on I was using ChatGPT, then I switched to Grok. Now I'm using Gemini more because I find it more useful. And Google has more data than anyone on the planet to return accurate answers to you. So I see them as the long-term winner in consumer AI.
All right, Dan, got to leave it there. Always appreciate it. Dan Niles, founder, portfolio manager at Niles Investment Management, on a big week for big tech. But when we come back, we're going to talk about one of the biggest losers on the week and on the day. It's Instacart, the stock taking a hit as Amazon bags a new partnership with a major American grocery store chain. It's our stock of the hour, and it's up next. This is Bloomberg.
It is the first week of September. Our clients are just back from the holidays, and we've gathered over 1,000 of them with us today, and we're going to help them piece together a strategy.
Clients are in the room, and they're here to hear more about investment opportunities in Europe, possibly in Japan, in China. We're here to help, and we can help them find those opportunities. We can advise them on how to position their trades, and then we can facilitate and give them access.
Let's get right to our stock of the hour. It's Instacart. It's down 8%. This on the back of a report that Amazon is going to partner with the supermarket chain Winn-Dixie to offer grocery deliveries down in Florida. Mandeep Singh joins us right now, global head of technology research over at Bloomberg Intelligence, raising a lot of questions here, not so much about Amazon and Winn-Dixie, but where does Instacart even fit in anymore in the online grocery delivery space?
Yeah, I think what's very clear now is that marketplaces is a scaled business. That's why you're seeing, the likes of DoorDash and Uber really kind of, take up in market cap compared to the Lyft and Instacarts. And look, with Amazon getting into this partnership, to me, it's more about, them figuring out what that next leg of e-commerce is going to look like in the world of AI agents. I don't think they're looking to really scale up big in grocery delivery. It's more about figuring out what impact AI agents would have on browsing, shopping, e-commerce, last mile delivery. And they're piloting it with this chain. So grocery delivery is not that time sensitive when you think about it. The failure rates can be acceptable. And so that's, I think, what they are trying to figure out is different experiences when it comes to grocery delivery with this world of AI agents.
Well, this is what I find fascinating about Amazon, that, you think about how the stock trades. It's mostly about AWS and AI, as you mentioned, but it has this sprawling giant e-commerce business. It's taking over the world of grocery as well, but that's not necessarily what people trade on, Mandeep.
I mean, look at their ads business, right? So Amazon's ad business run rate is $63 billion. Compare that to a Meta, $185 billion. Even the small companies we're talking about, Instacart has $1 billion ads business. DoorDash has $1 billion ads business. So ultimately, the goal is to build a platform where you have enough users where you can show ads. But with the agentic experience, that whole point and click interface could change. So these companies have to adapt. And, a company like Amazon with 180 million Prime users, they need to figure out what that next UI is going to look like. And I think they have to pilot it with different e-commerce use cases. I think grocery delivery gives you the frequency. So that's what they're trying to do here.
All right, Mandeep. Have a great weekend when you get there. That is Mandeep Singh of Bloomberg Intelligence. Now, coming up, we'll take you to the closing bell just about 15 minutes away. Tracy Chen, she is portfolio manager over at Brandywine Global. She joins us next. This is The Close on Bloomberg.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders say decisions made on their own usually turn out to be poor.
When we go into a new region, networks matter, experience matters. Culturally, there are a lot of differences from region to region. We are just trying to find the right partner. Somebody reliable, somebody that is as invested as we are.
Widen your global network. Search Turning Point, brought to you by HSBC and Bloomberg Media Studios to find out more.
This year's Global Markets Conference theme is Mega, Making Europe Great Again. But the conversation is broader. We're in Hong Kong to hear perspectives from the US, China, Japan, as well as Europe. What we're seeing is clients diversifying their counterparties. BNP Paribas is headquartered in Europe, but we've been in APAC for 160 years. We're optimistic about working with our clients to turn these global perspectives into real, actionable, and relevant strategies for growth.
When we think about performance over the next 6 months to a couple of years, we actually think areas like smaller, large, and mid-cap are better positioned. Even in a rate-cutting environment, that often comes with a little bit of stress. And a lot of these really small names then can succumb to that stress.
Kara Murphy, Chief Investment Officer over at Kestra Investment Management. Katie Greifeld, she kicked us off to the close just about 50 minutes ago.
Yeah, helping us to wrap up what has been a stellar week when it comes to the S&P 500. And you can see we're going to finish on a high note, at least when it comes to the big benchmark, the S&P 500, higher by about 0.5%. Big tech leading there, up about 0.7% on the NASDAQ 100. I can't say the same for the small caps. The Russell 2000 down about 0.7% after that big outperformance that we saw yesterday. And Bitcoin, again, not really moving in sync with this risk-on attitude flowing through the large caps. Bitcoin down about 2%.
Yeah, I'm always curious about these sort of head fakes that we get out of the small caps. We should point out that some of the really small caps, but those with a little bit more of a bent towards Washington, are getting a nice bid, including the nuclear power companies, Oklo, NuScale, up more than 20% on the day. The quantum stocks also moving higher as well. If you're looking for a few bright spots, Tracy Chen, she joins us right now, portfolio manager over at Brandywine Global, to count us down to the closing bells. And the big question everyone has, Tracy Chen, is whether there is actually enough impetus economically, from a monetary policy perspective, and more importantly, from a valuation perspective, to keep this rally going.
Very nice to see you. Yes, I think this rally is definitely boosted by still resilient growth and the expectation for a deep cut path for the Fed. But after the Fed cut 25 basis points, you see the yield curve steepening again, and the financial market is on fire. So whether you think the Fed cut into a growth acceleration or deceleration, I think that's the question. I think if it's the former, I think the risk asset will be just continue to rally. Mm-hmm. And then the financial stabilization will be, I think, at risk at some point.
There is sort of a read-through from what we're seeing in the equity space to what we're also seeing in the fixed income space. Corporate credit spreads, the tightest they've been in 2 to 3 decades, depending on what measure you're taking a look at. Investment grade, high yield. The risk premium, pretty much absent. Is that validation? Is that a vote of confidence in economic condition?
I think there are a lot of factors that has been driving that. So first of all, it's the fundamental for corporate is still solid, right? Today's high yield is quite different from previous year's high yield market, and you see some upgrade, and you see a decent free cash flow, and at the same time the credit fundamental are still solid, and the composition of the high yield index also changed quite a lot. So this is fundamental. And then in terms of technical, you see a massive amount of inflow into annuity fund and a mutual fund and fixed income fund. So this reach for yield is still right there. The all-in yield for high yield is very high, and also this applies to structured credit as well. So even though the spread is very tight, the all-in yield is still very attractive. And thirdly, I think if you look at France, a lot of some of the French corporate bond, their spread tightened through their sovereign bond. So that's actually a warning sign. So right now you can argue is a risk in the corporate credit market or in the sovereign bond market, whether other DM countries' bond market will follow that, right? Can corporate credit or structured credit eventually trade through sovereign bond? Sovereign bond market, yeah.
Well, I'll ask you exactly that. We saw it happen in France, as you point out. Do you think we could see something similar when it comes to the U.S. fixed income markets?
I think that's possible. It really depends on the fiscal path right here. And also, I think the only thing that can support the long end is whether the Fed can do some unconventional tweaking or intervention of the curve, whether yield curve control, yield curve control, some other means.
Hey, Tracy, hold that thought for 1 second. In conversation right now with Tracy Chen over at Brandywine Global. We do have some breaking news crossing the wire right now. This on Oracle. The shares popping about 4% here. On the back of news that Oracle is in talks with Meta on a $20 billion AI cloud computing deal. Now, this is based on Bloomberg reporting site, and people familiar with the talks. These talks are not yet a done deal, but they said and the terms of the deal could still change before a final agreement. Nevertheless, we're talking about a $20 billion deal. Of course, this follows on the heels of a previous deal that we learned about earlier this week, also involving Oracle, Katie, which seems to now have become the belle at the ball when it comes to AI.
That's the thing. Oracle, it feels like all the stars are aligning there. As you point out, you can see Oracle shares popping on that news, now at more than 4%. Can't say the same for Meta, still lower on the day, but getting back to unchanged as investors digest, of course, that headline, which again is that Oracle in talks with Meta on a $20 billion AI cloud computing deal. That is according to Bloomberg News reporting. We'll continue to follow that story here.
And I do want to go back to Tracy and bring her back into this conversation. And Tracy, I know you haven't had a chance to parse these headlines, but there is a broader question here about the AI spend, how important that has been to the rally over the last couple of years, and what importance it's going to have to this rally if it continues over the next year or two.
Yeah, I think this AI boom or AI spend has broad implication for the fixed income market. First, it can drive the labor market, whether you will see some massive white-collar jobs getting eliminated. And also it can boost productivity. But at the same time, right now, we still see around 90% of companies, they are still haven't generated like profit from AI spend yet. But the race between China and US, I think is getting red hot. So from a national security perspective, I think this AI spend will be humongous. And you see this merger and acquisition going on. But so I think this in the short term definitely will boost the economic growth. So that should not bode well for the long end. But at the same time, if they boost the productivity, that should help the long end.
Tracy Chen, portfolio manager over at Brandywine Global. Have a wonderful weekend. And just to reiterate, Oracle shares were already higher in the session, but now moving to session highs, up almost 5% here. This on the back of a report. Bloomberg citing people familiar with the situation that Oracle is in talks with Meta on a $20 billion AI cloud computing deal. Katie.
And you think about what this would mean for the competitive landscape, something that we were talking about in the wake of Oracle earnings last week. But when it comes to cloud infrastructure, they're up against Amazon, Microsoft, Alphabet's Google. But just, again, in the last few weeks, it seems like it's been reset a little bit.
Yeah, it's been reset. I guess I'm also fascinated by this continued spend. I mean, obviously, Meta has $20 billion in the couch cushions, but it gets to this idea of these companies continuing to sort of invest in this space, whether there's going to be payoff or not, who knows? But at least for right now, that continues. It's a big part of the reason why we've had the rally over the last 3 years. We're coming up on the 3-year anniversary of the public release of ChatGPT, a phenomenal week. And we're going to break down all of today's price action when we come back, when our global simulcast starts now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Katie Greifeld, taking you through to that closing bell with the global simulcast. It starts now. Carol Masser, Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube on what is a record-setting week, Carol Masser, maybe fueled by rate cuts, maybe fueled by the AI trade, maybe fueled by all of the above.
I don't know. You're right. But we're looking at, another bunch of record closes, I think, for 3 of the major averages, watching what's going on with small caps. It's funny, so much for being a Friday where we think things start to wind down. Tim and I were saying it was something like 6 redheads on the Bloomberg in just terms of just headlines and things happening.
Carol, make that 7.
7.
Aptiv is said to consider sale of electrical distribution unit. I don't know if you guys had time to hit that on your program before we came in, but that's kind of a record probably for news that has hit during our program on a Friday afternoon.
I will point out that it is a Friday afternoon, and we know that the Friday news dump is a real thing, as evidenced by this specific Friday.
And we get to this idea here, and when we start to talk about sort of what conditions are, right? The idea that financial conditions are loose, and they're obviously gotten looser given the rate cut and the rhetoric coming out of the Fed. Next week, a lot of those Fed members are going to sort of make the rounds and really start to articulate why they voted the way they did and what they might vote for going forward. We heard from Kashkari earlier today and Mary Daly. They seem to be on board with this cycle.
Yeah, it's really kind of fascinating. It really comes down to that. We just had a guest on, though, Walter Todd over at Greenwood Capital, though, concerns that what we're hearing in the economy, though, and that maybe he thinks financial markets, equities are getting a little ahead of themselves.
All right, let's take a look here at the closing bells in New York on this Friday afternoon as we close out the week. The Dow, the S&P, the NASDAQ, all in the green. Katie Greifeld, I think that counts as, what did you call it, a triple crown?
Triple crown,
baby. Triple crown, triple header, whatever you want it to be. The Dow up more than about 172 points, or 0.4%. The S&P up 30 points, or 0.5%. The NASDAQ composite up 0.7%. Similar move higher for the NASDAQ 100. But here's where we start to get into trouble. The Russell 2000, which had massive outperformance yesterday, is your underperformer today, down 0.8%. Dow Transport's down 0.2%.
I mean, what'd you do, Romaine? Come on. We were so close.
Press the wrong button.
We were so close.
All right, S&P 500, back to the big caps we go. 211 names in the average. Higher today. Katie, 290 to the downside, 2 unchanged.
Let's take a look at the sector level as illustrated by this circle. You can see it's very green today, and it's big tech once again. This is what we saw yesterday. It's what we see on this Friday, really leading gains gains at the sector level, up more than 1%. Utilities, too, though, getting in on the action, as too did communication services. On the downside, you do have 4 sectors in the red on this Friday. Energy leading losses, off by 1.3%. Real estate, consumer staples, and healthcare also finishing the day lower, Carol.
A lot of green. All right, let's get to some of those individual gainers that got it there. FedEx, that stock finishing off its best levels of the session, still a gain of 2.3%. The company reported better than expected adjusted earnings per share for the first quarter, reinstated its full year sales and profit outlook. And that's really what got investors excited, because remember when they had suspended it because they just weren't quite sure what was coming at them. And this is all happening, investors buying the stock because the company still expects a $1 billion hit from trade volatility this year due to President Trump's tariffs and the loss of a key exemption for low value goods. Got to mention Apple as well. That went up about 3.2%.
Did you get a new iPhone today?
I did not. I'm still happy with what I've got. I'm still getting used to that new, was it liquid glass or whatever the heck it is?
I don't know. I'm on iPhone 6.
Oh, sorry for you. Yeah. All right. Well, the iPhone 17 Pro, Pro Max, and iPhone Air have gone on sale, with the new phones attracting long lines at Apple stores in various locations. It is the first time.
I was in that line today, by the way.
So you were buying something?
No, I was actually there for something completely unrelated to Tim Cook, but I just happened to run into him. I said hi.
Did
Just
you
there
really?
for the vibes?
Yes, seriously. Yes.
Did you ask him anything?
I did not. I did not get that close to him. You know, he has a lot of security around him.
Okay. Yeah.
As you can imagine.
So do you.
Yeah. So he's like the president. You can't get any close to him. You're like, who are you?
All right, moving along. Apple shares up 3.2%. Keep in mind, I think it was Mark Urban pointing out, first time since 2020 that Apple has rolled out several new phone designs and a lot of new gear. So people excited. This one, courtesy of my lovely co-host, Tim Stanovec, Bright House Financial. Yes. Thank you. BHF is the ticker. Stock up 27% in today's session. A consortium led by the insurer Aquarian Holdings in advanced talks to pay $65 to $70 per share for Bright House Financial. This is according to people in the know as the sales process for the annuity provider comes to a head. So we'll see. Bright House could decide as soon as next week to move forward, or they could remain independent, according to those people in the know. And I'm just going to throw in.
Oh, sure.
Sorry, Finley, I didn't send this to you, but Oracle, a late pop on that redhead, up about 4% here at the close. Company in talks with Meta on a $20 billion AI cloud computing deal. We know Oracle has been on a tear when it comes to lining up AI cloud computing deals. Stock's up 85% year to date. I'm done.
All right, I want to get to some of the decliners today. Home builders taking a hit. Big part of that is because of Lennar, down 4.2%. The company's forecast for quarterly home orders miss analyst estimates due to affordability concerns, potential concerns about the job market as well. Lennar's results, according to the company, reflect both the continued pressures of today's housing market and the consistency of Lennar's operating strategy. Every single name in the S1500 home index, the S&P 500, S&P 1500, home index, was lower on the day today. Also watching the parent company of Instacart. Its ticker is CART. Maple Bear is the name, down 8.6%. This after reports late yesterday, that Amazon has partnered with Southeastern supermarket chain Winn-Dixie for grocery delivery in Florida. Other grocers also traded lower today, including Kroger and Albertsons as well. And finally, just watching what happened with Intel today. After this week's record run, Intel shares fell after Citigroup downgraded the stock to sell from neutral, pointing to the company's rich valuation. Shares fell on the day today, down 3.2%. Remember, shares rallied 23% on Thursday after NVIDIA agreed to invest $5 billion in the company.
And I just want to add an honorable mention on that. StubHub, I was taking a look at those shares. Remember, they had the IPO on on Tuesday night, at $23.50. They've closed below that in every session since, including today, down another 10%. Some of that might actually have to do with some idiosyncratic issues, some issues coming out of Washington with regards to some concerns about Ticketmaster and their practices as well.
I was looking at Pattern Technology, which is another IPO today. It initially opened down as much as 8.9%. It ended up finishing the day higher by 9.6%. But for a long time today, I thought that was going to be another IPO that kind of stuttered out of the gate.
Yeah, I think we've had 3 this week, actually, that did not perform as well as some of the ones that we had in the previous week. It'll be interesting to see what the read-through is as we get into next week. Just a real quick check on yields here on a daily basis. Not a whole lot of activity, but the more notable move is what we saw on a weekly basis, the first weekly decline that we've seen in yields across the board since mid-August. So despite the fact that you are seeing a little bit of an upswing in yields on the day, we should point out that the trend line has been to the downside. As expected, a lot of folks front ran that Fed rate decision, and at least it looks right now with regards to the latest CFTC data that people are still positioned for additional drop in yields.
All right, something to certainly keep a watch on as we get into the new trading week. Having said that, something we can maybe all be a little bit happy about on this Friday, coffee futures. We saw them definitely pull back in both New York and London. This is on an improving supply outlook and traders keeping a close eye on tariff impact. So futures for premium, is it Arabica? Am I saying it correctly?
Arabica.
Is it Arabica?
Yeah,
okay.
It's Arabica.
Thank God for all
just
of
like
you
it's
guys.
spelled.
That's one of those words I try not to say out loud.
I was like, do I say it? Do I not? Anyway, fell as much as 6.5% in New York and Washington. I should say the Washington Post reported that U.S. lawmakers plan to introduce a bill to exempt coffee product imports from tariffs. So this is something we're keeping a watch on. Certainly play into the inflationary picture.
I've been buying the same bag of 5-pound coffee beans.
Of course, you make your own coffee.
Since 2020.
Okay.
It has gone up in price from $75 to $80, and then up to $85. Something tells me it will not go down.
$75. So somebody who doesn't drink coffee is $75 for 5 pounds.
5 pounds. No, that's a pretty good deal. Okay, that is a pretty good deal.
Pretty good deal.
Pretty good deal for single origin Nicaraguan coffee.
For dirt.
That's a pretty good deal.
Have you guys ever asked Tim about his coffee process? He doesn't drink coffee when he comes to work. It's a special moment at home.
Oh, he's one of those guys. You have like one of those really high-end Italian like espresso machines.
You only have to buy that.
You wake everybody up in the house.
That's like every 2 months you buy a bag of coffee.
Like my wife there.
I had no idea. I always thought he was like, easy peasy and down to earth.
No.
Not when it comes to his coffee.
Then you got to know me.
I did. Still love. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. Have a good and safe weekend, everybody. And, of course, Katie and Romaine continuing there on the close, and Tim and I continuing right here on Bloomberg Business Week Daily. We'll see you again, same time, same place on Monday.
And our coverage continues here on Bloomberg Television as we revert back to that breaking news just a little while ago on Oracle. The shares spiking into the close after Bloomberg reported, citing people familiar with the situation, that Oracle is in talks with Meta for a cloud computing deal that would be worth about $20 billion. Bloomberg reporter Brody Ford joins us right now, who helped to break this story. What do we know, Brody?
Well, Larry Ellison can't stop winning. That's what we know. They posted one of the craziest spikes in bookings of all time last week. They added $350 billion in business, largely due to OpenAI. And so people didn't take Oracle's cloud very seriously a couple years ago, but we keep getting these data points to show that they are winning these big AI deals.
That's the thing, Brody. That's what Romaine and I were talking about when this headline broke, that you think about the competitive landscape when it comes to cloud infrastructure. Like you said, Intel, or rather Oracle, wasn't mentioned in the same breath as maybe Amazon, Microsoft, Google, for example. But that has just started to change just in the last couple of weeks, it feels like.
Absolutely. We're in an environment where nobody can get enough computing power for AI, and Oracle has been a company that's willing to say yes to deals. And now the criticism could be, is Oracle saying yes to too many deals? Can it deliver on what it's been promising? It's on the hook to give OpenAI enough computing power that's equivalent to 2 Hoover dams, and they have to do that in 2 years. Can they add another deal on top of it to give Meta $20 billion of compute? They seem to think so, and investors seem excited.
I am curious, Bertie. I mean, there's been a lot of discussion as to why Oracle specifically. And that's not a diss on Oracle, but it's really just the idea that is this that Oracle offers something that no one else offers, or is this more about the perception that Oracle is, if you will, kind of the Switzerland in the AI space right now? They don't necessarily competing against some of their potential customers in the way that some of the hyperscalers might be.
The real factor is that people need computing power, and Oracle has the ability to give it to them. And they can give it to them because they are an insane cash cow business. They have database and applications that were printing tens of billions per year. And a couple of years ago, Oracle made the smart bet that we're going to take our cash flow over here and invest it in our infrastructure over there. And so when the AI boom came around, they said, well, we have the teams, we have the people, let's just hit the gas. And so they've been willing to commit to some incredible timelines. And yes, part of it is that they're getting good chip allocation from NVIDIA because NVIDIA doesn't want every GPU to go to Microsoft.
Brody Ford breaking the news there on Oracle in talks with Meta on a $20 billion AI deal. And of course, it's a nice capstone to a week, which of course was led by big tech. The FANG index, remember them, up 3% on the week. The Mag 7 up 3% on the week. The Philadelphia Semiconductor Index up 4% on the week. And of course, all of the major indices, including the S&P, NASDAQ, the Dow, and yes, too, the Russell 2000, also closing out with significant gains on the week. Michael Casper of Bloomberg Intelligence joins us right now for our Factor Friday. And Michael, a big question here right now is what exactly rate cuts are going to mean for this rally. Not so much just whether rate cuts themselves will goose stocks, but if the Fed is more focused on the job market and less on inflation, should investors be worried about inflation eating into those gains?
Yeah, I'm not so worried about inflation eating into those gains. If you bucket S&P 500 returns over time into different inflation buckets, so CPI at 1.5% to 3% or so on, you actually get a pretty favorable environment until inflation hits about 3.5%, 4%, and that's when returns start to degrade. So I think the Fed is right in being a little bit less concerned about inflation, more concerned about the job market, more concerned about manufacturing being weak. Of course, ISM PMIs have been in contraction for some time, and I really think that that's what they're running with, and it is certainly not a bad environment for stocks if inflation is running a little bit hotter than the 2% target.
What about for small caps? We saw the Russell 2000 finally hit that all-time high yesterday on the news of that cut and the expectation that we're going to get more. But false dawns, of course, we've seen this before when it comes to small caps. Is this time actually different?
Yeah, so my model for the Russell 2000 was a little bit excited about the Russell back in 3 months ago when we updated it. And the reason for that was the huge valuation expansion opportunity that there was in the Russell 2000, right? So if you think about it, the way we frame our models, consensus expectations for rates are a huge component of the valuation side of the model. And even back then, 3 months ago, it was signaling that the Russell had upside to 2350. Of course, if we update that today with lower rates and so on in the model, you would get a significantly higher output. So small caps, extremely discounted to the S&P 500, extremely discounted to historical norms. There's a lot of room to run on valuations for them.
Okay, well then, should they be the biggest beneficiaries, assuming we think we know what's going to happen?
That seems to be my thesis, right? So the cheapest stocks in the S&P 500 in the Russell 2000 might be the biggest beneficiary. If you think about value and growth and the dynamic there, value stocks being more sensitive to the economy, growth stocks being a little bit more resilient because they're growth and they're in a growth cycle. If you get rate cuts, and valuations certainly do start to matter, you get stuff like the yield curve starts to steepen, PMIs start to come back as a result of the Fed kind of goosing the economy, then it's certainly a favorable backdrop for value stocks. And in fact, if you look at consensus fundamental estimates for the year ahead, they were already predicting stuff outside of, say, S&P 500 tech starting to catch up to EPS growth of tech, which should be a favorable environment for some of these cheaper stocks.
All right, Michael, really appreciate you taking the time on this Friday afternoon. That is Michael Casper of Bloomberg Intelligence. Have a great weekend, but stick with us now because joining us on this big week in markets and the Fed, I'm pleased to say, Jeremy Siegel. He is Professor Emeritus of Finance at the Wharton School at the University of Pennsylvania with us now. Professor, fantastic to have you with us. I want to start on the little guys, on the underloved parts of the market, because what a week you saw for small caps, for value stocks in the wake of that Fed decision. And I'd love to hear your perspective on whether we are truly going to see a sustainable broadening of this rally.
Well, we've talked about the broadening of the rally for a year, and we get a big surge, and then it's like a head fake, and then the Mag 7 moves ahead again. Now, Russell has certainly done better, Russell 2000, because the rate cuts are now at least a reality on stage one. But, at this particular juncture, I don't see a significant break in the growth to value momentum that really has dominated the market, except for those few months around when, tariffs in April and May, it's been really straight upward of AI relative to the other stocks. Now, again, I think the time will come for those small and value stocks. I just have heard it so often for 6 months, and and everyone gets excited 2 or 3 days of great outperformance, and then whoop, it just dies like a dead plant on a vine. So I think we really need to see those cuts come in and really we need to see those value cuts use AI to generate better margins.
Right.
And really AI is not just for the AI stocks. AI is supposed to be for the ordinary firm to enhance its productivity. And, until we really see them doing that, and I was hopeful that the tariffs might have pushed them to say, all right, now we really got to be serious about that. And maybe they will in the fourth quarter. But so far, adoption has been relatively slow.
Right. Yeah, no. And there was that MIT study, which we were discussing just earlier this program, that really poured some cold water on all of the enthusiasm that we're seeing behind AI. But just to focus a little bit more on the small caps, you said that the time will come. For most people, what they need to see is a reliable Fed rate cutting cycle. If now isn't the time for small caps, does that mean, Professor, that you don't see us on the cusp of an actual cycle of rate cuts here?
Well, I actually do, but I mean, don't forget I would like to see I think the short-term rate should be in the low threes, which would put it nearly 100 basis points below there, and that is really good for small caps. I think that there was a lot of excitement when Chairman Powell did the pivot at in Jackson Hole. And I think that's really what does it. And now we see, yes, he cut once, but the committee is still split. Half of them don't really think another cut is necessary, and half do think that we're going to have, one cut per session for the remainder there. So I think that ambiguity has sort of taken a little of the bloom off the rose, a little bit of the reason why the 10-year is back above 410. Listen, the time will come. In the long run, valuation, and there's a lot of great valuations in those small caps, really does out in the end. But until that earnings momentum gets really going, right now the short-term trend, I think, is still with that AI.
And there's also this idea, too, when we talk about value, Professor, the idea of sort of what it looks like on a risk-adjusted basis. And, we had Dan Niles from the Niles Management earlier, and he kind of quipped about this idea that he thought that probably the best risk-adjusted idea in his view was just to buy the S&P as a whole and hope that, the rate cuts actually boost the broader market. But his point was that there's so much idiosyncratic risk out there. And I am curious, why take that risk if you don't have to?
Yeah, well, that's what, listen, I'm an indexer that we believe in broad diversification. Exactly. Why take that risk? Buy and hold the index. I mean, I think it's probably one of the great insights of academic and professional research over the last 50 years. Now, I don't blame anyone who, takes 25, 30, 40% of their portfolio and tries to pick good individual stocks. But overall, if you want that growth with a minimum of that idiosyncratic risk, really you have to be an indexer to the market in one way or another.
Where do we stand with investor sentiment, Professor? Because, we talk about a record high, yet I'm still looking at data today, bank deposits near record highs, money markets near record highs, the AAIA survey showing that investor sentiment on an individual basis still tilting bearish.
Yeah, and VIX at 15, certainly it's lower than the 20s or, certainly the 30s we had during the worst of the tariff days. But still, usually when you get a complacent bull market, it is in the very low teens. And before COVID, it got below 10. So I still think there is that risk premium out there. There isn't as much complacency. Not a lot of people are still waiting for the shoe to drop on the tariffs. And by the way, it isn't completely crazy to think, well, maybe it'll happen in October, maybe it'll happen in Christmas season, but certainly it hasn't happened so far. And by the way, we only have 8 trading days left in September, so we got through the end of August and all of September, at least so far, seasonally the worst part of the year in all-time highs, trifecta, triple crown, whatever you want to call it. That's the way we ended this week. So, I mean, what could be better than that?
Yeah, well, we've been calling it a triple crown over on this desk. Professor, we only have about a minute left, but I do want to talk about the future of the Fed and specifically the future of Fed independence. When we talk about risk premiums, one place you're not necessarily seeing a risk premium is in the bond market at the long end for when it comes to the question of who might be the Fed chair come May 2026. I wonder how you think through that.
Well, because I really don't think there's a real serious threat. I mean, all the choices for Fed chair, that I think, Chris Waller and Kevin Warsh and even Hassett are excellent people who value the independence of the Federal Reserve and are very well versed in monetary theory of policy. And I think that's basically what you want. I mean, if you want to know the truth, I was very pleased but surprised. I mean, Waller, who was supposed to be, one of the candidates for the head of the Fed, I thought, he's going to want to go 50 to show that he's got the Trump imprimatur, and he only went for 25. I was very surprised. Kevin Hassett said, "Yeah, I'm satisfied with 25." In a way, there was a rally around the chair. And, I heard Steve Myron speak, and yes, he went for 50, and, he's a smart guy. I mean, he has a lot of reasons for wanting to go down, and he's actually said next week he's going to present some really other economic reasons why he thinks the Fed should move faster towards its neutral target. All these people are good economists. They're not just, hacks that are going to do the bidding of the president. Doesn't mean there isn't political influence. The Fed is a creature of Congress. It's not guaranteed by the Constitution. But nonetheless, I think the people that are now, heading the Fed or being talked about to head the Fed are very qualified individuals.
All right. Professor, we have to leave it there. Have a wonderful weekend. Jeremy Siegel.
Thank you very much. You
Professor
too.
Emeritus over at Finance over at the Wharton School at the University of Pennsylvania.
Now, coming up on the close, the top 3, where we focus in on the top 3 movers and shakers at the centers of the day's biggest stories.
Triple crown.
It's next. This is the close. All right, it's time now for the top 3, where we name drop the people driving some of the day's most talked about stories. And up first, Ray Dalio, the Bridgewater Associates founder, saying that U.S. monetary order is at risk as the U.S. is unable to cut back on runaway spending. Quote, other factors together will determine whether we're seeing the end of the entire U.S. empire. Pretty dire on this Friday afternoon.
Pretty dire, and we should point out a drum that he's been banging for quite some time.
I think I've heard this before.
Yeah, in fairness to him, he does actually sort of, what do you call it, show his receipts, if you will, as to behind his thesis. But again, obviously something a long time coming. On a slightly less dour note, Frida Kahlo, remember her?
I do.
Very famous there. And a portrait of the artist is now going up for auction. And what could actually be a record $60 million sale. This over at Sotheby's. I'm a big art geek, so I'm really into this. I don't have $60 million, but if I did,
you wouldn't be here, first of all.
I might. I love you, and I love this job.
Love of the game.
More than anything else.
Yeah, but there you can see that portrait there.
Do you like this tie?
It is nice.
Thank
actually,
you very much.
I was thinking that earlier. I like the suit, too.
Thank you. You know who would like this suit?
Tell me.
Bad Bunny.
Bad Bunny. He's third on the docket. The music star reportedly being sued by an 84-year-old man whose home was used in the star's short film and summer residency. I have to admit, I'm not read in on this story.
So I am. I love it. This is the casita, the famous casita that he uses as a part of his stage show at his residency in Puerto Rico. But it's actually based on a real house that he featured in the video. And now all of the stands, including one of our producers, are just flocking to this poor 84-year-old guy's house who's just trying to live out his days in peace to get their little selfies and everything else with this house. And now he's saying to Bad Bunny, hey, man.
Hey, pay up.
I know. Or is that going to help?
I don't know, but I mean, I'd feel a lot better if, you know, I had some money in my pocket. So there you have it, the top 3.
I will be back in a moment. Stick with us. This is The Close on Bloomberg.
Well, shares of Oracle still rising in the after hours after we got that late breaking news in the trading day that they are in talks with Meta for a cloud computing deal worth about $20 billion. That is according to Bloomberg News reporting. Let's bring in Jonathan Levin. He is a columnist with Bloomberg Opinion. So, Jonathan, I would love to hear your reaction here. We were talking about this with our reporter Brody Ford, and in his words, Larry Ellison just can't stop winning here.
Yeah, totally. I mean, I think from a macro standpoint, it tells us a couple of things. Number one, there's a lot of moving and shaking still going on in the AI story. I mean, coming into this year, everybody was talking about, like, when is the AI winter going to start, yada, yada. But companies are still out there very active in this space. And the other thing you have to notice is, like, people weren't talking about Oracle as a big AI play even just a few months ago. And it really just goes to show you, like, we understand that the AI narrative is going to be with us for a while, but there's still a lot of movement going on in terms of what is the best way to play that on an individual stock basis.
I am curious, though. I mean, there has been a lot of talk, and there was even a note out today by some of the strategists over at JP Morgan about the concerns about the AI trade, Jonathan. The idea that if we don't start to see the companies that are spending this money start to show the ROI in a meaningful way, that could maybe undercut the rally.
Yeah, I think that's, you know, it's definitely a possibility. But another way that this could play out is you could see, you know, famously the phase 1 bets here, NVIDIA, go into a little bit of a cool-off phase. But it could soon move into other spaces of the market. It could even move into spaces of the market that we haven't really talked about in the past couple of years, where maybe, you know, AI is just part of the productivity story. Maybe it's just subtly helping companies in not necessarily tech sectors keep tabs on those margins and so forth.
And Jonathan, of course, we're keeping an eye on shares of Oracle after hours. But I do actually want to go back to the bond market. What we saw this week, we finally got that 25 basis point rate cut from the Fed. The expectation is that we're going to see more. A lot of folks have been watching the long end, given what we saw last September and the reaction from the 10-year and 30-year part of the curve. You write, the bond market won't like these Fed rate cuts. Tell me why.
Yeah, I mean, I think it's totally possible, speculative, of course, but totally possible that we've seen all the rally that we're going to see in, like, the 10-year sector of the market. I think if you look deep into the dot plot, of course, the median dot said that we were going to get 2 more cuts here. But really, you see this bifurcation. You see this bimodal distribution. You see a whole big group of, I think, 6 policymakers who didn't see the Fed doing anything else for the rest of the year. And you see another chunk of about 9 policymakers who think that they will go through with the 2 cuts. Ultimately, it all comes down to what happens in the labor market. And yes, there are some compelling reasons to worry about labor market softness. We've all been watching those payrolls. But if you look over at the ratios, you really see a different story. You know, 4.3% unemployment. It's been creeping up a little bit. But in earlier years and decades past, we would have looked at 4.3% unemployment and said, this is actually pretty good. So, you know, is the labor market signal enough to get folks going with inflation still running around 3%? I don't know.
All right, Jonathan Levin, Bloomberg Opinion columnist, here on what has been still a phenomenal week and, quite frankly, a phenomenal run over the last 2 to 3 years, particularly when it comes to that AI trade, Katie Greifeld. And we saw some, I guess, old school names finally start to get a bid. We've been talking a lot about Oracle, but Intel had a great week as well.
Yeah, absolutely. A fallen American icon now. Maybe
still falling, but it's got $5 billion in his pocket.
With more money, yeah. Let's talk about some of the other notable movers on the week.
I love the attempt at eloquence there, though.
Yeah, I did try. I needed to knit that together a little bit better. But in any case, Intel shares up 23% on the week. Micron shares also having a good week. They did have a 12-day winning streak. They fell a bit on this Friday, fading from their record high, but still 12 days of gains, adding up to 3.5%.
I'm really fascinated by it. They actually report earnings next week. I think, what was it, on a Tuesday or Wednesday or something like that. But I mean, but all these memory chip makers have been like on fire as of late, and I guess it's partly tied to this. Well, you need a lot of memory.
Yeah, big time, lifting all boats. We had some other names up there.
We did, including Darden, restaurants. That's Olive Garden, breadsticks, salads.
Week for the restaurants. We were talking about Cracker Barrel. Of course, Darden owns Olive Garden, which is
You've
a
never
fan
been in
favorite.
Olive Garden,
I went there once, and I liked it.
What'd you have for lunch today?
I'm so excited to tell you. Tuna tartare, delicious, some avocados. Anyway, Darden shares down 13% for the week. And Lennar, we end on another somber note. Lennar, the home builder, its fourth quarter new orders forecast missed estimates. You add it all together, down 7.3% on the week.
And we should point out we are going to get more earnings next week out of KB Home. That's next Wednesday.
I won't be here, but I'll be watching fondly.
I hope so. This is The Close on Bloomberg. The United Nations General Assembly is going to kick off next week right here in New York City. The city bracing now for the 80th session of the summit. Big priorities, three key ones, top of mind for organizers. Of course, the reform agenda, also selecting a new Secretary General, and of course, a lot of questions right now about the UN Sustainable Development Goals. To talk a little bit more about what happens on that front, as well as what's going on in AI, we want to bring in Dima Ayaya, Secretary General of the Digital Cooperation Organization, which works with governments, the private sector, NGOs, and more with the goal of achieving social prosperity by growing the digital economy. Great to see you, Dima.
Thank you for having me.
We talk on the show all the time about artificial intelligence, but it's always through the lens of these big companies, primarily U.S. companies, that are benefiting from that. When I look at the rest of the world, particularly outside the developed world, I do wonder what they are benefiting from or contributing to this AI spend that I would assume they don't necessarily have the same deep pockets that we have, say, here in the United States or in Europe or in the Middle East.
Well, exactly. Looking at last year alone, 2024, $300 billion has been invested in AI. But if you look, it's just a number of countries that have contributed to that investment in building their infrastructure. And rather than narrowing the digital divide, we're increasing that divide with AI. Looking at the connectivity divide as well, 2.6 billion people are still not connected. How are they even going to benefit from such kind of amazing technology like AI? And this is where in the DCO, the Digital Cooperation Organization, we're really working on identifying the competitive advantage of each country and their AI readiness and seeing how can it be a solution for a challenge to another country. Like, for instance, we see the GCC investing heavily in AI infrastructure, but then you see a lot of brain power in other countries like Pakistan, Nigeria, Morocco, Jordan, and this is where we come up with a governance where all these countries can benefit from each other.
I'm glad you bring up the brain power, because this has been brought up before, that you have a lot of countries that do certainly have the brain power, but they don't necessarily have the institutions, the corporate institutions and the money to actually fund it in the same way you have in the U.S. Is there a risk that some of those nations without the money lose the brain power, meaning those people end up going to the U.S. or to Europe or maybe even to China?
Oh, definitely. And that's why it's very important to create that stimulus business environment that can enrich that innovation in the country and beyond. And this is where we're working on creating that easy expansion between countries. Last year alone, we supported 180 startups by expanding easily between member states. And that's by easing doing business, even registrations, and also creating bank accounts. So rather than having fragmented licenses or policies and regulations for opening your own business, we've unified all of that between our member states, creating a bigger market, which is up to 800 million people that can benefit from these technologies.
Well, to that point, to the work that you're doing with startups, something that I wonder about is that when we talk about this connectivity problem, what is the relationship between governments and the private sector in working together to solve that?
Oh, that's a great question. we truly believe that to narrow that divide, it needs to be a collective effort. It needs to be a multi-stakeholder approach. We have to innovate in our ways of doing business, even disrupting our PPP modules, which is public-private partnerships. What we used to do before, the models in the past, is not going to work going forward. And this is where we have to bring in financial institutions and new ways of investments as well, not only in terms of private sector, but also individuals can invest as well in bridging that connectivity gap. We're going to need more than $2 trillion to bridge that gap.
Yeah, well, if you had to put numbers to it, $2 trillion, not enough. What is the estimate, do you think?
In terms of connectivity? In terms
of what do you need to further that vision?
Not only in terms of financials, but also we do need to innovate in connectivity itself. Now, I'll give you an example. When it comes to connecting or, for instance, the Gulf or a country like Saudi Arabia, at the end of the day, the urban nature of Saudi Arabia is very easy, where it's a desert at the end of the day. Where you look at Pakistan, where the urban nature is mostly stone mountains, and therefore it takes triple the amount in capital to have that connectivity. So it's not just about the financials, but also creating new innovations like satellite connectivity as well as other arenas.
All right, Dima, great to get some time with you ahead of what's going to be a busy week. That is Dima Al-Yahya. She is Secretary General of the Digital Corporation Organization. Meanwhile, President Trump announcing progress towards finalizing a deal over TikTok after his call with Chinese President Xi earlier today. He also added that the two would meet at the upcoming APEC summit in what would be their first meeting since Trump's return to office. Joining us now to discuss is co-host of Bloomberg's Balance of Power, Joe Matthew. Joe, you think about the readouts from the call, what we heard from the Trump administration, what we heard from the Chinese side. There was some discordance there.
Which is typical, and the Chinese got their headlines out before the president. The thing is, we talk about a readout. That used to be an official statement from the press office that would be carefully vetted to give us a sense of what was discussed. Now we look at Truth Social. This is just a social post by the president that we're working on here. The meeting's a big deal. We thought that was going to be the case. Now we know that it will. And when the president goes to China is something we're waiting to hear. As far as the TikTok deal goes, though, we spent a lot of time reading between the lines. And in this case, he referred to the progress made on very important issues, including approval of the TikTok deal. But it's not been approved. And it seems that as the president describes this as progress, we're really not in any different space than we were when Scott Bessent was negotiating this in Europe. I will note that this is not the only thing that the president has on his mind today. On the other end of Pennsylvania Avenue, 2 attempts to pass a continuing resolution to keep the government open past the end of this month failed. That's a problem because lawmakers are leaving town. They're not going to be back with only 2 days left to try to solve this. And I will tell you that it's looking more likely this evening that a government shutdown of an undetermined length is likely going to start at the beginning of October.
So, Joe, can you, for those folks that don't understand the process in Washington, so explain this to me. So the House passed something, right? So this is in the Senate's lap, right? And this is more or less right now, is it about whether the Democrats block this or whether there's enough votes on the Republican side to move it forward?
Listen, they're both blaming each other right now. There was a Republican plan and a Democratic plan that both went to the Senate and both failed. The House did pass the Republican version. It's a clean CR, as they call it, basically extends the spending that we have now. But Democrats want to see an extension of Obamacare subsidies that expire at the end of the year. This is the rub. Republicans are not on board. They say it's a conversation and a debate for another day. They will only have 48 hours to figure this out, Romaine, when they come back, and that is going to be a doozy. It's unlikely they will succeed.
All right, Joe Matthew, you can catch him at the top of the hour as co-host of Bloomberg's Balance of Power. We'll be back in a moment here on The Close. Stick with us. All right, it's Friday, and that means for a lot of folks, it's time to unwind, listen to music, and if that's the case for you, you're going to love our next guest, John Summit, the internationally renowned DJ and music producer. He stopped by Studio 2 a little bit earlier today, just ahead of a big music festival here in New York, and we talked a lot about making music, and more importantly, how to grow a business.
Well, the planning has been going on for months. I mean, just to get the permitting to be able to throw a huge festival for 50,000 people in the city, it's a lot of work. I mean, there has been an electronic music festival here for a couple years. So the expectations are very high, and to be able to find a bunch of vendors, food vendors to work with, sponsors to help make the event happen. It's been a lot of time and energy, but I think it's going to all pay off.
And you obviously have done this for a long time right now. You've played a lot of different venues, and through your new venture with Experts Only, you're also sort of, I guess, trying out different types of venues rather than just, say, an arena or a stadium. Talk about that.
So I did Madison Square Garden for the first time last year, and then the options were maybe doing that a couple more times this year, but that doesn't really excite me too much. I think I like to take things to the next level, and especially with the record label, I want to be able to put on other artists than just me. I'm kind of bored of just doing the John Summit show, so to be able to do Experts Only and like do something that's bigger than just myself, I think is pretty cool.
How are you finding new artists? Are they coming to you, or are you reaching out to them?
Well, I get like hundreds of demos a day, so I'm always trying to find new ones, and then just scouring the internet and seeing like who's popping and what's new and what's fresh and what's unique. So to be able to put on other artists, I think is really cool.
Now, you didn't necessarily start your career as a DJ. Somebody told me you were a CPA. Is that true?
Yeah, so I worked for Ernst & Young for a couple of years.
Okay. All right.
Was always moonlighting as a DJ. I would come into the office pretty sleep deprived, and they're like, what did you do all night? And I had to kind of hide the double life a little bit. Yeah. So eventually I was able to go full-time with the DJing, thank God.
What was that transition like? I mean, you were just making enough money where you thought it was sustainable as a business, as a profession?
Yeah, so the goal was to save up enough money so I can go full-time for at least 6 months. And I knew that if I went full-time as DJ for 6 months and I ran out of money, I could always go back to the accounting world. And I still had my CPA, of course. But luckily, the music was able to take off, and I was able to kind of build my own business out of it.
Well, that's what I'm curious about, is how much that background in finance actually helped you build out a business. And when we talk about DJs today, I mean, I'm from a generation where, you know, the business of DJing was a lot smaller, and now it's a big business.
Oh, it's huge, especially with the touring and everything, and then the costs are pretty low as well because I'm not touring with the full band. It's just me and my USB, and all the venues already have the CDJs and all the equipment set up. So, but to be able to wisely invest my money and not kind of just spend it all, I think was, and then be able to invest in a team as well too. So, I mean, just with the record label, I have a label manager, you know, radio pluggers, marketing, you know, managers I work with as well, agents. So it's a whole business. So I think having that background knowledge really helped me take my career to the next level.
Where do you put your personal money right now in terms of investing for the long term? Are you just putting that back into your own business, or are you diversifying across different assets? What?
So I purchased a condo in Miami that I live in right now, but I don't consider that like as a financial asset. But I just you know, invest in stocks. I got financial advisors who I very much trust because it's very hard when I'm on the road every single day to keep up with the markets. And we just do a monthly call so I can stay in the loop. But pretty much just traditional assets.
And you're on the road a lot. I mean, you're not really sitting in the office on a day-to-day basis like we are here. So how do you manage that, though? I mean, you are managing a company, yet you are probably always in a different city or even a different country than where the people you're working with are.
It's you think with the DJ lifestyle, it's a lot of fun parties and all that nonstop, but to be honest, it's a lot of Zoom calls. It's 5+ a day at least. So because we're all over the road at once. I mean, the managers I work with, they're based out in Phoenix, Toronto. Agents are in LA, New York. The label's LA. Then half the label is out in London as well too, and that's where I do most of my songwriting. So it's a very worldwide business, but I think that means the business keeps going 24/7, which is good.
Do you see that business expanding beyond just recorded music and live shows?
Yes, but that is kind of the bread and butter, and especially being a fully independent touring business, I think it is the main revenue driver. But and then the merch business is doing great right now as well too. So
you mentioned the economics of it, obviously being a solo act, a solo DJ, if you will. Obviously, you don't have the same carrying costs of taking a full band with you. But there's still got to be a lot that goes into that. And I am curious about the economics of the business. I mean, when we talk about concerts and the success of concert tours, everyone talks about the Taylor Swifts or Beyoncés. Of course they're going to make money because they're Taylor Swift, Beyonce. For those who aren't at that echelon, you know, maybe a couple tiers down, do the economics still work for those types of people?
I think so, because I mean, when I was touring just clubs, for example, that was just me showing up, playing, leaving, you just collect the check, and then if you can travel responsibly and not do first class everywhere, or, you know, 5-star hotels, you can make a good living. But now, Yeah, what's tough is that the production costs are on me. Mm-hmm. So, I mean, this first year festival, we're not making any money, but it's investment in the brand and the business, and I'm trying to, take this festival globally. Mm-hmm. So I also have the shows, like I said, with Vegas and stuff where I can just show up and play, and that's when the margins are very good.
The margins are very good. And as far as like the fan experience and I guess more the stickiness of your customers, for lack of a better phrase here, you have that? Is that driven by your personality or is it driven by marketing? What?
The fans are driven by a combination of things. I think it's first and foremost is the music, and they got to enjoy the music and love the music, which is why I put a lot of time and effort into songwriting, creating catchy songs. But I think also being 100% authentic online and really putting myself out there so they feel like they know the person behind it all. It's definitely a balance of it all. But I used to be very protective of doing videos of myself out there. Like I would never do something like this, which is awesome. Yeah. But now I think it's really good to put myself out there.
That was John Summit, DJ, producer, and founder of Experts Only, in conversation with Romaine Bostick.
All right, we do want to get you some breaking news right now and go down to Washington. The President of the United States speaking in the Oval Office, answering a wide variety of questions. He did weigh in on the call earlier today with his Chinese counterpart and specifically on the TikTok deal. In Trump's words, he says that Xi has approved the TikTok deal and he says that he looks forward to getting it closed. He also talks about the potential for a government shutdown and says, quote, "We could end up with a government shutdown." Let's listen in to what else he has to say.
In a short while, so I'll let you know about it tonight or tomorrow.
What's your take in general?
Well, I don't love it. I don't love it when that happens. It could be big trouble, but I'll let you know later. They're going to brief me in about an hour.
And a follow-up on Charlie Kirk. There's been a lot of talk about free speech this week. Do you see a difference between cancel culture and consequence culture?
I mean, your question's a little trick question. I'm a very strong person for free speech. At the same time, when you have networks where I won an election, like in counties, I guess it's 2,600 to 525. That's called landslide times 2. When you have that level.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Amy Morris. The economy grew at a revised 3.8% annualized pace in the second quarter, stronger than previously reported. This is the fastest pace of growth in nearly 2 years. Forecasters expect activity to pick up somewhat in 2026, in part because of lower interest rates. But despite the strong data, stocks dropped. We check those markets for you all day long here at Bloomberg. The S&P 500 down 0.3%, NASDAQ down 0.2%. 0.5%. The Dow is little changed on the downside. The 10-year Treasury yield at 4.19% and the 2-year yield at 3.65%. The White House Budget Office is telling agencies to prepare plans for mass firings if the government shuts down next week. That directive came in a memo released last night, raising the political and economic stakes. We get more with Bloomberg News editor Alexander Pearson.
Previously, non-essential workers usually would get furloughed in this kind of situation and then return and get back pay. But this memo from the Office of Management and Budget, which was sent out yesterday to federal agencies, actually asked for plans to fire those non-essential workers, or at least some of them that are not aligned with Trump administration priorities.
Bloomberg's Alexander Pearson. And lawmakers are currently at an impasse on how to fund the government after the end of September. And Representative Hakeem Jeffries thinks Democrats are strongly positioned in a shutdown fight, especially with health care at the center of the argument. Jeffries tells Bloomberg that the dispute will continue into the campaign for the House next year, requiring what he calls ongoing and unrelenting pushback until the midterm elections. Fed Governor Stephen Miron is making the case for aggressive interest rate cuts to get ahead of potential damage to the economy, telling Bloomberg Surveillance there isn't that much difference between his projections and projections of other committee members.
Obviously, there's a divergence between my projection for appropriate policy for 2025 versus where the weight of everyone else's is. But if you look at next year and the year after, there's not really that much daylight between all the rest of the dots and myself and following year. So it's really just about the speed with which we come down to what's closer to neutral.
And Myron adds monetary policy is just one driver of financial conditions.
People in financial markets tend to focus a lot on monetary policy because interest rates are huge tradable instruments, right? But there's so much more that goes into determining economic growth and the state of the economy and inflation and employment than monetary policy. And I think that attributing all changes in financial assets to monetary policy can be a mistake.
Fed Governor Stephen Miron is calling for a series of 50 basis point moves before the end of this year. Catch our full conversation with Fed Governor Stephen Miron on the Bloomberg Podcasts page on YouTube. Kansas City Fed President Jeff Schmidt signaled the U.S. Central Bank may not need to lower interest rates again soon, citing the need to keep bringing down inflation. He told an event in Dallas that he views the current stance of policy as only slightly restrictive, which he believes is the right place to be. Chicago Fed President Austin Goolsbee says interest rates could come down further if economic data show inflation is on track to reach the central bank's target and the labor market remains steady.
If we get data that show we're on the path to maintain stable full employment and inflation is likely to be coming back down to 2%, I think rates can go down a fair bit more.
Goolsbee told an event in Grand Rapids, Michigan, that he is uneasy with cutting too much too fast until the Fed is sure that employment and inflation are nearing their targets. And Board Vice Chair Michelle Bowman says inflation is close enough to the central bank's target to justify more interest rate cuts because she says the job market is now weakening.
As we're seeing some fragility emerging or persisting in the labor market over the past few months, we're also seeing that inflation has hovered relatively close to our mandate, especially when you take out the effects of trade policies and tariffs. I think we're within range of what our mandate is, close to 2%.
Bowman spoke at an event at Georgetown University. Amazon has agreed to pay $2.5 billion in penalties and refunds and change its process for how to cancel its Prime subscription to settle a lawsuit by the Federal Trade Commission. The company will pay $1 billion in civil penalties and will refund $1.5 billion to customers to resolve allegations that it misled millions of customers into signing up for Prime and then making it hard to cancel. Amazon shares now down about 1%. Starbucks shares are down more than 1%, that company planning to close stores and eliminate jobs in a $1 billion restructuring effort under CEO Brian Niccol. The company will drop its overall store count in the U.S. and Canada by 1% and then plans to grow the number of stores it operates and refurbish another 1,000 restaurants. German Chancellor Friedrich Merz supports a European Union plan to leverage frozen Russian assets to provide Ukraine with an interest-free loan of nearly €140 billion or $164 billion to bolster its defense. Merz penned an op-ed in the Financial Times saying that the loan would only be repaid when Russia compensates Ukraine for the damage it caused during the war. Health and Human Services Secretary Robert F. Kennedy Jr. has opened an investigation into the safety of the abortion pill mifepristone. This comes as conservatives have urged the FDA and HHS to re-examine the risk mitigation strategy of the pill, citing concerns over its safety. The New England Patriots have reportedly reached a deal to sell an 8% stake in the franchise. Sportico reports 6th Street is buying 3% and Metropolis will own 5%. The Kraft family will still own more than 90% of that franchise. It's news when you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversations with the people who shape markets, investing, and business. CEOs, fund managers, billionaires, Nobel laureates, traders, analysts, economists, everybody that affects what's going on in the market. Whether you own stocks, bonds, real estate, commodities, crypto, you really need to hear these conversations. Sometimes it's behaviorists like Dick Thaler or Bob Schiller. Sometimes it's fund managers like Peter Lynch, Bill Miller, Ray Dalio. Sometimes it's authors, Michael Lewis, author of The Big Short and Moneyball. Regardless of the conversation, these are the folks that move markets each week. That's the Masters in Business podcast with me, Barry Ritholtz. Listen on Apple, Spotify, or wherever you get your podcasts.
I'm Jorge Ramos.
And I'm Paola Ramos.
Together we're launching The Moment, a new podcast about what it means to live through a time as uncertain as this one.
We sit down with politicians, artists, and activists to bring you depth and analysis from a unique Latino perspective.
The Moment is a space for the conversations we've been having as father and daughter for years.
Listen to The Moment with Jorge Ramos and Paola Ramos on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
Football is back. That's right. The new NFL season is here, and you should be listening to NFL Daily as we march along to Super Bowl 60. It's in the name, NFL Daily, so you'll have fresh content in your feed all season long. Join me, Greg Rosenthal, and an all-star cast of co-hosts for previews and recaps of every single game. NFL Daily will keep you up to date with everything you need to know so you can sound smarter than all your friends. Listen to NFL Daily on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
Toyota, the official automotive partner of the NFL. Visit toyota.com/NFL now to learn more.
America is changing, and so is the world.
But what's happening in America isn't just a cause of global upheaval. It's also a symptom of disruption that's happening everywhere.
I'm Asma Khalid in Washington, D.C.
I'm Tristan Redman in London, and this is The Global Story.
Every weekday, we'll bring you a story from this intersection where the world and America meet.
Listen on bbc.com or wherever you get your podcasts.
Bloomberg Audio Studios. Podcasts, radio, news.
This series features conversations about pregnancy complications and loss. Please take care while listening. By the beginning of 2022, Kindbody was riding high. It had opened 13 clinics in 10 cities. And then, in February, the company announced a plan that would double its size. Kindbody said it would acquire a larger competitor, a fertility chain called Vios Fertility Institute. Unlike the venture capital and corporate world that Kindbody's founder Gina Bartesi came from, Vios was more of a family business. It was founded in 2015 by a doctor named Angie Beltsos.
Angie is unique. She is extraordinarily talented as a physician, and she is even more talented as a clinical leader, just as a leader in general.
That's Gina talking to Griffin Jones, host of the Inside Reproductive Health podcast back in 2022.
She knows a tremendous amount about business, about productivity, about margin.
With Vios, Kindbody immediately doubled its number of clinics from 13 to 26. And Gina wasn't done. She had her sights set on doubling the number of clinics again.
But we're opening Seattle, we're opening Dallas, Houston, Orange County, Miami, Charlotte. We're opening Washington, D.C. next week. Our plan calls for 50 locations within the next 2 years.
In one of their first appearances as a new company, executives from Vios and Kindbody rang the bell at the New York Stock Exchange. That summer, doctors and executives from the two fertility companies gathered for a retreat in Chicago to kick off this new chapter. At the front of the room was Gina, selling a vision of the future. A former marketing executive from Kindbody remembers that day.
We're coming together. Vios and Kindbody, we're all on board.
We are not using her real name. She, and others you'll hear from in this episode, asked for anonymity because Kindbody has threatened legal action against employees they believed were talking to journalists. A voice actor is reading what she told me.
Here's where our focus is. Here's a motivator for the team. I mean, Gina knows. She knows how to command a room and excite a room. And it was really just focused on, here's the growth. Here's how we're going to do it. And we're all going to be so rich at the end of this journey.
Gina Bartesi declined to comment for this series. A spokeswoman said this was because of, quote, multiple factual inaccuracies, as well as continued biased reporting given Bloomberg's lack of context provided to readers regarding the fertility industry, Kindbody, and her role as an experienced leader in the field. Asked to identify specific inaccuracies, the spokeswoman declined to comment. Part of the Vios deal was that after the acquisition, Gina would step back as CEO. She would stay on as chairman of the board, but would hand over the reins of day-to-day operations in an effort to make room for the Vios executives. Gina knew a lot about employee benefits, egg freezing, and how to raise money. But the next phase of growth needed leaders who knew how to grow multiple IVF clinics at once. And Gina saw the founder of Vios, Angie Beltsos, as the person who could do that. Here's Gina again on the Inside Reproductive Health podcast.
Now, I will tell you, Angie has upped the game. A lot of doctors I talk to are very comfortable doing 150 cases a year. And they say that, listen, I do 10 to 12 cases a month. I sell an IVF cycle for $25,000, and that's my model.
With Angie's help, Gina envisioned higher volumes of IVF.
You look at the physician productivity of her doctors, and it's extraordinary. One of her lead physicians did more than 1,000 cases last year. That's extraordinary.
Kindbody's leaders also had their sights set on an initial public offering, the kind of move that can bring a big payout for those who got into the company early.
They use the rocket ship analogy a lot.
We are on a rocket ship to the moon.
And then he always talked about the rocket ship. We're going to blast to the moon and help everyone's fertility.
We're going to get yellow planes. Everyone's going to have a yellow plane. Who's going to buy the first plane?
Amid all the talk of private jets and worldwide expansion, the acquisition had saddled Kindbody with more financial pressure. And it came at a time when the startup was already struggling with operational issues. From Bloomberg and iHeart Podcasts, this is IVF Disrupted, the Kindbody story. I'm Jackie Davalos.
I'm Jorge Ramos.
And I'm Paola Ramos.
Together we're launching The Moment, a new podcast about what it means to live through a time as uncertain as this one.
We sit down with politicians.
I would be the first immigrant mayor in generations, but 40% of New Yorkers were born outside of this country.
Artists and activists. Do you ever feel demoralized?
I might personally lose hope. This individual might lose the faith, but there's an institution that doesn't lose faith. And that's what I believed in.
To bring you depth and analysis from a unique Latino perspective.
There's not a single day that Paola and I don't call or text each other, sharing news and thoughts about what's happening in the country. This new podcast will be a way to make that ongoing intergenerational conversation public.
Listen to The Moment with Jorge Ramos and Paola Ramos as part of the My Cultura podcast network on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
This is a tape recorded statement. The person being interviewed is Krista Gale Pike. This is in regards to the death of a choline slimmer.
She started going off on me, but I hit her. I just hit her and hit her and hit her and hit her.
On a cold January day in 1995, 18-year-old Krista Pike killed 19-year-old Colleen Slemmer in the woods of Knoxville, Tennessee. Since her conviction, Krista has been sitting on death row.
The state has asked for an execution date for Krista.
We let people languish in prison for decades, raising questions about who we consider fundamentally unrestorable. How does someone prove that they deserve to live?
We are starting the recording now. Please state your first and last name.
Krista Pike.
Listen to Unrestorable Season 2, Proof of Life, on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
Hey, this is Matt Jones.
I'm Drew Franklin.
And this is NFL Cover Zero.
We're just here to try to give you an NFL perspective a little bit different. Did you see the Colts pretzel? That was my other big takeaway from that game.
What was that? Oh, my. We think NFL coverage should be informative and entertaining. And twice a week, that is exactly what you're going to get. Listen to NFL Cover Zero with Matt Jones and Drew Franklin on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
Toyota, the official automotive partner of the NFL. Visit toyota.com/NFL now to learn more.
That spring, the two companies came together. Employees were told it was the start of Kindbody's most exciting chapter yet. One of the executives who came over from BIOS, who we're calling Emily, remembers the promises made. An actor is reading what she told me.
It was a huge part of the deal, was that people wouldn't lose their jobs because the two companies came together, that there was more than enough work to go around. If we had redundant positions, we were growing. So let's figure out how to reallocate someone, train someone on something new.
But the deal, and Kindbody's aggressive growth plans that followed it, were based on overly rosy assumptions, according to what I heard from current and former executives. The company didn't disclose how much it paid to buy BIOS, but former executives tell me it was substantial. Kindbody had used up a lot of its cash, and the expectation was that the deal would result in more people coming through the doors. The BIOS locations were already up and running, and they were quickly remodeled to fit the Kindbody aesthetic. These clinics were also profitable, something Kindbody couldn't say about many of its other clinics. According to internal documents I saw, Atlanta, Austin, and some California locations were burning through cash. This wasn't part of the plan. When they'd originally opened, Kindbody had expected the retail-centric clinics would attract a flood of new people looking for fertility services. They also expected deals with employers to translate into a steady flow of business. But former employees and executives told me it was more of a trickle. Part of the reason is because people just weren't using their IVF benefit at the rate Kindbody had projected. Another challenge was that IVF patients take time to cultivate, to build trust with. Even so, the company continued to spend and expand. They were banking on patient volume catching up. Here's Emily, the former BIOS employee again.
The honeymoonish period was probably maybe 9 months. We weren't getting IVF patients in the door. We weren't building the IVF volume to then grow and hit the projections that we had. If you work backwards, the numbers were created on bad math. So yes, of course, you have to make hard decisions if you're not hitting your projections.
By the fall of 2022, layoffs began. And according to Emily, they were done in waves.
The first round of layoffs just laid a horrific foundation for profound anxiety. There were often rolling layoffs. There might have been an initial batch, and then everyone felt like, okay, I'm safe. And then 2, 3, 4 weeks later, others would trickle out. And that hit to productivity cannot be understated. People were not able to do their best work ever again. Really. There was always this concern that they would be next.
According to internal documents, the cuts hit hardest among those working directly with patients, medical assistants, billing staff, and a role Kindbody called financial navigators. Financial navigators worked remotely, handling patients across all Kindbody clinics. Here's one of them.
So I feel like the financial navigator is probably next to the doctor. We will basically come in, we will go over your benefits, we will verify anything, we will be the person who gets any authorizations if you have insurance. We will then counsel you on anything that's going to come out of pocket for you. If you didn't pay, then you can't start your cycle. We're essentially the last person you talk to before you start treatment.
For patients, financial navigators were more than just number crunchers. They were guides through a complex and costly journey where a single cycle of IVF could cost as much as $16,000. But as the layoffs continued, the remaining navigators found themselves overwhelmed. Here's another.
There was probably 10 or 12 people on our team. And then at one point, there was 3 or 4 of us. And we were in charge of all of the markets, all of the offices. And then it was just like, here's more work, and here's more work, and here's more work, to the point where we were on the phone with each other and on meetings with each other, just breaking down crying.
We had to do the phone calls, we had to collect the money, we had to check the cycles, the schedules, like we had to do all of it, and we had no help. I was drowning.
We were like, this rocket ship is like nosediving right now. And if we're not going to jump off right now, we're all doomed. There's no one on this rocket ship that is going to survive.
The 2 financial navigators said they worried the mounting workload would open them up to mistakes.
People are going to make errors. Things are going to happen. Mistakes are going to happen. You could quote the wrong amount. You could send the wrong patient's financial estimate to the wrong patient. You could attach the wrong thing. Like, we have to double check and triple check everything. And if you didn't send the authorization with the right codes, you'd have to go and start the whole process again, which is a 2-week process, which is then now putting off the patient's treatment.
With IVF, timing is everything. You're trying to sync up multiple biological processes that normally happen naturally over weeks, from getting the eggs to mature at just the right time to ensuring the uterine lining is perfectly ready for implantation. If your timing is off, even by a day or 2, the whole cycle could be unsuccessful because embryos need exactly the right conditions at exactly the right moment to have the best chance of developing into a healthy pregnancy.
But if you made a mistake, it was the worst thing in the entire world.
Patients' frustrations with Kindbody started showing up in negative reviews online. The company was now being criticized for exactly what it claimed to be fixing: confusing bills, hidden costs, and a lack of transparency. Patients described getting unexpected charges weeks after procedures, insurance claims that were filed incorrectly, and authorizations that arrived too late. These weren't just administrative headaches. For patients already stretching their finances to afford fertility treatment, these mistakes could mean the difference between starting a cycle or having to wait months to save up again. In the C-suite, some executives were losing confidence. Kindbody's high-profile CFO had quit after less than a year on the job. And then the chief scientific officer left the company. I reached out to both of them, and neither wanted to speak to me for this podcast because they signed non-disclosure agreements. In written comments, Kindbody told me it hired more customer service staff and made significant improvements to its billing processes. It disputed that the former chief scientific officer lost confidence in the organization and said executives leave companies for various, often innocuous reasons. For doctors and lab staff, the chief scientific officer leaving was more than just another executive departure. He had been the guardian of their scientific protocols, the person ensuring that the complex, precise work of creating and handling embryos was done right. Here's Emily, the former Vios executive again.
I think you can see some of the personnel changes in the chief scientific officer role and a lot of movement in terms of who was in charge of labs. And people had to step in interim fashions. And people left. Physicians were concerned. You can't just go grab a benchtop scientist. It takes years to train a skilled embryologist. And if you treat them as disposable people, the word spreads.
The pressure to do more with less was already trickling from the corporate offices all the way down to the labs. And in Atlanta, another preventable mistake would change a woman's life forever. That's coming up.
I'm Jorge Ramos.
And I'm Paola Ramos.
Together we're launching The Moment, a new podcast about what it means to live through a time as uncertain as this one.
We sit down with politicians.
I would be the first immigrant mayor in generations, but 40% of New Yorkers were born outside of this country.
Artists and activists. Do you ever feel demoralized?
I might personally lose hope. This individual might lose the faith, but there's an institution that doesn't lose faith. And that's what I've believed in.
To bring you depth and analysis from a unique Latino perspective.
There's not a single day that Paola and I don't call or text each other, sharing news and thoughts about what's happening in the country. This new podcast will be a way to make that ongoing intergenerational conversation public.
Listen to The Moment with Jorge Ramos and Paola Ramos as part of the My Cultura podcast network on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
This is a tape-recorded statement. The person being interviewed is Krista Gale Pike. This is in regards to the death of a choline slimmer.
She started going off on me, but I hit her. I just hit her and hit her and hit her and hit her.
On a cold January day in 1995, 18-year-old Krista Pike killed 19-year-old Colleen Slemmer in the woods of Knoxville, Tennessee. Since her conviction, Krista has been sitting on death row.
The state has asked for an execution date for Krista.
We let people languish in prison for decades, raising questions about who we consider fundamentally unrestorable. How does someone prove that they deserve to live?
We are starting the recording now. Please state your first and last name.
Krista Pike.
Listen to Unrestorable Season 2, Proof of Life, on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
Hey, this is Matt Jones.
I'm Drew Franklin.
And this is NFL Cover Zero. We're just here to try to give you an NFL perspective a little bit different.
Did you see the Colts pretzel? That was my other big takeaway from that game.
What was that? Oh, my. We think NFL coverage should be informative and entertaining. And twice a week, that is exactly what you're going to get. Listen to NFL Cover Zero with Matt Jones and Drew Franklin on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
Toyota, the official automotive partner of the NFL. Visit toyota.com/NFL now to learn more.
By the time Vernita Pearsall started at Kind Body's Atlanta clinic in the fall of 2022, the cracks were starting to show.
It seemed as if there was a revolving door when it came to employees in the Atlanta office.
Vernita had seen her share of medical practices, but nothing quite like this. While other Kind Body locations were also struggling, she says Atlanta was in free fall.
At one point, a lot of the executives came to the office in Atlanta due to things occurring with so much turnaround.
I saw an internal presentation that backed up what Vernita was seeing. The Atlanta clinic had a staggering 64% turnover rate among its clinical staff. To handle the volume, staff was told to move patients through their appointments even faster.
It was that feeling of a conveyor belt. going in, going out, next, going in, going out, next. And it looked aesthetically like a soothing place. But in all actuality, that was not the case. It was pretty much, let's get them in, let's get them out.
Former employees told me staff inside the embryology lab, which required the most precise and time-intensive work, was burned out. They struggled to keep up with the patient load that kept growing even as their team kept shrinking.
A lot of times they were there before I started, and they were there after I would go home, and they had to work many weekends, many holidays.
In text messages shared with me, one embryologist in Atlanta told a fellow staffer, quote, "I have to be coach, quarterback, and wide receiver. We do not have the space, equipment, and people for this level of volume. It's dangerous and not sustainable." I spoke to 5 former embryologists who worked in the Atlanta clinic. They all described the same crushing workload, the constant turnover, the feeling that it was only a matter of time before something went wrong. And then, one day in March of 2023, it did. Among the dozens of patient reviews and complaints I encountered while reporting this story, one stood out. A Google review that described a disappointing experience at the Atlanta clinic. It was a devastating error, one that would reveal just how dangerous Kindbody's staffing crisis had become. Here's Vernita reading the review.
She put, "I recently had a very disappointing experience with Kindbody Fertility Clinic that I cannot in good conscience recommend. Unfortunately, they gave me the wrong measurement of medication during my treatment, which led to a lot of complications and stress. Despite all the issues, we were able to proceed with 1 embryo for transfer." Wow. On the day of the transfer, however, things went from bad to worse. The clinic staff were unable to identify, which embryo was ours because they had some unlabeled embryos in their storage. This was extremely frustrating and concerning and left us feeling very uncertain about the entire process.
I spoke to 4 employees who were at the Atlanta location the day this review is about. None would speak on the record, fearing legal retaliation from Kindbody. But the patient herself agreed to talk with me when I traveled to Atlanta to investigate what happened. She asked not to be identified, explaining that as an immigrant in a tight-knit religious community, even sharing her story could have serious consequences. A voice actor will read what she told me.
"We are religious people, and our community will avoid us if they hear about this."
I'll call her Ayana. She was 39 years old when she walked into Kindbody's Atlanta clinic that March morning, carrying with her 3 years of hope and heartbreak. She'd been through multiple egg retrievals, most unsuccessful. Out of the few eggs they'd managed to retrieve, only 1 had developed into a viable embryo. She was there that day for her transfer, the culmination of her fertility journey.
That was our only opportunity.
Instead, she and her husband spent 3 hours in a waiting room before learning what happened.
On the transfer date, when we reached there at 12, midday, and they told us about 3 o'clock, they were I don't know how to say it. They were messed up. They called everyone and put us in one room and I don't know, they hold us more than 3 hours.
When the doctor finally came in to explain, Ayana could barely process the words.
They just stand in front of me. I was crying. They told us they don't have the embryo.
Their 1 embryo, their only chance at having a child, had been mislabeled. The clinic had an embryo, but they said they couldn't be sure it was Ayana's. The only way to confirm would be through genetic testing, a procedure that carried its own risks. Many patients choose to genetically test embryos before a transfer to make sure they have the correct number of chromosomes. It helps detect abnormalities that can result in serious genetic conditions. That process, though, has its own risks. It involves taking a little piece of the embryo and can sometimes damage it. Some doctors recommend that patients who don't have a lot of embryos to work with skip such testing. Ayana and her husband had opted not to do genetic testing before, and they didn't want to do it now. Because of her religious beliefs, Ayana said she would have carried the baby even if they had detected an abnormality.
But they told us we have one option, which is they need to test it to know if it is ours or not. The situation pushed us to do that.
Despite her misgivings, she went ahead and got the test. A kind-body doctor called and confirmed the embryo was indeed theirs, but revealed something else, an abnormality. Ayana said the doctor didn't tell her what the abnormality was and didn't explain the results. The doctor only told her that the embryo had to be discarded. Normally, when an embryo is genetically tested, patients get a copy of the report and a doctor or a counselor walks a patient through what it means. But Ayana told me she and her husband weren't given any paperwork, and no one explained what the test had revealed about their last embryo. Many patients who go through IVF have a hard time knowing what to ask in these tense moments. For Ayana, she says the fact that English was not her first language made it even more difficult. Discarding an embryo was a big decision and went against Ayana's religious principles. She said she felt pushed into a decision she didn't want to make, but she also felt she didn't have any information to be able to push back. The doctor was apologetic and offered a free round of IVF.
She told me if you work with us, if you continue with us, we offer you another cycle. We will take care of everything.
I talked to Kindbody when I first learned of this incident. A spokeswoman said that Kindbody bought a tracking system to try to minimize human errors. It's called electronic witnessing, and it gives each patient's eggs, sperm, and embryos unique barcodes that must be scanned at every step. The software tracks who handles the materials and when, requiring verification before allowing procedures to move forward. A Kindbody spokeswoman said at the time that this technology was used in 90% of its labs, and she says that now it's used in all of them. But former employees told me the problem was that they weren't properly trained on how to use it, something that Kindbody disputes. My story about lab errors at Kindbody was published in October of 2023. 2 months after I spoke with Ayana. In it, I wrote about what happened to Ayana, to Dina and B, and to other patients. I'd learned of multiple incidents of embryos being mislabeled, lost, or accidentally destroyed at 4 different Kindbody clinics. After my article was published, Gina wrote a blog post in response. It said, in part, quote, "I'm proud that our doctors are candid and tell the patient the truth, rather than hide any mistake made by a human in the lab. We also biopsied the embryo to ensure its genetic material, and it came back aneuploidy, which meant it was abnormal and would likely have not have been transferred anyway. So we didn't have to be honest, but we were. The outcome would have been the same, an unsuccessful IVF cycle, which unfortunately happens about 1/3 of the time in even the best IVF clinics, including our own." But Ayana told me she felt robbed of the opportunity of at least trying to transfer the embryo as planned. When we spoke, about 6 months after the error was discovered, she said it didn't matter if it had been abnormal, that God had gifted them that one embryo, and it was their choice, their chance to take. On top of that, she had doubts about whether Kindbody was even telling the truth about the abnormality. She kept thinking, why had they jumped to discard the embryo so quickly? Why wasn't she at least given the chance to transfer? And unlike other patients who might have sought legal recourse, she said she felt trapped by her circumstances.
The situation, if it was different people, like Americans, it was different. I think if it happened on you, for example, I think it was like not this. Maybe you sue them. you do something. But I'm a foreigner and I'm religious, so my situation doesn't allow me to do anything.
Ayana opted to do the free cycle Kindbody offered, but it didn't yield any eggs. By that point, Ayana was 40. After 6 IVF cycles and tens of thousands of dollars spent, she and her husband started looking into adoption instead. It's really hard to get a complete picture of what kind of errors may be happening in U.S. fertility clinics, whether they're at Kindbody or anyone else's. It's not an easy question to answer because, unlike other types of medical facilities, there is no regulation requiring fertility clinics to track lost, mishandled, or destroyed embryos, let alone report them to any public database. There's the Clinical Laboratory Improvement Amendments, also known as CLIA. It's a federal statute that regulates testing and oversees some aspects of an IVF clinic, like blood and semen testing. But crucially, CLIA does not oversee the embryology lab, where the most sensitive material is handled. To fill the gap, nonprofits and industry groups have stepped in. The big one is CAP, also known as the College of American Pathologists. CAP issues guidelines, like how many people should be on staff or the optimal temperature for the lab. Clinics can get CAP accreditation if they adopt these measures, and getting the stamp of approval lends credibility. But that's really it. CAP cannot shut down a clinic if it finds it's not in compliance. In short, CAP has no teeth.
There are guidelines, but there are no requirements.
This is Eva Schenkman again. She's the embryologist who interviewed with Kindbody back when the company was just starting out. She runs her own embryology school that trains young scientists who want to go into IVF. And she consults for clinics that want to open up labs of their own.
Just like you can go to a Department of Health website and look up physicians' records, you can see how often they have malpractice claims. You don't have that for the laboratory. You don't know who that wizard is behind the curtain. Is it somebody, who's been involved in several major mix-up cases? And even if they're doing something egregious, there's no board that steps in and investigates. Maybe this person shouldn't be working in the lab anymore. Maybe we can do some retraining so that this mistake doesn't happen again. And that's the part that really started to make me angry.
There is no requirement for fertility clinics to report incidents caused by human error or other preventable mistakes. By contrast, Eva points out that some countries in Europe have regulatory agencies that track mistakes.
One of my colleagues there in Ireland sent me a text message a couple weeks ago when we were talking about some of the issues here. She's like, "You're really telling me that you don't have to report if there's a serious error in the lab? Like there's no proactive reporting where you get somebody then comes in and investigates you?" I said, "No, there's not." And that just blows their mind. It was really shocking to them because what prevents you from making that error once a year, twice a year, every other year? The vast majority of clinics do a very good job in providing, great care to patients. But also, how do we protect against the clinics that aren't following the rules or following the guidelines?
Many of these errors are never known to people trying to decide which fertility clinic to go to. You can't Google their error rates. And looking up a clinic's history of lawsuits may not be that revealing. Many errors never make it into the public record because patients sign arbitration agreements that prohibit them from speaking publicly about what happened to them.
And what's that about? It's because fertility clinics operate in such a highly competitive space where a clinic never wants to be known as that entity that has dropped somebody's eggs or embryos on the ground.
Adam Wolf is a partner at Pifer Wolf, a law firm that specializes in fertility cases. Adam declined to say whether he had cases with Kindbody, but he did talk about the kind of calls he gets all the time from patients of fertility clinics.
We get calls from people who are just devastated by the results, usually the failures of the fertility work from their fertility clinic. And sometimes that is just the natural byproduct of fertility work. It's not always successful, even under the best of circumstances. But in many of the occasions where our potential clients call us, what we uncover is that the failure of a particular IVF cycle or other work in a fertility clinic is the result of misconduct or certain types of
Adam has seen some of the worst mistakes in this field happen at all sorts of clinics. One of his clients discovered after she gave birth that the baby boy she had carried wasn't hers. And she was devastated when she had to turn the baby over to his biological parents. Another one of his clients alleged that their clinic let 7 of their embryos dry out, destroying all of them. The couple sued the clinic, but then reached a settlement out of court. Adam says the majority of incidents like these never become public.
Because we end up settling those cases with a confidentiality agreement that prohibits anybody from talking about that case or those errors publicly. Now, that makes a lot of sense for the fertility clinic, which wants to hide its errors, but it creates a big public problem, which is that the public doesn't know about the vast majority of errors that we have seen in fertility clinics and that have caused our clients to suffer.
Coming up on IVF Disrupted, the Kindbody story. With Kindbody's cash reserves dwindling, the question arises, do its patients really need everything it's selling?
At your white coat ceremony, which is the first thing you participate in before you start med school, you take that oath. And that oath is, first, do no harm.
My good friend who went through another clinic, she kept kind of mentioning, like, because I was like, so did you pay for the extra, couple $100 for embryo glue? She was like, embryo glue? Like, I've never heard of embryo glue. And I was like, oh, like, we just paid $400 this round, for embryo glue.
I just went through 2 weeks of medications and traveled here and spent thousands of dollars for this procedure. And you're telling me I didn't need to do it?
I'm not a salesperson when it comes to medical care.
IVF Disrupted, the Kindbody story, is reported and hosted by me, Jackie Davalos. The series is produced by Sean Wen and Gilda DeCarli. Editing by Caitlin Kenny, Jeff Grocott, and Joshua Brustein. Blake Maples is our sound engineer. Voice acting in this episode was provided by Deanna Johnston, Tina Marie Murray, and Rosanna Pilcher. Fact-checking by Annika Robbins. Bloomberg's senior executive editor for technology is Tom Giles. Our head of podcasting is Sage Bauman. You can reach us at podcast@bloomberg.net. IVF Disrupted is a production of Bloomberg and iHeart Podcasts.
I'm Jorge Ramos.
And I'm Paula Ramos.
Together we're launching The Moment, a new podcast about what it means to live through a time as uncertain as this one.
We sit down with politicians, artists, and activists to bring you depth and analysis from a unique Latino perspective.
The Moment is a space for the conversations we've been having as father and daughter for years.
Listen to The Moment with Jorge Ramos and Paula Ramos on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
The NFL is rolling. That's right, and you should be listening to NFL Daily as we march along to Super Bowl 60. It's in the name, NFL Daily, so you'll have fresh content in your feed all season long. Join me, Greg Rosenthal, and an all-star cast of co-hosts for previews and recaps of every single game. NFL Daily will keep you up to date with everything you need to know so you can sound smarter than all your friends. Listen to NFL Daily on the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
We've got behind-the-scenes conversations with sports' greatest business people and athletes, from Serena Williams and Stephen A. Smith to Bill Belichick and Melody Hobson.
I got dangerous in seeing up arrows, up arrows.
Catch up on the interviews you've missed and listen to all new episodes every Thursday on Apple Podcasts, Spotify, YouTube, or wherever you get your podcasts.